4,000 employees, with CEO Jack Dorsey saying AI is changing the future of labor productivity, adding, "I don't think we're early to this realization. I think most companies are late." Within the next year, the majority of companies will make similar structural changes. Netflix dropping out of the bidding war for Warner Brothers Discovery, the move clearing the way for Paramount to clinch its deal for the Hollywood studio, pending regulatory approval, of course. Netflix saying the deal is no longer financially attractive after Paramount's latest $31 a share offer. And former President Bill Clinton will testify before Congress today about his relationship with the late convicted sex offender Jeffrey Epstein. His wife, former Secretary of State Hillary Clinton, denied any association with Epstein during an hours-long deposition yesterday. Clinton told reporters she is confident her husband knew nothing about the crimes. That's your Bloomberg Brief, John.
Yahara, thank you. Thanks for the update. Up next on the program, an exclusive conversation with the U.S. Undersecretary of Defense, Emil Michael, as the clock is ticking on the Pentagon's critical Anthropic deadline. That conversation up next from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
There's some component here that's AI-driven and efficiency-driven, but some component of just natural trimming of the portfolio of employees. They said AI, but it's not entirely AI, but you're going to see some of this across the board in other companies as well.
Some disagreement here. What was behind those big cuts to the labour force over at Block? That was Dan Dolev of Mizuho. In the equity market at the moment, we're declining by 0.7% on the S&P 500. Similar move on the Nasdaq, on the Russell. Underperformance down by more than 1 percentage point. Talk about the bond market. Yields lower across the curve, 10 sub 4%. This is important. We keep breaking lower. 397.73 on a 10-year this morning.
And this comes amid a Fed that really hasn't been particularly dovish, and a number of economic data points that haven't exactly pointed to some sort of rapid rate-cutting cycle. So is it just the economy, stupid? Are we looking at something that is disinflationary without job creation, which is a fear that a lot of people have been having?
We are trying to figure it out. AI in full focus this morning. The standoff between Anthropic and the Pentagon over military safeguards is ramping up. The tech giant facing a deadline today to accept conditions or be blacklisted. The Anthropic CEO, Dario Amodei, saying in a statement, quote, "These threats do not change our position. We cannot in good conscience accede to their request." The U.S. Undersecretary of Defense, Emil Michael, responding to the statement, calling Amodei a liar with a God complex. The Undersecretary joins us now for more. Undersecretary Michael, welcome to the program, sir. Calling someone a liar is pretty strong language. What's he lying about?
Well, what happened is we've been negotiating in good faith on the Department of War side for about 3 months, and we're working pretty diligently, and we sent over a proposal that we thought made a lot of concessions to the language that Anthropic wanted, and then, without any notice, they published an article where we thought we were getting close, saying that they were breaking off talks well before the deadline, which is generally not good partner-oriented practice, if you will.
So, Emil, this is what they're asking for as far as we understand. And let me share this with the audience. It doesn't want its technology used for surveillance of US citizens or for autonomous lethal strikes without a human in the loop. That's the ask. What were the concessions?
Yeah, the concessions are pretty simple. We agreed in writing to ensure that the Department of War was following all laws and regulations, including the National Security Act of 1947, the FISA Act, and all other applicable laws and regulations, because mass surveillance of Americans is already illegal. So we were offering to put all of that language and affirm that we were following all laws in the contract. When it comes to autonomous weapons, similarly, we said we'll follow all laws, including a DoD directive that's been in place for years that governs how we would use any such weapons. And then we affirmed that there would be human oversight over every kind of part of the development process or engagement process or use of autonomous weapons. And he didn't like the word, I guess, as appropriate at the end of that sentence. But we believe we conceded to all their substantive demands. So it was surprising that out of nowhere they'd cut off negotiations.
So it appears that your differences are actually minor. Would that be accurate?
Yeah, no, that's what was surprising, is usually if your differences are minor, you get in a room, you try to hash them out, and instead, without any notice, publishes something about his conscience, and then doesn't engage. And it was difficult to understand why, because we were working pretty diligently on this, and we were at the final stages of a few words here or there where we agreed to what they wanted, so in substance. So it was very surprising, given that we negotiate with hundreds of technology companies, and this is the only one we've ever had that behavior from.
Are you still weighing using the Defense Production Act to compel Anthropic to basically have to use its product, or potentially are you weighing still making it a supply chain risk, which we heard from Anthropic say that this is almost contradictory proposals?
They're two different things, and I think depending on how today goes, at 5 o'clock, the Secretary of War, Pete Hegseth, gets to make the decision on how to reply. I've maintained my openness to continue dialogue through that deadline, but they've seemed to have launched sort of a PR campaign that was planned well before these negotiations sort of restarted on Tuesday. So I don't know. Their behavior is frankly unpredictable. I'm not sure what to expect.
So do you plan, though, on having more talks today, or does a decision just need to be made by today?
I offered more talks. So long as they're in good faith, we're always open to talks, and we set a deadline, and we met the deadline, and up until that deadline, I'm open to more talks, and I told them so.
So what does happen at 5:01 today if there's no agreement between the DoD and Anthropic?
That's up to Secretary Hegseth. We have some courses of action that he's considering, and ultimately this comes down to the warfighter, right? It comes down to, for any AI system we might use, are we using it to protect our warfighters in the right way? Are we using it to sort of give them the best tools to be efficient and to be lethal when they have to be lethal? And that's the primary thing in Secretary Hegseth's head. And we told them that ultimately, at the end of the day, we follow the law, all laws, but we can't let any one company stand between us and the warfighter, because they don't make the rules. Congress makes the rules. The president signed them. We execute them, and we do so safely.
Well, speaking of the president, has he weighed in on this specifically? Has there been discussions with him and Secretary Hegseth and yourself as well?
This has all been internal to the Department of War so far.
Okay, and then when it comes to potentially the other AI negotiations underway, what is going on right now with XAI and to get Grok on classified networks?
Well, I think the smart approach, when I came in at the Department of War about 9 months ago and looked at what we were using AI for, and it was some pretty minimal use cases, and given the power of the technology and the potential power to do good for the U.S. military, both from an efficiency standpoint and a strength standpoint, I wanted to make sure we had a lot of options. So we went around and we've launched Google for unclassified networks. We've signed XAI for classified and non-classified networks. And we want to continue to provide options to all of our components here at DOW. And that's what we'll continue to do. And it's just smart to have more than one option so that we can see the strengths and weaknesses of each model and learn from them as the AI revolution begins here.
Undersecretary Michael, is lethal autonomy really so critical for future national security?
It is. I mean, if you think about it from a defense standpoint, whether it's a drone swarm that's coming at a military base, whether it's a hypersonic missile coming at the United States, where the reaction time against the sort of, how many weapons are coming at you, you want to be able to take them down potentially faster than a human could alone, if that's how it's done. And we're learning from the Russia-Ukraine war with the drone swarms and so on, and with the new weapons that have been developed all over the world that changed the name of war, the game of warfare, that we've got to respond and defend ourselves in any way we can. The question is, do you have a human on the loop to make sure that we're monitoring these systems? And that's what we proposed in writing, in language, that we always have human oversight over these things. But they're necessary given what's happening in the world.
Emil, clearly the technology these companies are producing is tremendously powerful. Yet you believe this individual is both a liar and has a God complex. How concerned should the American public be about individuals like this running companies like this, if that's what you believe this person is?
Yeah, I think there's some concern that, when you have leaders of some of these companies talking about unemploying 70 million Americans, the lawsuits they're under for sort of scraping content from content publishers and having billion-dollar lawsuits against them, using that content to make profits. And then really what's concerning is making their own policies that sort of could sit on top of democratic policies that are voted on by the people, passed by Congress, signed by the president. You do have to worry about, are they taking it too far? Are they trying to do and impose their own views on the American people in an undemocratic way? So I think those things are going to be things we're grappling with in society for the next several years as these companies get bigger and bigger.
We're looking forward to having a conversation with you, sir. Thanks for making time for us this morning. Emil Marker there, the Undersecretary of Defense. Up next on the program, the latest PPI data set to cross. We'll get reaction from Alejandro Grindel of Ned Davis Research from New York City. You're watching Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Session lows, a wild ride into month end. Equities down by 0.75% on the S&P. On the Nasdaq, a similar amount. On the Russell, negative 1.3% in the bond market. Yields down across the curve, down by more than 25 basis points on the month on 10s. A break of 4%, 397. Yields lower by 3 basis points on 2s. A break of 340, 339.94 on a 2-year yield. With your PPI data, Mike McKee drops by for more. Good morning, Mike.
Good morning, John. We come in hotter than anticipated with the PPI for final demand up 0.5%, the same as in December. The forecast was for a 0.3 rise. Take out food and energy, and we're up 0.8 after 0.7 last month. And take out trade to that, and you're up 0.3. That one's down just a little bit. Last month, we saw a big rise in trade services, and that is not happening this month. On a year-over-year basis, headline 2.9. Ex-food and energy is 3.6, and ex-food and energy trade 3.4. The core rate, the 3.6, is a significant increase over the 3.3% we saw last month, while the 2.9% headline down a tick on a, I guess, basis effect from last month. But these are all important, not just for the headline numbers, but because a lot of the PPI feeds into the PCE, which is, of course, the Fed's indicator. I'll look some of those up now while you're giving us the market reaction to all of this.
Mike McKee, thank you, sir. What do you do with that? An upside surprise on PPI. Yields were down. It's a break of 340 at the front end of the curve. We erased some of that move. We're back to 340. 10s were at about 397. We're back to about 398. Yields are still lower on the session. In the equity market, when the data dropped, so did the stock market. We're just about holding on to some of those levels. On the S&P, we're down by 0.9, down by almost 1% on the Nasdaq. Look, first look, just taking a step back, there are some members of the committee on the FOMC right now worried about inflation. It's why they've established, for some at least, a prolonged pause at the Federal Reserve. And if you're worried about a downturn in financial markets and hoping the Fed's going to step in and bail you out, with numbers like that, you're not going to get a hand from the Federal Reserve.
What's interesting to me is that the stock market responded more than the bond market because yields are still where they were. So it's not exactly underscoring any kind of acceleration in economic growth. I mean, sure, you had a little bit of a retracement of some of the downward move in yields, but still a bit into bonds, even as you have inflation coming in hotter than expected. So what exactly is going on here? What are people looking at if it isn't inflation and if it isn't necessarily the path of rate cuts by the Federal Reserve, even if the stock market is looking at just that?
Pure risk aversion at the moment, it seems, building over the past few weeks. Mike's going through the numbers for us. Upside surprise across the board here on PPI. Mike, you're digging into it. What do you see?
Well, a couple of the things that feed into PCE are up, of course. I don't have the exact way they will feed in terms of what they will mean, but portfolio management, which has been a problem, up 1.5%, and international airfares 4.3%. So some significant rises in some of the things that will feed into the PCE numbers. And given what we're seeing here on the headline, it pretty much guarantees that the January PCE numbers are going to come in somewhere around 3 or north of 3, and that's not going to give the Fed any kind of reassurance that inflation is going toward their target.
Mike McKee, thank you, sir. Stay close. Got to talk about OpenAI as well, because AI and the economy right now is basically the same thing. This headline crossed just moments ago. OpenAI saying Amazon will invest $50 billion, $50 billion. The initial investment, $15 billion. So OpenAI, big capital raise this year, big year for that company, getting some money.
Yeah, and expanding their pact by over $100 billion over 8 years, OpenAI. With respect to AWS, what's interesting to me is how OpenAI is trying to compete at the same time that you have Anthropic very much in the news these days. I just wonder how much of a battle it is and how much each of them is trying to jostle for a leg up. It's sort of like what goes on underneath the pile of bodies in a football playing field you don't actually want to know. It kind of feels like that right now.
$730 billion valuation. These valuations are huge.
To the point that you made with Savita Subramanian, it's really interesting. If they
Supply.
if they IPO this year, how much oxygen does that suck out of the room? Where does all the money come from? And what does that do to a public equity market that has actually been contracting over the past number of decades? All of a sudden, we're dealing with a pretty big expansion.
Getting some details from OpenAI as well on monthly active users, weekly active users, 900 million now. That's the latest number from them. So a big deal between Amazon and OpenAI. And to go back to your point, SpaceX, OpenAI, Anthropic, we're talking about something well north of $1 trillion, pushing $2 trillion from 3 companies, potentially all IPOing in the next 12 months. Crazy.
At the same time that people are grappling with what exactly this disruption will do and dealing with a risk-off environment, look, they're all going to be doing roadshows proving their worth. We're going to hear a lot more doom scrolling and different Substacks explaining how transformative the technology is going to be. If it is going to be transformative in that kind of way, given all the uncertainty in markets, will they be able to raise that money in the same kind of capacity that they previously were expecting? How much do market conditions play into when these IPOs come to market?
Mandeep Singh of Bloomberg Intelligence standing by for this breaking news. Mandeep, welcome to the program. These are some big numbers. How important is this development?
I mean, it's huge when you think about, OpenAI really starting off with Microsoft and now branching into this big partnership with Amazon. I think it's really huge in that context. And also, NVIDIA and OpenAI had plans to kind of partner in terms of almost $100 billion. Now that has come down to $30 billion. And Amazon is the one who is really stepping up, and there is some mention about OpenAI using Trainium chips. So all in all, you see a big ecosystem shift here from, the OpenAI original stack, which was Microsoft and NVIDIA, to now really leaning towards Amazon and kind of using Amazon's chips to develop custom models. And obviously the scale of investment is huge. And I think Amazon didn't really have a choice, given they had talked about $200 billion in CapEx this year. And there wasn't any proof in terms of what they were doing with that $200 billion investment, because they are not training their own large language model. And the cloud growth is trailing the other peers like Microsoft and Google. So this was a step that they had to take to really kind of change something in terms of their $200 billion in CapEx.
Mandeep, what does their access to capital look like at the moment? Coming into this year, there were real conversations had in financial circles about the potential, not the high potential, but the potential at least of this company going bust and not raising enough capital in the years ahead. How are things shaping up now?
So OpenAI, as you rightly pointed out, had talked about almost $1.4 trillion in investments and, some through partnerships, some of their own. And now I think they're coming to the realization that obviously Google has caught up in terms of large language models. Anthropic models actually are faring better in some use cases. So they really had to scale back their own ambitions in terms of the CapEx that they could put through the debt market or private funding. And now they're leaning more towards the ecosystem, where Microsoft, I think, is sort of scaling back here, or at least OpenAI and Microsoft are not getting along that well. And they had to find a new partner for this CapEx build out. And it looks like it will be Amazon. And the thing about Amazon is Amazon was a big investor in Anthropic. It still has a pretty sizable stake there, but clearly Anthropic has been using Google more, and they are leaning more towards using Google TPUs. And now NVIDIA has an investment in Anthropic as well. So from that perspective, they're all kind of using each other's cloud and each other's chips now. And it's all about how much funds you can raise to establish your lead.
They're raising serious money and developing serious technology. And Mandeep, that's hammering the labour market if you work over at Block. I want to squeeze this in with you. Your thoughts on this move? 20% rally in the pre-market on this name. Is this the real deal?
I mean, a lot of these companies are not going to grow at the same rate that they grew, around the pandemic and subsequently for the next 1 or 2 years. So given that growth rate is decelerating for a lot of software companies and there is more disruption on the horizon, I think fixing the cost structure is almost an imperative. Obviously, the 40% layoff was pretty surprising in terms of the scale. But you're better off doing it in one round as opposed to having 3 or 4 rounds of layoffs. So from that perspective, I think we may be surprised, but there could be bigger announcements in terms of the size of the layoffs.
Mandeep, thank you, sir. A lot of us are bracing for that. Mandeep Singh there of Bloomberg Intelligence. Joining us now, Alejandro Grindel of Ned Davis Research. Alejandro, welcome to the program. We're talking about the economy, PPI's hot, talking about the labour market, and it takes us straight to tech. How would you describe the moment we're in this economy?
A little uneasy. So we saw the inflation numbers come out this morning. We've been under the view that inflation will remain hotter in the first half of the year, probably throughout most of the year, but more so in the first half of the year. And this latest data confirms it. Obviously, we're still seeing tariff pass through. Mike McKee, I haven't had a chance to look into the details, but Mike McKee mentioned airfares, financial products that's going to feed into the super core. So obviously a lot of jitters on that point. From the broader economic standpoint, I mean, we look at a fair share of pieces of data that we use to gauge, say, recession risk or even slowdown risk. And for the most part, they're still holding up reasonably well. So overall, we think the economy is hanging in there, but with the high inflation and then obviously a lot of jitters on the employment front and all these announcements of layoffs, we're sort of at this, important juncture. And I would say within the second half of the year, I think the Fed is going to take a closer look at easing policy. I think that's the bottom line.
And it seems like, Alejandro, you're looking at a bond market that is kind of looking through a hot PPI. You're still seeing bond yields lower at the front end. And yet there doesn't seem to be the economic data that justifies it just yet in the minds of a lot of economists who come on this show. Do you think that right now the bond market and, frankly, economists are listening more to the idea of what happened at Block than they are about what's happening last month in the jobs picture?
So, yeah, I mean, I think there's just a lot of jitters. So as we got into this year, we knew the past 2 years and broader equity markets have been quite strong. And this year, maybe may not quite be as strong just because we've had such a long run. Sometimes it's really hard for it to maintain that strong momentum. There's also downside risk coming from just, regular cycle with midterm elections, maybe a little bit in the change in the Fed. Many times markets tend to test the change in the Fed as well. So I think there's some factors in there, but I think, the overlying view is still continuation of U.S. economic growth.
How important is next Friday's labor market report in light of some of these jitters? In other words, how much could a weak labor market report for February spook economists much more and highly disproportionately to one that looks pretty good?
Yeah, I mean, we're definitely climbing a wall of worry. So I think if we do get that weaker news with the labor market, again, there's a lot of labor market indicators we need to be looking at besides one, but we know people tend to respond quite a bit to the payrolls report. I do think there would be a reasonably negative reaction for sure.
The jobs report a week away. Alejandro, appreciate your time. Alejandro Grindel there of Ned Davis Research. Joining us now to talk about this bond market, Ed Al-Husseini of Columbia Threadneedle. Ed, welcome to the show. I guess we should start with this. What are 10s doing sub 4%? What's driving us down?
Yeah, I mean, look, I think the economic backdrop that your guest just went through is still quite stable. There's a little bit of upside risk to inflation here at the start of the year. That factor has been really well socialized. But if you look at rates, we have shifted our focus.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
I'm getting from those markets is not necessarily that default risk is spiking. It's more a symptom of the fact that there's a bid here for liquidity. Investors are becoming appropriately more nervous given the starting valuations in these risk assets at the beginning of the year. They're looking for that liquidity, and you're not going to find it in private markets. You're not going to find it in private credit. That's why those valuations are getting dinged. It's much more that bid for liquidity, and that's confirmed by what we're seeing in rates. It's confirmed by what we're seeing in the bid for high-quality bonds. When we zoom out and we look at perhaps the second half of the year, I think that default risk is going to come more into focus. If the economy slows, if the labor market slows, those default risk expectations are going to have to move higher, and investors are going to essentially demand a much higher risk premium than they do at the moment.
Ed, it's good to see you. Interesting thoughts. Ed Hosseini there of Columbia Threadneedle. Interesting thoughts on this bond market, and a word of caution in there too. With 10 sub 4%, even with a hot print on PPI.
That screams to him risk aversion ahead, and it isn't done with respect to credit widening, credit spread widening, as well as equity risk off.
Up next on the program, we'll recap this morning. What a busy morning this morning. We'll look ahead to the weekend, of course, and to next week. Payrolls Friday, just around the corner.
Only the ServiceNow AI platform makes all your tech work together. Any system, any workflow.
Any AI?
Yeah.
Any cloud?
Yes.
Any data source?
Demand said anything.
Any whipped cream?
Yeah. Yeah. Don't be shy. Little more.
There are lots of experts out there who might know tax strategy or maybe agentic AI, but they don't know you. That you live in LA, but you're a secret Boston fan. That you're seen as the voice of reason in the C-suite. And that before a big meeting, you're going to have an epiphany. The reason to work with Deloitte isn't just what we do, it's how we do it. Deloitte, together makes progress.
We started on this journey with the simple idea that individual investors should have access to the returns and diversification benefits from alternatives. The mutual respect and trust between Blackstone and Wells Fargo is really, really special. And when I look out over time, that gives us a lot of confidence, because what's our business about? It's making people's retirements better. And when you think about a mission-based firm like ours, yes, very exciting.
At EY Parthenon, we design and deliver transactions that work in practice, not just on paper. By advising a consumer products giant on a separation into two thriving companies ready for the future. By helping a wealth management firm with a merger integration to become the largest asset manager in the world. And by managing the merger and integration of two energy companies to fuel a reliable and affordable delivery model. Turn your vision into value with EY Parthenon.
To remind you that 60% of sales on Amazon come from independent sellers, Jess from Planetary Design will pour 60 cups of coffee for 60 adventurers.
Shoot, lost count.
Shop small business on Amazon. To remind you that 60% of sales on Amazon come from independent sellers, John from Bluecorn Beeswax will light 60 candles for Marv and Ethel's 60th wedding anniversary.
Marv? Ethel?
Shop small business on Amazon.
It was the stock market that started history's greatest wave of wealth creation. From factory workers in Detroit to farmers in Omaha, anyone could own a piece of the great American companies. But today, our most innovative companies are staying private longer, which means everyday Americans are missing out. Until now. Introducing VCX, the public ticker for private tech.
I've maintained my openness to continue dialogue through that deadline, but they've seemed to have launched sort of a PR campaign that was planned well before these negotiations sort of restarted on Tuesday. So I don't know. So their behavior is frankly unpredictable. I'm not sure what to expect.
That was the U.S. Undersecretary of Defense, Emil Michael, weighing in on the tension between the government and Anthropic right now. And this, unfortunately, has become very, very public.
Which is so interesting. This is public. This is out in the discourse about what they actually are fighting over in terms of rules of the road when using AI. He said it was surprising that Anthropic cut off negotiations, I guess, statement last night. But at the same time, he did say to Dario, we will be willing to have these conversations today. So I don't know, potentially they get to some sort of agreement by 5:01.
Look, this disagreement highlights how transformative AI is going to be and how some of the tech executives are holding strings that are making some people at the government uncomfortable. How that conversation evolves is going to be of the utmost importance, and I think a lot of people are watching.
Unclear if we pass this deadline, what happens? There is a deadline. Here's the trading diary. Let's talk about that deadline. 5:01 p.m. Eastern Time, the deadline for Anthropic to make a deal with the Pentagon. Into next week, Monday, ISM manufacturing data. Tuesday, results from Target. Wednesday, the Fed's beige book and earnings from Broadcom. Thursday, another round of claims plus results from Costco. Then the big one, the payrolls report just around the corner. Now, typically I'd tease Monday and say coming up on Monday. But things are changing here at Bloomberg TV. Coming up tomorrow, the premiere of Bloomberg The Weekend, hosted by Bloomberg's David Gura, Christina Ruffini, and Lisa Matteo. This weekend, David Gura, good to see you, sir.
Good to see you as well. I blame you for this.
Why is this my fault?
The real surveillance heads, the OG surveillors, will remember every Friday used to tweet weekend.
That is
simply.
true.
And I think our bosses took that as a call to action, and now they've launched this show.
That is true.
We will be live every Saturday and Sunday, 7 to 10, and obviously a lot is happening over the course of the weekend. Major events, small ones too. We're going to be covering those live on air, on TV and radio, streaming as well. But this also just gives us an opportunity to have some broader, deeper conversations about the news in the past week and what's coming up as well. So I'm embracing it.
We've got to take a breath.
Yes, exhale as well.
This has been breathless over the past 2 months, and we've said this feels like the longest quarter in
Feature a lot of those longer form conversations. We're going to focus more on politics as well. Hakeem Jeffries, the minority leader, is going to join us on the show tomorrow on the heels of that Democratic retreat up the Potomac River outside of D.C. So we're going to be keenly focused on markets and the economy over the course of the week. And tomorrow, Berkshire reports, which I was not expecting, but there is a company that reports on a Saturday.
There you go, that's exciting.
Greg Abel is going to give us his first annual letter tomorrow. We'll be covering that live at 8 o'clock in the morning and then focusing on politics as well.
Looking forward to it. David, congratulations.
Thank you.
Great to have you back on the TV over the weekend
Glad
too.
to be here.
Are the donuts going to be in the middle?
We'll see.
We're going to make
Tune
that
in,
happen.
everyone, please.
Okay,
There'll be
make that
gluten.
happen. 7 a.m. Did you negotiate that?
Well, it's very early, Joe. Not for you. But,
no, that's nothing. Should we take 7 a.m.?
That would be amazing.
You'd like 7 a.m.
Yeah. That
7 a.m.?
Be life-changing.
Late wake-up call.
I'd love that. 7 a.m. Sounds great.
Try to
Tune in tomorrow, of course, 7 a.m. Eastern Time for the premiere of Bloomberg This Weekend. Coming up on Monday, Laurie Calvasino of RBC Capital Markets joins us, Kathy Jones of Charles Schwab, Barbara Reinhardt of Voya Investment Management, Darryl Cronk of Wells Fargo, plus a big conversation at 2 p.m. Eastern Time Monday. Catch Lisa's interview with the JP Morgan Chase chairman and CEO, Jamie Dimon, and I imagine the word cockroaches is going to come up in this a few times.
Yeah, the big question about how much the cockroaches are coming to the surface with respect to private credit concerns and what he sees there. He's been very vocal about that, the idea that, you know, clearly there's some bad actors here. He also has been really vocal on artificial intelligence and what that's doing to the workforce. So those two ideas are actually working in tandem, the disruption that's causing some of these cockroaches to come to the surface, his words, and what that does to
And I
us
wonder if
today.
he's going to tell you who he thinks lately is doing some dumb things.
Probably not, but yeah, maybe.
Some dumb things are happening in finance, that's for sure.
Yes.
And some big moves are happening in financial markets. The most interesting time in financial markets for a long, long time. Going into the opening bell, just around the corner, 35 minutes away. Futures at session lows with negative 0.8% on the S&P 500. In the bond market, yields breaking through 4%. 398, we're down 2 basis points, even with a hot PPI print just 25 minutes ago.
This, to me, is a huge moment. The idea that you could get data that goes against the move that you're seeing in the bond market says to it, I don't think so, and keeps going. That tells you something.
From New York City, you don't get to rest. We're even here on the weekend. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
up-to-the-minute global news whenever and wherever it happens. I'm Haslada Amin in Davos, Switzerland, and this is Bloomberg.
10-year yield below 4%. Futures are down. 30 minutes till the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
OpenAI shatters fundraising records. The ChatGPT maker closed a $110 billion round backed by Amazon, SoftBank, and NVIDIA.
The AI feud between Anthropic and the Pentagon escalates while Jack Dorsey swings the axe at Block.
And MFS's blow-up ripples through the financial sector as more signs of a strain emerge in the credit markets.
Wow, there's a lot today. A lot of stress. Like, it's all the anxious things coming to a head between credit and AI. I have one of the AI stories that we've been following that we're going to talk to Caroline Hyde in just a moment. Shares of Block up 15.8% in the pre-market. They're cutting 4,000 jobs. Jack Dorsey says it's because AI, that it can replace those workers. Now, to be clear, there are a lot of people, analysts included, questioning whether that's actually the case or whether this was a bloated company and they're now using AI as a convenient excuse. But whatever it is, maybe it's a model to follow. Shares are up a lot.
Right. It could be viewed as an up arrow story, right? Even though thousands of people will lose jobs. OpenAI announced, this is another up arrow story, I guess, a strategic partnership with Amazon to bring more models to AWS customers to use more Trainium chips. Amazon will invest $50 billion in OpenAI, which is now valued at $730 billion. Still seems pretty low. Amazon right now down about 0.25% in the pre-market.
Well, yeah, because if what OpenAI is doing is going to take every single job, is going to ruin software companies, maybe it should be valued at even more. Joining us now is Caroline Hyde, co-host of Bloomberg Tech. I mean, I joke, Caroline, but, you know, it is a pretty punchy number, this new valuation round for them.
It's a punchy number. It's a big number coming from Amazon, who already has a very strong relationship with Anthropic. It's a punchy number coming from NVIDIA, $30 billion from there. SoftBank, Masayoshi Son, once again doubling down on his commitment to OpenAI. And this is at a time where, if you think about it, some of the PR mood music has shifted away from OpenAI and into Anthropic in terms of leading the charge on the plugins and who's really got the best coding tools. But Sam Altman has been focused time and time again on the need for compute. That's what holds back their revenue. That's what holds back the growth, is ultimately the power, the necessity for chips in the data centers. And with Amazon's help, look, that's going to be significant. Amazon had already committed to raising their capital expenditure significantly in the previous earnings. And we are seeing an interview that's being done at the moment with Jassy and Sam Altman calling about the long runway that Sam Altman now sees from this current fundraise that he provides, and more broadly thinking about going public at a time that is going to be right. But Andrew Jassy really talking about, look, they're still committed to Anthropic, but this is going to be a good news story for OpenAI and their integration.
You know, the Block story I find absolutely fascinating. Yeah. And even though those shares are up, what, 16% in the pre-market?
Yeah, exactly.
It's pretty terrifying from the perspective of the Citrini research note, right? True. It's starting to happen.
It is. And look, Jack Dorsey is a contrarian. Look, he's a guy who makes big, bold bets. Look at the way he brought Bitcoin onto the balance sheet, the way he committed to that particular area of crypto rather than perhaps what we've been seeing in terms of stable coins like other payment companies. But the fact that he is saying, I am letting go of these amounts of people in one fell swoop. I don't want it to be death by 1,000 cuts. I want it cleanly done, but I want it done in a human way. People have really been calling out the way in which he has been in touch and thought about this going to be a much more human, personal story. It's going to be painful. He has tried to talk about whether this is AI washing. Look, when I put the post on LinkedIn, for every one person who said, here it comes, it's happening, the tidal wave of layoffs is here, 3 people were like, it's just because they were bloated, they'd overhired during COVID. He answered that on X, of course, the Twitter he founded once upon a time, and he was talking about how, look, in 2024, they rectified in many ways that overhiring. He said, look, at the time he built sort of 2 different companies, Cash App on one side, Square on another. It is a difficultly organized business. He wants to streamline that. But then you also have to think back to what's happened with Klarna, another payments company that said, look, we can do all our customer services with artificial intelligence. And then they had to rehire back a lot of people that they laid off. So there is some cynicism. There's also some very authoritative people out there who I've spoken to who are tracking the AI enablement within these payment companies, saying it's not ready yet. It's going to be a very difficult, sort of longer period of time. But maybe this is if it works, it will be something that other CEOs take into account.
I was going to say, whether or not it's AI washing, you look at the reaction of block shares, and maybe this becomes the playbook because you get rewarded. But I was talking to Matt about this before the show, that Elon Musk said, according to his accounting, he fired 6,000 people at Twitter.
Yeah.
And he said it was because it was bloated and he wants to take it over. And we didn't bat an eye and say this is some systemic issue because he couldn't use the excuse of AI then. I mean, this has happened in tech before, but it's just because they maybe have something to blame it on that it all of a sudden feels different and systemic.
And look how many job losses we had in January alone. Amazon have sort of PR'd it differently. We heard from Andy Jassy in an investor letter a year ago warning that there will be more jobs done by AI. There will be fewer, particularly in his corporate department. They've let off 30,000 people in recent months, but they've been saying, look, this is also to just rebalance. But really, he could have AI washed a lot more. Think about the huge gargantuan layoffs that we've seen across many a business to start this year. Some have tried to pepper in artificial intelligence. Some have tried to use automation. You'll go to a consultancy company at the moment, they say a lot of this is just legacy tech updates rather than actually the latest, greatest generative AI agent doing your job.
Yeah, and yet Indeed has software job seeking up 11% of job listings out there. So,
and I'll remind you again,
please.
We heard from Workday that Anthropic and AI still use its software. So if they aren't replacing SaaS subscriptions, why would anyone else have to?
Yeah, again, it's the great uncertainty, and we're pricing every outcome right now. Caroline, thank you so much. As always, looking forward to Bloomberg Tech at 11 a.m. New York time. Elsewhere, the other anxiety for your market this morning, the cracks in private credit. An Apollo-run fund cut its dividend and marked down loans as losses pile up. Meanwhile, a private credit fund managed by Future Standard and KKR slashed its payments even deeper, hit by troubled bets. In London, there was another cockroach, if you will. A property lender is collapsing, and big banks like Santander and Barclays could lose millions. Let's get now more with Dana El-Baltaji, Bloomberg's managing editor for credit. Dana, I'm assuming that these BDC markdowns are happening because it's quarterly and they have to mark to market. Are we going to see more pain out there? Is this the tip of the iceberg, or is this no big deal, but everyone's paying more attention to it just because of the scrutiny around private credit?
I really like the way that you described what's happening with block and AI. There is a great uncertainty here. And the issue is that because you have these marks, every quarter, we have to guess where the next cockroach is. And so every now and then we get a glimpse, we don't like what we see, and the market reacts. It just so happens that it's all happening at a time where software is a real issue. People are wondering what else AI is going to affect. And of course, I mean, a lot of these private credit firms are highly exposed to all of these industries. So absolutely, we don't know exactly where the pain points are, but every time something does happen, people are worried that there are a lot more out there.
And something did happen today. I woke up to see that MFS was a problem on your side of the Atlantic and is causing ripples across global Wall Street. What's the story there?
So the issue here is there is a company called MFS. It was a mortgage servicer, really, but in any case, it got a lot of funding from banks, from private credit firms, and it has gone bust. Now, the issue here is not just the fact that it has gone bust, but the fact is that the assets that are backing those loans seem to have been pledged once, twice, 3 times. This is still playing out in the courts, so we don't know exactly what happened, but the issue here is that asset-backed lending was supposed to be the darling for direct lenders, and now we're seeing these issues with these assets.
All right, Dana, great your take on credit. You know the market so well. Dana El-Baltaji there out of Bloomberg News in London. We'll have more on the private credit markets from the Bloomberg Invest Conference. Danny and I will both be there for open interest on Tuesday and Wednesday next week. You'll hear from Apollo's Mark Rowan, Mike Arrighetti of Ares, Don Fitzpatrick of Soros Funds, as well as Bruce Richards from Marathon and many, many more. Let's get, though, to the big M&A story that maybe we finally see an end to. Paramount is poised to buy Warner Brothers after its latest offer went unmatched by Netflix. If it closes, Bloomberg Intelligence says Paramount's EBITDA could quadruple. That's earnings before interest, taxes, depreciation, and amortization. Bloomberg Intelligence media analyst Geetha Ranganathan joins us now. So Geetha, I guess this is a relief for the Ellison clan. You know, Paul Sweeney has been saying for months it's a must-have for Paramount, whereas it was a nice to get for Netflix. Why did they give up so easily, Netflix, though? They have so much more money.
They do. They have a lot of financial firepower, but this is exactly what we were constantly saying. I mean, Netflix has always been so disciplined in terms of capital allocation. And this is your classic case, Matt, where losing, the war might actually be winning the battle. I mean, this is a great outcome for Netflix because it doesn't muddy the narrative anymore. You know, the deal was introducing a lot of regulatory risk, a lot of execution, integration risk. All that goes away. Plus, they get $2.8 billion in termination fees as an added bonus. So I think all around, it's a win-win for everybody here.
I mean, but presumably, Geetha, Netflix could have upped their offer with the giant cash pile they have. What would be your understanding in what the line is between offering more and getting this asset, which they talked ad nauseum about, how it was important to them, and they did need this, they needed the IP, versus just saying, well, take that $2.8 billion and walk away?
Yeah, I mean, this was the constant question, Danny. I mean, did they really need this all that badly? They did see an opportunity when, the Warner Brothers Discovery assets were up for sale. Yes, they looked through it, they made the offer. But at the end of the day, I think what happened was, we obviously had that meeting yesterday between Ted Sarandos and the White House government officials. We really don't know how that went. But right after Warner Brothers Discovery deemed that the Paramount Skydance was a superior offer, and you kind of had that White House meeting where they probably got some signals that things weren't really going to go their way. Netflix obviously backed out. I think it's good because, again, it removes a lot of the risk and basically goes back to their story. I mean, their whole MO has been build versus buy. They've managed to do that. They've managed to disrupt an entire media ecosystem. They should be able to absolutely maintain their streaming dominance as they focus on their core drivers. I mean, we have double-digit revenue growth. You have 20% EPS growth through 2030. You have operating margin expansion of something like 300 to 400 basis points. And they're throwing out something like about $10 to $15 billion every year in free cash flow. So all around an organic growth story that is pretty strong, that was probably going to get diluted a little bit with this M&A.
What about Paramount Skydance? I mean, I'm sure that the industry, or possibly the industry, is happy about this because David Ellison and his sister really seem to want to make good movies. And Larry Ellison obviously has a ton of money. He's, I think, 6th on the Bloomberg Rich List with over $200 billion as measured by us. But how much do they have to make now to cover their nut? Because they're taking a lot of debt here.
They're taking a tremendous amount of debt, Matt. I mean, if you look at the pro forma leverage of this company, it's going to be 7 times. Dangerous levels of leverage, we would think. But yeah, I think it is good overall for the industry. I mean, from Paramount's standpoint, really, they really didn't have much of a chance as a standalone entity. I mean, organic growth, it was going to be really, really tough. They're a subscale streamer, very heavy exposure to a declining TV ecosystem. This was absolutely, as you characterized it correctly, this was a must-have for Paramount. And we'll have to see how things work out. I mean, obviously, you still have execution integration risks, but they have pointed to this humongous synergy number of $6 billion. So we'll have to see if they're actually able to deliver on that.
Geetha, thank you so much for the latest update this morning. Geetha Ranganathan of Bloomberg Intelligence. Let's get a quick check on futures this morning. A really bad day for Russell 2000 futures, but a weird dynamic because yields are lower, below 4% for the 10-year yield, but PPI came in hotter. So I guess we're losing jobs and dealing with sticky inflation. So try to put your head around that one. NASDAQ 100 futures down about 1%, S&P down 0.9. Coming up, we talk about the Paramount deal with one of its proxy advisors and much more. As the proxy season heats up, we talk with Bruce Goldfarb. That's coming up next, just after this break.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you're good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Getting out of high interest, look at what's making headlines around the world. The U.S. and Iran agreed to resume nuclear talks next week with technical teams meeting in Vienna as President Trump ramps up military forces in the Middle East. Tehran is refusing to move its enriched uranium abroad, rejecting a central U.S. demand. Washington has voiced frustration over the slow progress, and you can see Brent crude continues to move higher. Bill Clinton will be the first former U.S. president compelled to testify before Congress, facing questions about his past ties to Jeffrey Epstein. Former U.S. Secretary of State and his wife, Hillary Clinton, was deposed a day earlier. She said she never met Epstein and insisted her husband knew nothing of his crimes. Lawmakers called the subpoena unprecedented as Democrats push for President Trump to testify as well. Wells Fargo is expanding its lending business to work more closely with smaller private equity firms. The bank has launched a new team to provide loans and connect those firms with its growing investment banking division. It's part of a broader push to compete more directly in the private credit market. Danny?
And Bank of America did that recently as well, we should note. Elsewhere, Paramount shares are climbing as it plans to spend $111 billion for Warner Brothers. Let's bring in No Cappy Partners CEO Bruce Goldfarb. His firm is a proxy advisor for Paramount, so would be helping with understanding what the shareholders of Warner Brothers might want. Bruce, probably one of the busiest men in America at this moment. How are you thinking about this? What's next for shareholders?
Well, there's a lot for shareholders to still do here. There's still going to be a vote, but more important, right now, think about what a great day it is for shareholders relative to the sort of battle that was going on. There's more to come. Over the past few days, we've had shareholders calling and saying, what is going to happen next? And that's a lot of what we do. We communicate with shareholders of all sorts. We had a lot of retail shareholders calling, as you may appreciate. Warner has a lot of retail shareholders, including former AT&T shareholders who now own Warner. And then there are institutions and ARBs and hedge funds. So there's a lot more to come, but it's a win for all. If I think differently, and if I give Warner some credit for a great movie this year, for us, it's been one battle after another.
What an incredible film.
It is really good. Absolutely. And we have been busy with not just this situation, but so many others, whether it's on the activist front, representing some companies who are going into proxy season, and we've had M&A, and there's a lot of other contested situations that have happened, friendly deals where investors want to check on the price that's being offered, they want to talk about process, they want to make sure that they're getting value like they're going to be getting here at Warner.
First of all, I went to see that film twice in the theater. And I wonder if Paramount hasn't, much like the assassin in one battle after another, bitten off a little bit more than it can chew, because they're taking on a lot of debt to make this happen. Now, I know that they need to do that. All the media analysts we've spoken to have said this has to be part of the plan. They have to have Warner Brothers to succeed, and now it looks like they will. But how much money are they going to have to make to cover it?
That's not for me to talk about today, Matt. There's a lot to come out, and I know we are working with some of the smartest people in the business.
What about the Netflix side of things? Because this is a company whose shares had been hit really hard on this. Again, putting on not necessarily your Paramount advisor hat, but your proxy advisory hat. Do you think this would have been a company ripe for an activist to come in had they actually gone forward with this deal?
Well, appreciate that Netflix is a large company. Their shareholders do care about the situation, and if you look at shareholders, largest shareholders of Netflix, you look at largest shareholders of Warner, Paramount, there's a lot of cross ownership, and each of those companies would have heard from their shareholders. That's what happens in every situation. The shareholders have opinions. Part of our job is to help our clients understand who those shareholders are, how they think and behave about situations, put our clients in communication with the shareholders so that they can make the right decisions, so that they can execute on the deals that they want to do. And that's certainly what's going to happen here.
By the way, have you noticed that Danny Berger has a new deals show? Every Wednesday at noon, an hour-long show focused solely on M&A, because it's such a busy time right now.
I know that, and I've been watching. It's great.
What do you think? Obviously, it's the start of proxy season, so we're starting to get these various things coming in. I know you work with Elliott as well. They're looking at Norwegian cruises. What do you think the play is here? Because this is a firm that doesn't necessarily like to go all the way down the road of the proxy fight. Where do you think the ultimate end game is for this?
Well, I don't know that I would characterize any activist as a firm that's unwilling to go and have a proxy fight.
Right.
The reality is that when an investor like Elliott, who is very smart, very sophisticated, wants to look at a situation, they've done their homework, they have a thesis, they're presenting that thesis to management, to other participants, to shareholders, and if they need to have a proxy fight, they have a pretty good sense that they have a possibility of winning, a probability. I mean, we help them with that, and we help them understand whether or not they're going to win. We've worked with a lot of investors over the years and companies where we lay out the odds and say, you're not going to win or you're going to win. You have to really know what's going to happen with the different shareholders. But ultimately, it is about value creation. And whether we're talking about cruise lines, shipping container companies, dry bulk companies, whether we're talking about entertainment and media, oil and gas, there are so many sectors where we have this uncertainty in the market, and companies need to articulate their plans to their shareholders, or they're going to have investors speaking up saying, you need to do it a little better.
So what have you heard? What has been the reaction from shareholders? Let's just take Elliott Norwegian as an example. Have they been pretty welcoming that, yes, this is a company that needs an injection of life?
You find almost every time that Elliott comes into a situation, the shares go up. So the reaction is almost immediate. And that kind of reaction is what helps a company understand whether or not there's something to be done here. Now, we work with a lot of companies, too. And we help those companies understand and appreciate whether what an investor is saying is worth pursuing more. And frequently we find that the good ideas come from management, boards heard them, but also these shareholders. And other shareholders will then amplify what an Elliott is saying, and that's where you end up with potentially the value created from investors speaking up.
Bruce, you have so much experience in this arena, and from Cravath to Columbia to Okapi now. I can make a comment or try and compare and contrast the regulatory environment under President Trump and President Biden, but I don't know it as well as you do. Is it really as stark as I would have thought?
There's a lot of differences in how all of the participants are looking at transactions now. We worked on a number of situations during the Biden administration that frankly were hard to get done or didn't get done. We worked for Spirit Airlines, and so you talk about a situation that maybe should have been done with Frontier.
It feels like nothing got done under the Biden administration, and everything can get done now. Is that?
I mean, when we're talking about things like Stripe buying PayPal, like two direct competitors, it feels like deals are being dreamed of that never would have happened before.
And probably to the benefit of investors and to the benefit of the markets in general. That's the exciting part of what we do. We do talk about how we communicate these deals to investors who have the same kind of questions that you do, Matt. Is this something that can achieve regulatory approval? When is it going to happen? Should I be buying now? We don't make investment advice. We don't give investment advice to clients, but we help them understand the timing and what could happen next.
All right, very cool. Great having you on. I hope we can get you back, or maybe you'll go on Danny's Deal Show.
We'll take both. We'll happily take both.
Danny's Deal Show, Wednesday at noon. It's a do not miss if you care about this environment. Okapi Partner CEO there talking to us, Bruce Goldfarb, about not just Netflix and Paramount, but about M&A in general. Less than 4 minutes to the opening bell. We begin the trading day with Anastasia Amoroso. Stay with us for that because futures are down hard. This is Open Interest.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. Take a look at futures because in a month that's already looking like a loss, they're down 1% on the S&P right now. NASDAQ futures down even more, and the small caps down 1.5%, even as the 10-year yield comes in below 4%. And Danny tells me this because PPI was just too high. You see here, well, that's Jim Neeson. He's the managing director and founding partner at the Connor Group. Great guy to ring the bell today because they're holding an IPO summit, and that's what the NYSE probably, definitely, absolutely wants more of. They're getting one down at the NASDAQ. Generate Biomedicines ringing the opening bell, raising $400 million in an IPO, so that will start trading today. Danny, there's a lot going on in these markets.
Yeah, and a lot going on that we're freaking out about, that we're like,
Yes.
there's, fires to be put out. I mean, whether or not
this story, by the way, that you're about to show us is the perfect end to a week that started with Citrini research, right?
That is actually so well put. Of course, this is the logical conclusion that you get a warning that maybe the white-collar labor market is going to be completely different, and then you have a company saying, yes, that is what's happening, and that's what we're doing. Block cutting 4,000 jobs. Jack Dorsey saying that AI can replace those workers. But Matt, we talked about this earlier in the hour. There have been many who have said this was a bloated company and they would have needed to make those layoffs anyway. Maybe AI is a convenient excuse. Whatever it is, shares are higher by 17.33%. So, or now 18%. So maybe this is the model to follow. Your shareholders will reward you if you cut a whole lot of employees and say it's because of AI.
Right. I mean, he also raised his profit forecast at Block. So that doesn't hurt. OpenAI announced a strategic partnership with Amazon to bring more models to AWS customers. Amazon will invest $50 billion in OpenAI, which is now valued at $730. I think in total they got $110 billion of investment, and they're going to buy some Trainium chips, which is the part that I find interesting as well in the battle to see if anybody can catch up with NVIDIA. Let's bring in Anastasia Amoroso, Partners Group Chief Investment Strategist of Private Wealth there at Partners. Anastasia, great to have you here.
Good morning. Good to see you, Matt.
You know, last time we had you on, we probably asked you if there's a bubble in AI, and that is no longer
I said no.
a discussion, right? Now the concern is AI going to, well, kill us all, right? I mean, Anthropic has said we're not going to let AI control weaponry, and it seems like the Department of Defense wants that to be the case. But what do you think about all of this investment? Are we just going to see it continue to climb higher and higher and higher?
I do. I think the Amazon and OpenAI news is really telling, and that is you really see companies, the Gen AI companies like Anthropic, like OpenAI, really gain traction, and not only in terms of adoption, but also in terms of monetization. And for example, if you tally up the revenues for the top 3 leading AI companies, they were $54 billion or so this year, or projected to be this year. They're projected to grow to $307 billion by 2030. So that's the revenue growth trajectory that allows the likes of OpenAI to raise that. And the other thing, Matt, I will say, I will bring it back to our business, and I wanted to share an announcement with you today that we've announced that we've sold one of our data center portfolio companies at North to Equinix, which is one of the largest digital infrastructure companies, and also Canada Pension Plan. And the reason I highlight that is because we've been long convinced in the data center opportunity set, and the fact that OpenAI sees revenues, is able to raise funds, they're going to route those funds back into data center capacity and semiconductors.
Wait, if you're convinced, why sell?
Well,
I mean, selling is like, okay, we're at the top here.
Presumably you're buying some stuff too.
Well, this is also not our only data center holding. Look, we've been data center investors since 2020. That's when we first, unveiled the data center theme, and we've invested about $5 billion in data centers in Europe, in North America, as well as Asia. So we certainly do still have exposure. But Matt, to your point, why sell is because we've really worked alongside at North to scale the company, to really scale the data center platform from what was was 2 sites at the onset to now 8 sites focused on the Nordics region. And we've grown the EBITDA about 14-fold. And as a result, we're able to help the company, I would say, to help ensure compute is more available in the world, and also help our clients achieve pretty significant returns, over 30% compounded annual growth rate, or 2.5 times in terms of capital return on capital invested. So that's the reason. And we also believe that depending on where the company is in its life cycle, we were the right owners for that company when it was small, when we were building that up to a mid-sized scale. Going forward, Equinix and Canada Pension Plan, we believe, are the right owners. However, we do believe very much in atNorth as well as data centers. So we are reinvesting a share there as well.
And again, as you mentioned, Partners Group has been doing infrastructure for some time now. It does feel like for the world, for private capital, for public equities too, it feels like a shift has happened. We're out of COVID. It was, we love these software companies that are just a couple of dudes coding in a basement because they're super asset light and margins are fantastic. Now it feels like it's shifted. And correct me if I'm wrong here, that asset heavy infrastructure, real world, this is where it's better because it's protected from AI.
That's right. That's exactly what the market is telling you this year. I mean, it's stunning. You look at the S&P and it's barely flat, or maybe even down a little bit for the year, depending on the day that you look at. If you look at data centers, for example, they're actually up about 20%. If you look at defense companies, they're up, and semiconductors are faring better than software. I think it's spot on. If I look at sort of how CapEx is shifting, has shifted in the last few quarters, the software CapEx has been slower versus the hardware CapEx has certainly been picking up. And let's just say something else here. It's not only data center CapEx that's driving that. This year we have seen sort of this inflection point, and whether it's utilities, whether it's capital goods, whether it's commodity producers, they too are participating in this hard asset CapEx. The last point, Danny, I will say, look, if you think about software, parts of software, you can disrupt that with a stroke of perhaps Anthropic code. But if you think about a piece of machinery, a piece of equipment, you can't make that obsolete overnight.
It seems like, yesterday we had weekly payrolls, and I didn't even notice. Today,
nobody noticed economic data this week.
Danny had to point out PPI to me as the reason for the small caps dropping. Like economic data, Mike McKee is not sitting here.
Or even earnings, to be fair, too. I feel like we're also kind of overlooking really good earnings, too.
Good
That
point.
doesn't seem to be what's driving the market.
Is it distracting us too much?
Well, I actually wrote this in my notes that I can't remember a time when we paid so little attention to economic data, but let's do actually pay some attention to that. And I think the reason for that is because the economy has been quite strong. Whether you look at the consumer side, which is being boosted by the refunds as we speak, whether you look at, also the consumer side being boosted by the rate declines as well. But I'm really encouraged once again about the rebound that we're seeing in corporate CapEx. And, what was sort of a single engine economy may actually have multiple engines to it. It's the tailwinds of tax policy, it's the tailwinds of productivity, which we talked about from AI. So, so I think
what's your take, Anastasia, on the labor market? Because, Danny mentioned, software hiring
is up 11% year-over-year on Indeed,
On the same day that Jack Dorsey is like, everybody else, we're getting ahead of this, everybody else is going to have to fire half their staff too. I was reading Data Trek. Nick Colas pointed out that people are still demanding work from home, and a sign that, the labor still has kind of the upper hand here. Which is it?
Yeah, I mean, for now, but I would say the labor market is shifting as we speak. If you look at the layoffs last year, about 5 or 6% of them were attributed to artificial intelligence. But there's this big category of economic conditions. Who knows what's all in there? I think as we move forward, you'll see that share of layoffs due to AI rise. And if you look at it on a very granular level, if you look at the labor force and who has the greatest automation potential, about 1% of the labor force today has 100% automation potential. Guess what happened with that category of jobs? They have started to roll over. Now, a quarter of the labor force has a 90% automation potential, and we've seen employment in that sector stagnate as well. So I do think that whether it's the Klarna headlines we got a little while ago, whether it's Block, I do think more of those announcements are to come. So I don't buy into the Citrini dystopian scenario that was described on Monday, but I do think there are cautionary notes in it that we should be watching.
Anastasia, this has been so fantastic. Thank you so much for joining us. These are such
Thanks so
complicated topics, and you speak on them so well. Anastasia Amoroso. Let's get a check on your equity market right now. It's not looking like a great day. We are down nearly 1%. 327 stocks are down, only one unched today. 177 are higher. As to the higher stocks, the one that's leading the pack right now is Netflix. They're going to get a nice $2.8 billion breakup fee. You could probably film a couple movies. Oil and energy, that's having a good day too. The US and Iran talks continue next week as the force buildup continues. Dell, those earnings good because of AI server demand. And then Block, this is the story we've been talking about. If I need to remind you, firing 40% of the workforce, they say because of AI. NVIDIA not having a great day. Neither is Microsoft or Apple or Broadcom. These are giant stocks, and that's why the index is down. NVIDIA dragging the index down by 9 points so far this morning. Let's look at the sectors. It's going to look much the same in that infotech is down. The credit card companies also having another bad day. Consumer just scratched that. Index has been beat up this month. And then you get the safety plays at the top. You get consumer staples, energy, that's surrounding Iran. And Matt, I got to say, I know we're going to talk about this later, especially with David Gura on their new weekend show, but with all the things that are playing on in the background that we're ignoring, the economy, the earnings, I wonder if we have to add Iran to there. Are we paying enough attention to what could be some serious escalation?
Well, and I mean, who better to talk about that with than Christina Ruffini, who is going to co-anchor that show with David Gura. I'm very much looking forward. This weekend, actually, you know, MotoGP starts the 2026 season this weekend.
Wow.
So it's already like been on my calendar since last November, and the Bloomberg Weekend Show.
You're just going to be sat on the couch, glued to the TV all weekend.
Absolutely.
Love it.
Positively. Coming up, open to talks. The Pentagon responds to Anthropic after rejecting its offer ahead of today's deadline. We'll discuss something that could be even scarier than the Citrini research report next. This is Bloomberg Open Interest.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Let's get you some top calls. The analyst action, the sell side that we are following this morning. First up, TD Cowen. They upgrade Southwest Airlines, saying that airline demand looks stronger this year. The firm also says changes to Southwest loyalty program will help to boost earnings, but the real test is whether customers will keep their credit cards over time. Shares down 1.7%. Next up, Cars.com. That gets downgraded at JP Morgan. The firm says that it's hard to see when the company will start growing faster. The analyst says that competition is heating up, especially from AI tools and bigger companies offering more complete services to car dealers. Those shares down 6%. And finally, Morgan Stanley cutting Duolingo, my beloved owl, saying it was wrong to expect that the company could grow users and make more money at the same time. The language learning software company reported an outlook below expectations. Evercore ISI, JP Morgan, Citi downgrading the stock, shares down 20.5%. And unrelated, I currently have a 50-day streak on Duolingo. Matt.
Are you actually learning anything, though? What language are you trying to learn?
I'm doing Spanish. I have high school, only present tense level Spanish, so I'm hoping at least it helps me remember, I don't know, vocab. Jury's out whether it's actually helping me or not.
All right, maybe I'll give it a shot. My wife is from Spain, and, you know, we've been together for like 13 years.
I feel like it's embarrassing that you go to Duolingo to learn Spanish and not your own wife.
I mean, she thinks it's embarrassing that I don't speak Spanish.
I got it,
It's true. The Pentagon is open to more talks with Anthropic ahead of today's deadline to ease restrictions. Bloomberg spoke with Emil Michael, U.S. Undersecretary of Defense for Research and Engineering, about the negotiations.
I offered more talks. So long as they're in good faith, we're always open to talks, and we set a deadline, and we met the deadline, and up until that deadline, I'm open to more talks, and I told them so.
Joining us now is Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. And Mandeep, you know, I read the Anthropic statement yesterday, and it seems like the two things Anthropic isn't willing to do is let the government use AI to do surveillance on its own people, on us, and let the government use AI to, like, autonomously control weaponry. Surely the government doesn't want to do either one of those things, right? That would be insane.
I would agree with that. And look, I think with Anthropic, because they've been so focused on guardrails from the get-go, you know, for the CEO, this is probably one of his big things that he has highlighted as a differentiator. And he doesn't want to completely, you know, give up on that guardrails aspect, even though, you know, the entity here that is looking to use that is the U.S. government, and their point is around national security. So from that perspective, I mean, again, I go back in time, you know, what the other software companies have done. And, you know, you always have to have the government on your side, and especially when it comes to national security. So it's going to be hard for someone like Anthropic to maintain their stand, at least as is they have right now.
I mean, have you seen Terminator? We've all seen Terminator, right?
Yeah.
That's the whole premise, that AI controls weaponry, and is it not? Am I?
No, it is. It is. But also, Mandeep, doesn't Anthropic, okay, two thoughts on this. One, doesn't this sort of cement how great of a foundational model Anthropic is if the Pentagon has to keep being like, okay, we're open to talks, we'll work with you. It seems like they need Anthropic. And number two, given the doomsday scenario Matt is laying out, don't you think this would be bad for their image if they caved to the Pentagon?
Not really. I mean, you have to think in terms of geopolitical context, and, you know, the competition that I guess we have with China. And then again, the national security aspect of it is huge. So Anthropic is in a dominant position. Like you said, they are among the 3 leading foundational model players right now, and the government is keen to use their product for intelligence. So at this point, you have to think about who your end user is. If it was any enterprise use case, I totally understand. But if it's the government and they're talking about it from a defense standpoint, again, it's hard to argue, why you would not relent in that case. And clearly Dario has his points around that. And I'm guessing this will have some sort of a negotiation phase, and obviously they will probably, come to some sort of agreement.
Yeah, I thought it was encouraging that Emil Michael said we're open to continue talks.
Yes, and again, maybe that just shows how dominant Anthropic is. Mandeep, thank you so much. Mandeep Singh of Bloomberg Intelligence. Coming up, how ETFs can provide an escape hatch for the stress in private credit. By the way, the latest headline, MFS creditors alleging that there was £930 million in a shortfall from double pledges. The fraud saga continues. That's next. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Happy Friday. Or not, if you're long stocks right now. The S&P 500 is down 0.9%. The NASDAQ down 0.75%. So some big drops here across the board. Wow, the small cap's off 2% as PPI comes in hotter than expected. Also, NVIDIA is down right now, so 2.5% drop, and that big behemoth doesn't help at all. Block, which is not a big behemoth, is up a lot, 14, almost 15% right now after Jack Dorsey said he's going to fire half the staff, replace them with AI, and that means they're going to make more money this year. It's what shareholders like to hear. Netflix right now up almost 10%, so gaining a tenth after they said, you know what, we're out. We don't need Warner Brothers Discovery. We'll just take a $2.8 billion breakup fee and go our merry way. Paramount is up because they are going to get, it looks like, Warner Brothers Discovery, so gain a 4% there. And then, the private credit story that Danny has been covering so well continues to see fallout with a lot of marks disappointing the market. Apollo right now down 7%, Blue Owl down another 5%, Danny.
And just adding to the stress this morning, the latest breaking news that MFS, that fund, or rather the creditor that was in the UK. That seems to be another cockroach. Apparently 930 million pounds, or about $1.2 billion worth of double pledges, so concerns about fraud. Now, this is not a fraud story at all. It's very different, but Blue Owl, as you were pointing out, Matt, continues to fall. Its move to restrict withdrawals exposes enduring tension between liquidity expectations and illiquid assets. Investors lost control of redemption timing, but the ETF wrapper offers an escape hatch, according to Bloomberg Intelligence. Joining us now is James Seyffert of Bloomberg Intelligence. So, James, there's been this real big anxiety around BDCs and the liquidity profile of them. What do you and the team mean by the ETFs offering an escape hatch?
Yeah, so there's a huge push right now to put private assets into an ETF wrapper. There's people trying to do it with private equity. There's a huge push to do it with private credit, which is very relevant to what you're just talking about with Blue Owl. And you're probably going to think that I'm going to sit here and say it should just all be in an ETF wrapper, but that's really not the case. What we're saying is there's trade-offs to however you do this. If you're going to do it in an interval fund like that Blue Owl fund you were just talking about, you're going to be locked up potentially for much longer than you might want to be. But that's kind of what you're doing when you're investing in a liquid asset. If you're buying a private credit fund or a private equity fund, you name it, like in some cases, you're locked up for 10 years no matter what. These assets are illiquid. But there are examples of ETFs that go completely illiquid and you can still trade them. The question is, would you rather be able to get out at a potentially massive haircut, a huge discount, or would you rather be forced to be stuck in there? So these are all trade-offs that you make, but the ETF does have a lot of benefits, and there's a few examples we've looked at in history that show us those benefits.
James, unfortunately, we're running up against the clock, but I'm looking forward to more coverage of this on ETF IQ Monday. James Seyffert there of Bloomberg Intelligence makes up like our ETF triumvirate on the BI side, right? We got Eric Balchunas, Athanasios Sarafagis, and James covering it there. And then, of course, on Bloomberg TV, ETF IQ, you've got Balchunas joining Katie Greifeld and Scarlet Fu. That is a must-watch hour of television now, a full hour of television.
Yes.
Every Monday if you're into ETFs, as pretty much everyone is. It's like the most important wrapper in the investment world.
It's a great show, and we have another hour coming up for you here on Open Interest. The CEO of Monroe Capital is going to talk about private credit fears. We're also going to talk with the head of Algorithm. Remember that little karaoke company that pivoted to AI and sent an entire trucking sector plunging? We'll also speak with Gary Atkinson, the CEO of Algorithm. All that in your hour 2 of Open Interest.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. You know, I was traveling the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, Doesn't make any sense. Then we started Nobu Hotel to Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Is CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Scouting America has just announced it's altering its policies to maintain funding from the U.S. military. One of them focuses on transgender hopefuls.
Defense Secretary Pete Hegseth says the Boy Scouts had lost their way and become woke.
Diversity, equity, and inclusion, DEI, crept in. The name was changed to Scouting America. Girls were accepted.
Now the organization has agreed to drop DEI and alter its membership policy.
Membership will be based solely on biological sex at birth and not gender identity.
Hegseth says he will review the changes in 6 months and decide if the military should continue to support Scouting America. Michael Wallace, CBS News.
Former President Bill Clinton will face tough, perhaps embarrassing questions when his congressional deposition begins next hour in New York on his ties to a convicted sex offender. CBS's Katrina Kaufman.
He does appear in the Epstein files. There was an image of him in a hot tub with an unidentified woman. You see him swimming in a pool with Ghislaine Maxwell.
Mr. Clinton will become the first former president in more than 50 years to testify before Congress. His wife, former Secretary of State Hillary Clinton, was deposed for 6 hours yesterday. With the largest aircraft carrier in the world, the USS Gerald R. Ford, set to arrive off the coast of northern Israel, and both the U.S. and Iran prepping for the possibility of war, some Americans have been given the green light to leave the Middle East. CBS's Charlie Daggett is in Tel Aviv.
Today, the U.S. Embassy here in Israel issued a security alert and a new advisory authorizing the departure of, quote, non-emergency U.S. government personnel and family members to leave the country due to safety risks.
AI is robbing humans of more jobs. CBS's Jim Crisula.
Block, the company founded by Jack Dorsey that includes Square and Cash App, plans to lay off more than 4,000 workers, 40% of its workforce. Dorsey, who co-founded Twitter, alluded to artificial intelligence tools as the reason for the cuts. He wrote in a letter to shareholders that AI tools have radically changed how to run a company.
Now to the sex lives of our ancient ancestors. A new study in the journal Science finds Neanderthal men and Homo sapien women were getting cozy back in the day. As for who was pursuing who, study author Alexander Platt at UPenn.
There's been a preference for male Neanderthals and female modern humans as opposed to the other way around.
His team determined most of us alive today carry a little bit of that Neanderthal DNA. The Dow's down 800 points. This is CBS. Pokemon is turning 30.
In 1996, we were introduced to the world of pocket monsters like Pikachu and Charizard.
Hello, fellow trainers.
What began as 2 simple Game Boy cartridges sparked a global craze. Since then, the franchise has sold more than 350 million video games and 30 billion trading cards worldwide. 3 decades later, Pokemon still has fans everywhere trying to catch 'em all. Stacey Lynn, CBS News.
First reviews are in on Bruno Mars' first new album in 10 years.
To hold your hand and call you mine.
USA Today calls the romantic efficient, impeccably produced, lyrically slight, but brimming with the musician's innate ability with melody. Mars kicks off a world tour in April in Las Vegas. Deborah Rodriguez, CBS.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well. We're also streaming now on Bloomberg.com/video, and that's where you'll find us there. Isabel Lee sitting in for Scarlett Fu here today. A lot coming up. Markets are selling off pretty hard here today. Coming up, we're going to check in with Geetha Ranganathan. Netflix pulling out of the deal for Warner Brothers Discovery, so we'll check in with Geetha. She's the media analyst at BI. Good news, I think, for Netflix shareholders. That stock was trading higher earlier. Caroline Hyde, she is the co-host of B-Tech. Get the latest on what's happening in the world of technology. Apparently, Anthropic rejects latest Pentagon offer, escalating AI feud. We'll see what's going on there. Nadia Lavelle, senior U.S. equity strategist at Global Wealth Management at UBS. We'll get her thoughts on these markets. Woo Jin Ho, senior technology analyst for Bloomberg Intelligence. We're going to talk about Dell Technologies. They're going to report some results here and see what's happening in the world of PCs and in AI as well. So a lot coming up here in a market that is selling off here today pretty substantially here. We're going to go to John Tucker and get a Bloomberg Business Flash. John.
All right, guys, and this flash brought to you by IBKR. In 2025, IBKR retail clients averaged a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit ibkr.com/2025. Well, the S&P 500 right now posed for the worst month since March. So what are we worried about in this sell-off today? I mean, take your pick. There are new worries over an AI bubble, a new credit blow-up, that's Market Financial Solutions collapsing in London, and then U.S. producer prices rising more than expected. Elsewhere, OpenAI has raised $110 billion in a deal that values the startup at $730 billion. Right now, consumer staples, the best performing major industry group in the S&P 500. Information technology and financials, they are the worst performers right now. Meantime, we talked to Chris Barone, chief market strategist at Strategas Research Partners. He says markets are in a trend right now that will define the years to come.
I think this is the transition, and our call has been the transition from kind of the speculative corner of the market to the real economy or the old economy. I think that's well underway. It's ongoing, and I would expect it to continue moving forward.
All right, now the S&P 500, 45 points lower, 68.63 on the index, down about 0.7%. The NASDAQ 100, 113 points lower, that's down 0.5%. And the Dow Jones Industrial Average, 658 points lower, that is down 1.3%. Well, you know, Elon Musk is already the richest dude on Earth, but a successful SpaceX IPO could make him the world's first trillionaire with a T. Let's try to conceptualize that, everybody. That's as many dollars as there have been minutes since the dawn of the Ice Age.
Oh, wow.
So,
what is next after trillionaire?
Gazillion, I don't know. We check the markets. You can't get, you're going to go higher than that? We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
Very good, John Tucker. Thank you so much. We appreciate that. Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming the video thing live on YouTube and on Bloomberg.com here. Let's take a look at some of the stocks on the move today. We do that with Bloomberg's Tatiana Dari. Tatiana, what are you looking at?
We'll start with CoreWeave, a notable mover to the downside today, falling as much as 19% at the open, the lowest only since August of last year, but still a big move there. The AI infrastructure company reported a bigger than expected loss while boosting its capital expenditures. So that's reviving some of those capex concern in the market. Sales rose to 1.6 billion compared to 1.55 that the analysts were expecting. So at least some relief there, but the market does not want to see this capital expenditures plans rising. And CoreWeave is the latest victim here to the market's worry.
Yeah, definitely. What about Dell? Shares are in the green, jumping.
Yeah, Dell is doing the exact opposite. Performance jumping as much as 18% at the open, the largest increase since March 2024. And it sits on the other side of the AI spectrum today because it is one of CoreWeave's major suppliers and one of the beneficiaries for the hunt for servers. The company said it will generate about $50 billion in server revenue in the current fiscal quarter. And the CEO said it has a record backlog of $43 billion as major AI providers are seeking its servers to run their AI workloads. The company also announced a $10 billion increase in share buybacks. So the market is pleased that it is seeing some of those capitals return to the market. So the picks and shuffle trade is still out there, much live where parts of it is, despite what we've seen with NVIDIA this week.
Netflix.
And Netflix, Paul, this is one for you. Shares are rising after the company was outbid by Paramount Skydance in its bid to acquire Warner Brothers. The company last night said they are declining to raise their $82.7 billion offer for Warner Brothers Studios and streaming business. And investors seem to be happy that they're finally walking away from this deal, which they feared would saddle the company with debt and financial risks. It also marks an end to the contentious fight both in Hollywood and in Washington, and Netflix shares have declined 15% since their offer in December through yesterday's closed. That is poised to strengthen now that the shares are finally rallying.
Stock up 8%, a smart move to walk away, I think, at least just in my opinion. And we'll talk to an expert in just a second. Tatiana, thank you so much for joining us. Tatiana Derrier, strategist for Markets Live. For more conversations like this, subscribe to our Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's dig into deeper this little deal there in the media space. Warner Brothers Discovery, again, the news being Netflix walking away. So now Paramount Skydance, it's their deal. Good for them. And let's check in with Geetha Ranganathan. She covers all the media stocks for Bloomberg Intelligence. Geetha, we got Netflix stock trading higher. I guess the shareholders like them kind of passing on this deal.
Yeah, big relief rally, Paul. I mean, this was always kind of muddying the narrative. I mean, we've spoken about this multiple times. Netflix is such a clean, organic growth story, and them just pursuing Warner Brothers Discovery, I mean, just kind of added so much of uncertainty. You have the regulatory risks, of course, integration, execution risks. Plus, we were talking about something like, their debt levels going up to beyond $100 billion. And yes, they do have the financial firepower, but at the end of the day, they have always been builders versus buyers. And once again, they showed, that they deserved, they've always gained this reputation of being very, very disciplined spenders when it comes to M&A. And I think they once again exercised that discipline, and investors are cheering.
So it seems that this is a smart move, according to analysts, including you. This signal that the company is confident in its organic growth versus M&A, especially in a very crowded streaming market.
Yeah, Isabel, I mean, that had, been the question. I think that's what spooked investors so much when they actually went ahead with this $83 billion deal for Warner about whether they were actually seeing a slowdown internally, and them not just abandoning the deal, but also going ahead and resuming buybacks. Once again, just kind of signals confidence in their underlying growth model. So I think, we know very well that their operating metrics are really strong. I mean, this is a company that has guided to double-digit revenue growth. We're going to see about 12 to 14% revenue gains this year. We're looking at operating margin expansion of almost 1,000 basis points. It's gone up 10% over the past 2 years. So, and of course, we also have fabulous, free cash flow generation. So all of their, financial levers and all of their growth drivers very much in place. And, not having this distraction anymore just helps them kind of really double down on their organic growth story.
On the other side of the equation, Geetha, be careful what you wish for. So Paramount, they've got this great asset in Warner Brothers Discovery. What's the street think about this management team at Paramount? It's pretty much unknown, untested, this Mr. Ellison from the media community. Is there any report card to date? Does the market think that this is a management team that can make this acquisition work?
They probably can, Paul. I mean, they do have, financial, they do have some financial firepower here. Although I would point out that leverage at this company is going to be extraordinarily high. We're looking at pro forma leverage of around almost 7 times. Those are, dangerously high levels. Yeah, and it's something that they're going to have to contend with. But at the same time, they've spoken to synergies. We're looking at about $6 billion in synergies that they've committed to. And remember, this is a team with a fairly tech-heavy bent. So that might be something that kind of really serves them well as they poise themselves for this new streaming future. You do have now, they kind of are turbocharging their content offering, they're turbocharging their streaming business, and they have all of the pieces in place to make this a really good business. We'll have to wait and see how they execute. But you're right. I mean, the management team is a little bit of an unknown, although we do have Jeff Shell, who has experience from NBC. But again, it's going to be a little bit of a wait and watch.
And Netflix also said they plan to invest $20 billion this year in films and shows. Is that enough to keep them ahead, again, in this really competitive streaming wars?
Yeah, the $20 billion that they committed was actually a pretty significant step up, Isabel, from prior years. I mean, we've seen them increasing content costs by roughly about 6 to 7%. This year was going to be a much more significant jump to about 10%. And this is just basically Netflix saying that they are willing to diversify into different forms of content. I mean, the big investments that they're making are in live, in sports, in international content, just to kind of keep up that engagement metric and make sure that, they keep building on that competitive moat that they already have. And now, the icing on the cake for them with this Warner deal is that they're getting $2.8 billion in termination fees. So, hey, much more K-dramas, I guess.
Exactly. Geetha, thank you so much. Appreciate that. Geetha Ranganathan, media analyst for Bloomberg Intelligence. But when you talk synergies in Hollywood, I'd be very nervous. This means jobs. If I'm a lighting director sitting on the Warner Brothers lot, I look across the street at the Paramount lot, there's somebody doing my exact same job there.
That is true, but at least that's something AI still can take. I mean, with news earlier this morning, Jack Dorsey's blog cutting its staff, that was scary. And I always fear about, this is why I keep baking, because no one could still bake. And I was just telling John that I'm also into flower arrangements.
Oh, okay.
So. I mean, I like baking too, to eat it. So far, I have not seen any of the products of Isabel's.
Yes, that's a good point, John. I mean, that's a good point. We'll still have to see if we can work on that a little bit here. The sell-off continues here. We got the Dow off 690 points, 1.4%. That's leading the way on a percentage basis. The S&P is off 50 points, 0.75% decline. The NASDAQ is down 205 points, so about 0.9%. So lower, but off of the intraday lows. And we'll also call out the 10-year Treasury. We're now below 4%. It's been a long time since we've been below 4%, 3.97% on that. Gold higher, $4,230 per ounce. This is Bloomberg Good Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Kind of a toxic brew of worry out there. You have shares of big banks, let's start there, and also the asset managers. They are tumbling. So you have the concern about artificial intelligence disrupting them. And then credit concerns are raging on. There's another cockroach with London's MFS. And you have shares of, let's pick on Apollo Global Management right now. They are down close to 7%, ticker symbol APO, Apollo Management. Netflix, they won by losing. Hear Geeta talk about it. Shares of the streaming giant right now, they are up over 8% after dropping the bid to buy Warner Brothers Discovery. So it's considered a relief for investors. They were worried Netflix would overpay. And don't forget, they're still going to get a $2.8 billion breakup fee. Best performing stock in the S&P 500 right now, Dell Technologies. They are up, let's see, almost 18%. The company delivering an outlook for sales of its artificial intelligence servers that exceeded estimates. S&P 500 down 50 points, 68.58 on the index. The Dow down 680 points. The NASDAQ 119 points lower. You have the rise of robots pitting Hyundai's Atlas against Tesla's Optimus. While the world's attention has been focused on Elon Musk's promise offering, Hyundai is actually emerging as the leader in the industry. They stole the show recently with the Atlas humanoid robot at the CES in Las Vegas. Do all sorts of things. We check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. Isabella Paul.
All right, John Tucker, thank you so much. We appreciate that. As always, we've got Isabel Lee sitting in for Scarlett Phil. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Let's get to these markets here. We can do that with Nadia Lavelle, Senior U.S. Equity Strategist, the Global Wealth Management Business at UBS. Nadia, what's the type of conversation you're having with your clients these days as we see kind of the volatility pick up here in 2026?
I love that question because what we have really been focusing with our clients is the importance of diversification and rebalancing and really managing concentrated stock position. And the reason being is that a lot of clients have benefited from exposure to a handful of names, particularly in the U.S. over the last few years, and they've done exceptionally well. But the environment is changing, and so we've also been encouraging clients to really look at some cyclical opportunities in the market. The AI disruption headlines has been sort of playing whack-a-mole in the markets, but it's really clouding the headlines around like the positive environment that we're in from an economic standpoint. We really think that this is an economy that's going to grow 3% in the first half of the year, and that should be very supportive to some of the more cyclical areas of the market as well. And so overall, I would say, Paul, that we remain constructive on markets, but it's about really right-sizing some of those positions that might have gotten out of whack over the last few years.
And you recently downgraded tech and communication services to neutral. Is it about valuations, AI capex running a little too hot, or just rising competition in the space?
Isabel, great questions. I think that the downgrade to neutral after years of being quite bullish on the space. I think, look at NVIDIA and how it behaved this week. I think that's really reflective of the struggle in the sector. NVIDIA had exceptional earnings, beat and raise, but it did not resolve the issues that the market is having around AI. It's no longer about whether AI spending is strong enough. It's really about how disruptive and capital intensive AI is becoming. NVIDIA is capturing a lot of the cash flows, but the hyperscalers that are deploying that AI is seeing cash flows come under pressure, particularly at the massive capex that's expected to be spent this year, $650 billion from the five largest hyperscalers in the space, and that's nearly 100% of their operating cash flows. And so within the space, we want to become more selective. We're really focusing on those areas within tech, so it's not negative on tech, it's just being more targeted. Focusing on those areas that have, supply chains bottlenecks. Think about memory, foundry, as well as packaging. And then within software, we're really focused on more of those structural software. So those that are embedded in enterprise and really at the plumbing, and it's really hard to displace rather than application software. So it's not an overall negative view on it, on tech. Again, it goes back to the rise, size, and position message that we have out to clients.
Nadia, how about in the bond market? What's that discussion with your clients like these days? I mean, some nice coupons out there. I'm not sure we're going to get much, principal gain pick up here, but certainly the coupons look pretty strong.
Yeah, we continue to emphasize that message of staying up in quality within the bond market. We think that, yes, you can clip your coupon. Don't know how much price appreciation you're going to see at this level, but overall, it's that continuing quality story that you want to really stick to and be very selective in that area as well.
And you expect 2 rate cuts this year. Do you look at that as insurance against a slowdown or maybe a green light for stocks to push higher?
I wouldn't say it's not an reflection of a slowdown. It's more a reflection of that we think that inflation will start to moderate in the back half of the year. We know that the Fed still remains quite data dependent, but there are quite a bit of inflation hawks on the Federal Reserve. And so once inflation starts to moderate in the back half, we think that it will give the Fed the license to start to cut, and looking for that 2 rate cut in the back half of the year. Overall, the Fed bias remains dovish, even if that cut is delayed. And so we'll watch payrolls next week to see how strong those numbers are. Obviously, the January payrolls numbers were quite strong. The tick down in the unemployment rate to the 4.6%, and initial jobless claims yesterday remain well behaved. And so if the Fed is to cut near term, it will be a signal that there's some weakness in the labor market, but we think that those cuts comes in the back half of the year and more driven by lower inflation.
Nadia, thanks so much for joining us. Really appreciate it. Nadia Laval. She is Senior U.S. Equity Strategist, Global Wealth Management at UBS in New York. All right, more just monster numbers being thrown about in this AI game. OpenAI to raise $110 billion in new investment at a $730 million pre-money valuation. Extraordinary amounts of money being raised. All the big names are involved here. I need a little help. We all need a little help here. Caroline Hyde, B-Tech co-anchor, joins us here in our Bloomberg Interactive Broker studio. The hits keep coming, Caroline. I mean, the investments keep coming, and from big names we all know. What do you make of it?
It makes for an interesting relationship of OpenAI and Microsoft going forward, because this is Amazon coming in, which already has a very strong relationship with Anthropic, remember? And we've seen a lot of crossover of big strategic investors and venture capitalists in putting money into both key frontier labs. What's interesting in this agreement is not only the whopping scale of money, 50 billion is going to be coming from Amazon. Now, we don't quite know if that is pure cash or actually whether it's more in cloud costs that just get sucked up by Amazon instead, or indeed whether it's GPUs and chips. But we also think that 30 billion is coming from NVIDIA, so the deepening tie continues there, and clearly therefore some GPUs from NVIDIA are going to be intertwined in OpenAI's compute needs, as well as Amazon's own Trainium chips and the likes. But we're also seeing, well, as well as Masayoshi Son being a big player in all of this, Microsoft being less of a player. And remember, OpenAI first got its big chunk of change from Microsoft. Microsoft was the key backer of the company, had exclusive rights to a lot of OpenAI's technology within the Azure platform. Well, now, the frontier offering coming from OpenAI, that's basically the new offering to help build agents, which is all anyone can talk about at the moment, that's going to be exclusive on AWS.
Oh, wow.
So all of this is just an interesting rearrangement of technology partners and just how people are deepening their ties.
I like your word rearrangement, because we have OpenAI CEO Sam Altman saying that he doesn't think his company's fundraising is looking, quote, circular, as long as revenue keeps going. And I feel like this is a conversation we've been having. It's like the self-funding loop, and is it risky? But he's saying it's not circular.
Well, NVIDIA's had to try and prove this point time and time again. NVIDIA has been putting money into neoclouds like CoreWeave, which had its numbers today, putting money into the likes of an Anthropic and an OpenAI, which ultimately all want chips from NVIDIA. But many would say, look, it's not just circular financing, is actually strategic financing, because how better to understand how your technology works best is if you partner this closely and you can understand the way in which your GPUs, your CPUs will be used in the future. So for the cynics among us, yes, it looks like the same big players are all moving money from one place to the other within each other. But for perhaps the more practical, it's like, well, who else has the cash pile to be able to continue to build the flywheel effect of generative AI here at the moment. And OpenAI has an enormous amount of compute needs. That's what they keep saying time and time again. Sarah Fryer is the CFO, Sam Altman is the CEO, saying the thing that's holding back our revenue, and remember they guided us to a new kind of revenue stratosphere of 280 billion by next year. The way they get there is by compute increasing, not anything else. They've got all the parts they need to build revenue from the 12 billion that they made in 2025. But what they really need is the galvanization of infrastructure, and that comes from power and that comes from compute.
I mean, OpenAI says ChatGPT has more than 900 million weekly active users, more than 50 million consumer subscribers, and more than 9 million paying business users that rely upon ChatGPT. That's deployment. Are they the biggest yet? I'm not even sure how we define the market, but are they the biggest in
consumer for sure? Yes. Like in terms of like the size and scale of people using. The problem is of course Google. How are you measuring Google? Many would say, like, is it the person my mum, who goes onto Google search and gets an AI overview? Or is it someone who downloads the Gemini app and uses it in a distinct kind of model? So there's two ways in which you can compare and contrast. But certainly OpenAI has beaten out Anthropic from how many people are using their standalone application. 900 million is a huge amount. But from an enterprise perspective, many would say Anthropic has led the charge there, and that's why OpenAI has really been doubling down on this agentic focus, and AWS is going to be core to that, putting it within Bedrock.
There's also a headline from Anthropic. They're refusing the Pentagon's latest contract terms. They want to limit surveillance and autonomous weapons. Are those reasonable asks for a company supplying AI to the military?
The military would say no. The military would say Lockheed Martin has no power over us to dictate how we use the weapons. We just purchase them and use. And there are laws that we have to abide by, and there's humanitarian things that we sign up for, and the way in which we police war worldwide. However, from Anthropic's perspective, and if you'd been keeping up with what Dario Amodei, the CEO, has been writing of late, he put out a big piece, thought leadership piece in January, talking about the adolescence of technology and his worries and concerns about geopolitics, the use of generative AI for surveillance, the use of generative AI in biotech and warfare. So no wonder he's still thinking along these lines. He's given us all the breadcrumbs to know that this is how he feels. They just earlier in the week, remember, sort of put out this odd statement saying they're stepping back from some of their safety as a core mission purpose. But within that statement, they really made clear it's because the government doesn't care. The government has not been increasing their focus on AI ethics in the way that they thought they would from a safety perspective.
And it's a $200 million contract.
AI ethics, that's very interesting. You have to, I've heard a lot about that more so recently. Caroline Hyde, BTech co-anchor for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. She and Ed Lullo, they cover the tech space like nobody else, stay on top of what these folks are doing. All right, catch our new show, Bloomberg This Weekend. David Gura, Christina Ruffini, and Lisa Mateo bring you unique conversations and in-depth interviews on news, politics, lifestyle, and culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app Saturdays and Sundays, starting at 7 a.m. Eastern. So from 7 to 10, 3 hours live programming, first time on Bloomberg Television. I think ever, John Tucker, you've been here since the beginning. Live programming on Bloomberg Television. None of the TV networks do that, I don't think.
Oh, well, you know.
There you go.
I actually sat in as the fake guest.
Oh, you did?
To get the
rehearsals?
To set up for the rehearsals.
You're like every man on the street.
I thought I was the best fake guest.
I'm sure you were.
John is every man on the street. That's why they.
That's it. That must be it.
That's how they do it. Sell-off continues here. Where I got the S&P off about 0.7 of 1%. More coming up in just a moment. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Concerns about artificial intelligence bubble resurfacing today with OpenAI raising $110 billion. We also had elevated inflation data earlier today with the producer price index, and then worries over possible military action against Iran and new credit cockroach worries. Financials as a result of that, the worst performing major industry group right now, the S&P 500, with the collapse of MFS. That's the company in London. Consumer staples, best performer, that's home to Walmart. Those shares 2% higher. Best performing stocks in the S&P 500 right now, Block 18% higher, and then Dell Technologies after their results over 18% higher. Meantime, Laura Cooper at Nuveen says it is a stock picker's market out there.
Risk of disruption from AI is really dominating market attention. And I think we're increasingly seeing this as more of a case of choosing those winners from the losers, which can be quite difficult in the current backdrop. But I think that's going to continue to drive some of these bouts of volatility in markets.
Right now, the S&P 500, 45 points lower. That's down 0.7%, 68.64 in the index. The Dow down 582 points. The Nasdaq 114 points lower. That's down just about 0.5%. To the moon, Alice? Well, not just yet. NASA is shaking up its Artemis mission to the moon, canceling a multi-billion-dollar Boeing upgrade to the centerpiece SLS rocket, also slotting in a test flight closer to Earth. The program remains beset by delays and cost overruns. And we check the markets for you all day. Did you get that honeymooners reference?
No.
To the moon?
No.
Too old?
But
they didn't even
well,
know
you got it, right?
But they
didn't even know who Robert Redford was.
I laugh, though, because everything you say, I just laugh.
You look it up. That's what artificial intelligence is for. What did John just mean by saying, anyway, right here on Bloomberg Radio? I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, and we are streaming live on YouTube. And now we're also streaming live at Bloomberg.com. That's where you can find us there. Dell Technology shares, as John mentioned, they jumped pretty big here after the company gave an outlook for sales of its artificial intelligence servers that exceeded estimates. As John said, the stock's up 19.4% today. Not bad for a big company with $97 billion in market cap. Woo Jin Ho joins us here, senior technology analyst for Bloomberg Intelligence. That's a serious print for Dell. What's going on there?
I mean, John just said, look, you're having these massive investments from OAI, right? OAI. So essentially, all of these data center deployments are really starting to materialize, and Dell's starting to benefit from it.
And they're entering the year with a $43 billion backlog. Does that give investors real visibility, or is the backlog vulnerable to supply chain constraints and maybe pricing resets?
Well, that's a fantastic question, right? On the pricing reset, I don't think so. I think there was a little bit of leverage on Dell's side because NVIDIA is holding the cards with the GPU chips, right? But in terms of the supply environment, Dell does the supply chain very, very well. And the revenue guidance, not only for the AI server side, but also traditional servers and PCs, they're managing it a lot better than we thought. So they should be fine on the supply side for the rest of the year.
How big is the AI-related product revenue for Dell, and how has that grown, and what do you expect it to go to?
Well, if we think about just the AI server piece by itself, it is $25 billion for this year, doubling to $50 billion. I mean, we're talking about incredible numbers, doubling to $50 billion next year. We've also seen that sort of momentum from Supermicro as well. They reported a couple of several weeks ago. But on the AI PC front, it is starting to pick up steam. Still a small portion of the business, but quite frankly, every PC is eventually going to be an AI.
So what's an AI PC? What is that practicality?
Yeah, I'll tell you, in practicality, very little for you and I.
Okay.
Right? It's a chip that can handle a lot more processes and do it a lot faster, right? I've actually been playing around with Cloud Code as part of my work, and essentially what I'm doing is trying to use some of the processing that's on the PC. What I suspect is that as corporates try to bring in AI into their workflow, they are going to look specifically for AI PCs going forward.
The company says memory chip prices are rising rapidly. Do you think that the margins in those segments will be sustainable if the component prices also keep climbing?
Yeah, so I think this is one of the reasons why the stock is up so much, right? The sentiment going into the print was really, really negative, primarily because of the component and memory pricing. HP said on just the other day that their memory pricing doubled over the past month, DRAM pricing alone, right? So that ate away at margins. We actually did the math. Memory pricing plus a higher mix of AI servers, that's eating away 100 basis points of gross margin. And the thing is that just the relative scale of the AI server revenues is helping to lift EPS altogether.
So talk to us about the shortage of chips out there, because we hear from a lot of your companies and other companies in the tech stack. What is it? Why is it? And how does it get fixed?
We can blame AI on everything.
Yes.
Right? So essentially, AI servers take, they use HBM, high bandwidth memory that's stacked, and it's sucking up a lot of the memory capacity that's out there. If we come off of the COVID period, essentially, the memory makers, whether it's Micron's, SK Hynix, or Samsung, they were hesitant to building out more capacity because they just didn't know if this AI thing was going to be real. And now it's starting to catch up to them. It's causing this domino effect of everything else. Servers, smartphones, PCs, they're just scrambling for supply right now.
How do you read the buybacks around $10 billion? Is that confidence in future cash flow, or more like, oh no, the stock is still undervalued?
Well, you know, when the stock was at 120, I'm sure Michael Dell thought the stock was undervalued and wanted to breed a lot more confidence, not only in the business outlook, but also in the cash generation, right? We are hearing mixed things on the cash generation front from my hardware companies, at least.
Did IDC take down, IDC is the third-party independent data provider for pretty much the whole technology industry. Did they take down their forecast for PCs, wasn't it?
Took them long enough.
Yeah.
We had minus 7% unit declines.
Is that because there's not enough chips to make the PCs?
It's twofold, right? Not enough chips, and number two, PCs are very, very elastic, right? From a supply-demand perspective. And essentially what they did was they cut their forecast from minus 3% to minus 11% on the PC side. And they also cut their forecast to smartphones to minus 13%.
Oh, right.
Right? There's a couple of things going on. The PC makers are going to focus more on the high margin businesses, right? So it leaves the lower end PCs at a large, so they're not going to start supplying those. And also the low end market tends to be a lot more price sensitive, so they're probably not going to upgrade.
And then we have server and networking margins. I think those came above expectations. Is Dell gaining pricing power in AI hardware, or is it just because maybe they're executing better than their peers? How do you read that?
Yeah, so there's a couple of things going on, Isabel. The first thing is that they're raising prices, right? And the term sheets are getting shorter. Instead of 3 months, it's to 2 weeks. So that's happening as well. It's less price elastic. And then on top of that, from a margin perspective, as you were talking about earlier, storage has a higher margin overall. And the storage business actually is doing very, very well, quite frankly.
Good job. Good day for Dell, that's for sure.
Gotta get a Dell, right?
Yeah, exactly. Stock up 19% here today. Woo Jin Ho, thank you so much. Senior Technology Analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio on an otherwise very tough day out there for the equity markets, with the S&P down 40 points off the lows for sure, off about 0.6%. The Dow's off 600 points, that's 1.2%. And NASDAQ off 160 points, that's 0.7% here. Again, the VIX out above 20. We were at 21 and change. So again, pulling back just a little bit here on the angst. 10-year Treasury yields 3.97%. 30-year mortgage just below 6%. How about that? This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube and at Bloomberg.com. Randall Williams joins us here, U.S. sports business reporter for Bloomberg News. For those of you on YouTube, he's wearing his Yankees hat. I'm also a Yankees fan, but I feel like no matter what we or anybody else in Major League Baseball does, cannot beat the Los Angeles Dodgers, which brings to the forefront, and this is tough for a Yankees fan because we've been called the evil empire and outbidding and outspending everybody for decades. But Randall, the balance of power in Major League Baseball does not exist at all. There's no competitive juices. Does the league need to do something to balance the power, between some of what these teams can spend?
Well, when the MLBPA, the MLB Players Association, and the league go to negotiate a new collective bargaining agreement, there will be, and I'm not mincing my words when I say this, there will be a war about some of these things. About will there be a salary cap? Will there be a minimum spending requirement for some of these teams? Because the reality is there are some teams like the Dodgers, like the Blue Jays, like the Yankees, who are not afraid to spend, and then there are others who don't spend anything at all, and that's created the haves and the have-nots. And if you are the Dodgers, why wouldn't you spend?
Will there be a strike, do you think?
I think I would bet on it. I would be shocked if there wasn't.
Right, and that would be for the 27 season, right?
Correct.
Okay, interesting.
And is this unprecedented?
The baseball has had more strikes than just about anybody, but I think they have had one of the more aggressive unions in all sports. Now, granted, their executive director of their union just resigned after an internal investigation found that he had a relationship with an employee that was not documented, and so the union will enter these negotiations a little bit unstable. Tony Clark was a figure who went to bat with owners, who went to bat for players, and without him, the question is, what is the union going to look like, and how are they going to show up to bat when it's time to go to the negotiating table?
Yeah, work stoppage, that would not be good. It took steroids in that era to bring back baseball, one could argue, from the last strike that generated interest in it. Switch to football, because I know Isabel's a huge football fan here. The Chicago Bears, where are they going to play? I mean, is it Illinois? Is it Indiana? Where are they going to play?
I would bet on the Bears playing in Arlington Heights right now.
I think that's in Illinois. That's their site.
Yes. So years ago, the Bears spent, I believe it's $80 million, maybe a little bit more, on some land in Arlington Heights, and they haven't developed it yet because of a bunch of different reasons. But now, and they've been trying to negotiate with the city of Chicago and the state of Illinois to try to strike some deal. They haven't been able to get it done. So they have conversations with Indiana. Indiana's governor and the local government there say, hey, let's do this right now. They get all these things on the table. That puts pressure back on Illinois. I think that pressure will work, and the Bears will be playing in Arlington Heights at some point when their stadium is constructed.
So I know very little about sports, but will this look weird optically? I mean,
if the Bears played in Indiana, absolutely. I'm from 40 miles west of Chicago in Aurora. And it doesn't matter if it's 5 miles over that state line. The Chicago Bears are one of the oldest teams in the NFL. The idea that the Chicago Bears would now be playing in Indiana and Illinois would not have a state, you got to think, Chicago is still the third or fourth biggest city in America. They don't have a team, or their team would play in Indiana. That's weird. It's different than like New York and the New York Giants and New York Jets playing in Jersey. There's a real land issue here.
Yes.
There is not one in Chicago, but
So how did the Chicago dude become a Yankees fan?
Oh man. Listen, what Chicago sports teams are there to root for when I was coming up? You had
But you're diehard Cubs or White
the
Sox
Cubs, when I was coming up, they did not break that 100-year curse until 2016. And by that point in time, no. The White Sox won in 2005. That was okay. The Bulls had the Ben Gordon era and the Derrick Rose era, but I had left Chicago by the time Derrick Rose had got there. And the Bears just did not have a figure. They just got their franchise quarterback. So I've never been a big Chicago sports fan.
Interesting, because, in Chicago, Isabel, you're probably not aware of this, but particularly for baseball, they have two teams, the White Sox and the Cubs. And depending upon where you live in Chicago, you're a fan of one or the other.
Oh, really?
And I don't understand it. I don't propose to understand it, but it's something, and I respect it.
But neither are good. Neither are good. It's not like the Yankees and the Mets where they have this long-standing history. They're both sorry.
But at least the Cubs have a great
ballpark. 100-year history of losing?
Well, the great ballpark. I love the ballpark. All right, I'll tell you what's a disaster is college sports here. It is the Wild West. President Trump has tapped Florida Governor Ron DeSantis and New York Yankees President Randy Levine to co-lead a council that will explore ways to overhaul college sports. Do they have any remit to do anything, do you think?
I think with Trump chairing this, that there will be dramatic change. You look at some of the names that are on there. Nick Saban is on there. You have Adam Silver is on there. So there are plenty of sports people that are involved in trying to stabilize this thing because of the fact that it has become the Wild Wild West. You're seeing NBA players who have been drafted, who still have eligibility, go back to college to play. You look at Indiana's team. Indiana's team has players who are as old as people who are working here at Bloomberg. I'm talking 25, 26, 27-year-old who are still playing college. That's a problem for college sports. And it's something that the NFL, the NBA, the MLB, and all these other professional leagues want to get under control. But the only way they can do that is with federal power. That's why Trump is chairing it. That's why he's elected, Randy and I can't remember, Ron DeSantis to co-chair this. That's why it's happening.
All right. I hope maybe some change can happen because the NCAA doesn't seem to be able to get anything done. Randall Williams, thank you so much. We appreciate it. Randall Williams, U.S. sports business reporter, Bloomberg News. I suspect at some point before spring training is over, Randall will find his way down to Florida for the Yankees. I'm just guessing here, so we'll see how that plays out. Still some selling out there in the marketplace, folks. We are off the lows, but we have the S&P off 43 points. That's 0.6%. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
And this is Bloomberg Intelligence. Hi there. I'm John Tucker along with Isabel Lee. We're in for Paul and I can't keep track, Isabel. As we close out this whirlwind of a week, the S&P 500, that is set for a monthly loss. 10-year Treasury yield has fallen below 4%. Treasury is once again the place to go and hang out when you want some safety. The data center operator CoreWeave reporting a bigger than expected loss, boosting spending. Bloomberg Intelligence technology analyst Anurag Raga breaks that down for us today. The muni market entering 2026 on firmer footing. John Dillon of Parametric will walk us through that. Priya Misra, fixed income portfolio manager at JP Morgan Asset, will be along to discuss the latest on the markets. And once again, we are on cockroach watch. New worries about credit as London's MFS collapses. Bloomberg's Michael Moore will break that down for us. All straight ahead right here on Bloomberg Intelligence. But first, let's get the market reset, and we do that with Bloomberg's Charlie Pellet. Hey, Charlie.
Hi, thank you very much, John Tucker. And here's what's going on. Off-session lows with the Dow, the S&P, NASDAQ looking at a lot of red as we wrap up the final trading day of the month with the S&P right now down 39, 68.69 where we stand. That is a drop there of 0.6%. We got the industrials, the Dow down 562, down 1.1%. The NASDAQ Composite Index down 0.7% with a 10-year below 4%, 3.97% right now on the 10-year. The 2-year 3.40%. Spot gold up 1%, 52.38 the ounce. Silver up 5.8%, 93.47 the ounce. And West Texas Intermediate crude oil is surging 2.5%, 66.82 a barrel. Bitcoin down 2%, 66,083 on Bitcoin. Paramount beating Netflix in the months-long fight for Warner Brothers Discovery. Paramount Skydance will pay $111 billion for Warner Brothers, outmaneuvering rival Netflix after a months-long battle. BI's Geetha Raghunathan, right here on Bloomberg Intelligence, told us it's a wise move for Netflix.
At the end of the day, they have always been builders versus buyers. And once again, they showed, that they deserved, they've always gained this reputation of being very, very disciplined spenders when it comes to M&A. And I think they once again exercised that discipline, and investors are cheering.
BI's Geetha Raghunathan, indeed, for Netflix. The stock now up by 9.5%. Paramount Skydance is surging 11.8%. The declining name in all of this, Warner Brothers Discovery, down now by just about 1.8%. So again, recapping here, the Dow, the S&P, NASDAQ, all in retreat. S&P down 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. John and Isabel, that is a Bloomberg Business Flash.
Thank you so much for that, Charlie. We appreciate you as always. I'm Isabel Lee alongside John Tucker, which is such a huge honor. And we are joined. It is. It's the highlight of my Friday. And we're joined by Bloomberg's Nora Melinda to look at some stocks on the move today. So, Nora, should we start with Block?
Yes. Looking at shares of Block, that's ticker XYZ. We know that this has really been in focus. This is after the company slashed nearly half of its staff. It's really trying to underscore and really put a lot of money and focus into its bet on artificial intelligence. We've been talking so much about AI, but we're really seeing this company putting it into action as it relates to cutting its workforce, saying that artificial intelligence should be able to really keep the company running efficiently. And clearly shareholders like the news. We're seeing shares of Block up as much as 22% today. This is the best day since 2024.
DJT is the ticker.
Yes.
Donald Trump's family's enterprise. What are they doing?
Well, I'm looking at shares of DJT. They're up just about 0.1% right now, earlier rising as much as almost 1%. And this is after the company said it's in talks to spin off businesses, including Truth Social, into a new public company following its pending merger with TAE Technologies. So we are seeing a bit of activity on the street, but it does seem as though the stock hasn't really had that great of a year, down about 17%. so far for 2026.
So much for that.
And what about CoreWeave? This also is a stock that's moving because of a lot of news today.
Yes, we did see CoreWeave shares earlier plunging as much as 19% for their worst day since August of 2025. This is after the company reported a bigger than expected loss and boosting CapEx. This is really spurring concerns that the company is overspending on infrastructure, which we know has really been the topic as of late. People being really nervous about artificial intelligence, how much these companies are spending on infrastructure. So this seems to really be hitting CoreWeave as we look at the share action today. Shares of the company, though, up about 12% so far this year.
You missed the best part.
Tell me.
Livingston, New Jersey based CoreWeave.
Can't forget that.
Thank you
Thanks,
so
John.
much, Nora. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen.
And we had data today, Isabel, showing producer prices
we did.
rising more than forecast. Also, 10-year yields. I'm looking at it right now, the benchmark. It is at 3.97, breaching 4%. I suspect it's not just the economic data behind that move. Ira Jersey is Bloomberg Intelligence chief U.S. interest rate strategist, joining us now from New Jersey. Producer prices rose, what, 0.5%? How does this inform the Fed's inflation outlook, Ira?
Yeah, so the headline PPI number isn't really what we focus on. We focus on certain components that feed through into the personal consumption expenditure deflator, so the PC deflator that we're going to get in a couple of weeks, talking about for the month of January. Everything's still a little bit behind because of the government shutdown late last year. But for when you look at those figures, it does suggest that CPI is going to remain sticky because things like healthcare services and portfolio management and airfares were reasonably robust in the month of January, and that's going to feed into the idea that that inflation is sticky, and that will give the Fed some pause, right, and continue this pause that they're currently in. Now I do think that eventually goes away. But the data today certainly shows a Fed on pause. Why are we rallying? If that's the question, well, really that's because of the weakness in equities, and the Treasuries have been really defined by this month by the flight to quality bid as equity volatility has increased quite a lot. Treasuries have rallied a bit.
And services costs, Ira, like airfare and physician care, rose sharply. Is this signaling maybe stickier inflation?
Yeah, I think that's exactly right, Isabel. That it does signal that services and these types of services is really what's been driving inflation. If you look at goods, like everyone's been nervous about tariffs increasing inflation and the like, and that just has not been the case at all. In fact, goods prices are still relatively muted. They're still going up, but they're going up a very little bit. It's services prices that are going up, and those are driven in large part by wages. So you look at services, and where I'm working on my monthly outlook today, and one of the things that I noted was if you look at the past year and how many jobs were created, almost all of them were created in healthcare, and not doctors and the like, but it's more the lower wage workers like home healthcare workers and home aides and people in nursing homes. And that's where you see a lot of this inflation, and that came through in today's PPI report.
Hey, this is kind of from left field, but since we're focusing on AI like every second, is AI ultimately something that's going to decrease the rate of inflation because it's a productivity enhancer and everybody's going to get replaced?
Well, that's what I think. I'm not sure that everyone will get replaced. It's more that the people who are employed are going to be more productive, right? That's the productivity enhancement. And whenever you see technological change, you just don't need as many people to do the same amount of work. So this low firing, low hiring environment may persist for some time. But like you saw today with Block and the layoffs because of potential productivity gains. Now, regardless, like that might be company specific. But I think there is the risk here that as AI gets implemented more and more in certain parts of the service sector, that you could see significant job layoffs. Now, part of those job layoffs might result in the people who remain employed getting higher wages. So what ends up happening is you look at the top line numbers and they look okay, But the top line numbers looking okay, I think, is distorted by the fact that you do have these two different camps. This is why people call this the K-shaped economy, and getting more K-shaped, right? If it was lowercase k, maybe now it's uppercase K. And that's because you wind up having, the haves and have-nots, and the haves keep on doing better. There's no way around this until you have this creative destruction that eventually leads to new industries, new jobs, new, it might just be more leisure time, right? All of these things might end up being what happens, but in the interim, you have a disruption. Now, the question is, what is the Fed then going to do? Is the Fed going to cut interest rates because of job losses? Or if the Fed cuts interest rates, is that just going to enhance and speed up the AI implementation, because it's going to lower costs to actually do all of the AI-driven investment? So it's a little bit of a catch-22, I think, for policymakers.
Definitely a catch-22. I'm curious, though, how much are higher duties on imports pushing prices higher?
You did not see that at all in the PPI report, right? So it's I think one of the things that's been happening with a lot of these tariffs is one, there's been substitution. So even if you were if you were importing from a relatively high price country, maybe the quality's better or something like that, and tariffs were put on those, you go to a lower cost country where maybe it's the same tariffs, but because they're lower cost, you've now substituted those prices. Import prices have gone up a little bit, but not a crazy amount. And like I mentioned, at the consumer price level, consumer prices have only gone up a very little bit in the goods sectors. It's all been services that's really been driving consumer prices.
All right, that's about the time we have now, but thank you for your insights as always. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, all the way from Princeton. So, John, we, again, got big earnings yesterday. CoreWeave, and it wasn't good because the stock fell by the most in more than 6 months. That's after the company reported a better than expected loss and boosted capital expenditures. So this spurred some concerns that the company is overspending on infrastructure. And who else can talk to us about this better than Anurag Rana? He's Bloomberg Intelligence Technology Analyst all the way from Chicago. So Anurag, revenue exploded to $1.9 billion last year, but losses widened. Is this a classic growth at any cost when it comes to the AI story, or is it something a little more concerning?
Yeah, I mean, that's what the CEO is saying, that, listen, we have so much back orders of, $60+ billion in orders, and we really need to fill it, and we're going to go spend as much as we can. And today, it seems investors are not liking it. But, I think what happened was they gave a bit of a outlook of what the expenses are going to be, and they missed on that. And I think people are extremely, no, I wouldn't say extremely, but somewhat concerned that, whether they have the capital down the road to keep on continuing this particular flow. I think that's really what it comes down to, is where is the profitability going to come and at what point? Because as we know, some of these businesses, you have to invest up front and then realize the profit later.
Yeah, you got to back up for me and explain the basics. What in God's name is a neo cloud?
Yeah, well, that's just the nomenclature. But at the end of the day, this is just a cloud. What you do is you open a data center, you buy GPUs from NVIDIA, and then you rent it out to people. It's a very simple business model, nothing so complicated about it. But what happens is you need to put that upfront capital to create that data center. Then you need to buy the chips and put it in there. And then after that is what you start realizing the revenue when people use it. We have enough evidence that the backlog of that is absolutely stellar right now. There is so much demand. These guys are running around and trying to, put the data centers together and then go out and service that. So there is a mismatch between how much you're putting in terms of cost versus what's coming in as revenue.
Well, can you explain a little further? How interwoven are they with NVIDIA at this point, and what's the significance of that?
Well, think of this as NVIDIA is selling the chips. They are really the distribution arm for the services around it. NVIDIA is a shareholder in CoreWeave, and this is a pure play, you could say, NVIDIA shop, where it's basically going out and renting their chips out there. Now, it is, and again, this is not so much NVIDIA trying to just, give them capital to stay in business. They actually have orders from everybody, whether it's Microsoft or Meta or a lot of enterprises as well. So even CoreWeave has real orders that it needs to fulfill. The question, again, as I said, is how much you have to put up front for those chips and services versus how much you're going to realize as revenue.
And 77% of revenue came from just 2 customers, with Microsoft accounting for nearly 2/3. How big of a red flag is that, or if it's even a red flag, for IPO investors?
No. Yeah, to me, it's not a red flag. It is a concentration issue. I get that. But at the end of the day, I think Microsoft is good enough in terms of, they will pay the bill to CoreWeave if they have promised some revenue. So I'm not concerned about that part. But CoreWeave is now seeing a lot more demand from other vendors. That's also not an issue. As I said, this is not a demand issue. The question at hand is, because one of the things CoreWeave has to do is it has to go out, borrow money, issue some bonds, and then go out and create new data centers. So it's a financing question, how much the rate of that is going to be, how much they're going to charge for these services. So, I mean, it's pretty much a most of a cost overrun story at this point.
Did they give much clarity on when this is all going to pay off?
They basically said, listen, long-term margins are very good. They are expecting margins to improve in the second half of 2026. But, they gave some guidance for operating income or adjusted operating income for 4Q, and they came below that. So the big question for the analyst is, you are telling me that it's going to improve in the second half of 2026. What if it doesn't happen? So I think there are some doubts around that capabilities at this point.
And so the company could ask for a valuation north of $35 billion in this market. Do you think that's justified by the fundamentals, or do you think it's kind of driven by AI momentum?
I think the question always happens is, 1 week, the entire AI infrastructure world is very happy and, bubbly, and then the next week people start getting concerns. The question, what CoreWeave has to show right now is they have to go out and raise some debt. I mean, that's tied to their contracts. And we'll see what's the cost of that debt, because that's going to dictate how the next funding is going to be, or I call it not so much a funding round, but more so a debt raise round, and how that's going to go about.
And I got to wonder, down 18% today, what are investors missing at this point?
I don't know. I think it's just, Anurag, I think, wants to hop off very quickly, 10 seconds.
Yeah, I think if you look at it, the stock is still up 12% year to date. That's better than a lot of other vendors.
All right, Livingston, New Jersey-based CoreWeave's widening net loss in the fourth quarter, giving some pause. Again, the CoreWeave shares right now 18% lower, one of the most active in today's trading, $79.55 a share. Get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now, the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts. I'm John Tucker, in for Paul Sweeney and Isabel Lee. I guess you're in for Scarlett.
I guess so.
I don't know when they're coming back.
But this is our show, at least for the next 30 minutes. We can do whatever we want, John.
Let's make it our own. You're listening to Bloomberg Intelligence. And just ahead, we'll get a market update with Charlie Pellet. And then we have your favorite segment, The Focus on Munis, our municipal bond watch, right here on Bloomberg Intelligence. Stay with us.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We are off session lows, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. S&P 500 index right now down 41 at 6868, drop there of just about 0.6%. Traders are shunning riskier corners of the market at the end of a turbulent February. We are on track for a losing week for the S&P 500 index right now, looking at a loss this week of roughly 0.5%. Stocks are falling amid a tech slide. The NASDAQ Composite Index down 0.9%. The NASDAQ 100 Index down 0.4. Again, the S&P now lower by 0.6%. The Dow down 502, a decline of 1%. 10-year below 4%, 3.97% now on the 10-year, with a 2-year yielding 3.40%. Spot gold is up $53 the ounce to $52.37, up by 1%. Silver surging 6.2%, $93.75 the ounce on silver. West Texas Intermediate crude up 2.3%, $66.69 a barrel. And Bitcoin now slumping 2.3%, 65,900 on Bitcoin. Dell Technologies shares are surging after the company gave an outlook for sales of its AI servers that exceeded estimates, a sign of robust demand for machines helping fuel the AI data center build-out. The company also said it will generate about $50 billion in AI server revenue in the current fiscal year. Dell shares right now up 19.9% on Dell. Also reporting after the bell last night, we did hear from CoreWeave, that stock plunging by 18.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
And Focus on Munis being brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Time for Munis in Focus. The muni market appears to have entered 2026 on, I'm going to say, firmer footing. John Dillon, fixed income manager at Parametric, is joining us now with a focus on munis. Let me ask you first, though, I'm searching for the best value. Where is the mispricing right now in the muni market? The back end of the curve?
Absolutely. Thanks for having me. Absolutely, hands down, intermediate to long part of the muni curve is best value. It's actually a tale of two markets, if you will. The front end is actually pretty rich inside of 10 years, and the back end outside of 10 to 15 years and back, even out to 25, 30, is quite attractive.
So we had a record supply, but the market absorbed it. We had strong demand from SMAs, which is separately managed accounts, ETFs, mutual funds. Does that tell you that this rally has staying power?
It does. It's been quite a flow coming in from both ETFs and mutual funds, and what we do is separately managed accounts. And what's interesting is if you look at the composition of the inflows lately, and we've seen about 14 weeks or so where it's been almost over $1 billion every week. The composition is in the intermediate to long end, which is interesting. And the SMA flows we're seeing at Parametric are also heavily weighted in the intermediate and longer, which is a switch from about 6 months to a year ago.
So as an investor, I got to sort of think like an insurance company or somebody like that.
Well, that's a big part of it. The insurance companies are primarily the traditional buyer out on that long end, and it leaves that long end a little bit unsponsored. And mom and pop, who drive probably 75-80% of the market, retail investors through funds and SMAs, they like to stay around 10 years and in. So you have SMA managers like ourselves that are pushing out further to 20, 22 years. But then the long duration, I think the market's going to drag people out. And it's not quite cheap enough to get crossover buyers in, but usually that's what brings it down as it cheapens up to a point where you get crossover buyers. So the long end right now is about 90% of treasuries. That's impressive.
Yeah, absolutely. And you're also calling for mid-single-digit total returns this year. Is that mostly income carry or price appreciation as well?
It's a combination of both. The predominant coupon in the muni market is a 5% coupon. So you are getting a decent amount of carry on these. So you're probably getting 3% or so, 2.5%, 3% of coupon clipping, if you will. And then I think you get some appreciation beyond that.
Who are the issuers right now? I mean, talk about issuance. I guess it's all over the place?
It is all over the place. You know, munis are a seasonal market and a local market.
Explain that.
And because of that, you will see ebbs and flows in both supply and demand. Those don't always line up perfectly together, so you'll have imbalances. And the issuers are all over the country. So we had record issuance last year, and we're on track to possibly challenge that again this year. But yet there are states that haven't been issuing a lot, specifically like New Jersey. So we can have a New Jersey portfolio and be looking for New Jersey paper, you know, out on the long end, and in a record amount of issuance, and not be able to find it. So each portfolio is customized, and so you're looking for different kinds of bonds, not just anything. Whereas if you're a Florida investor or Texas, where you can buy national, you can buy all over the country. It's much easier to find.
Yeah, I assume everybody's buying for the tax-free advantage, but you have bonds that don't have that, right?
All the munis do have the federal exemption, you know, and then you go state by state according to the client's residency. But in the front end, like I was saying, it's like two different markets. The front end is pretty rich. So inside of 10 years, we actually have a product that gives you either treasuries or corporates or munis, depending on that individual investor's marginal federal tax bracket. So in 1 year, 2 year, 3 year, it could be a treasury story, whereas a little bit further out, it could turn back into munis.
John, thanks for stopping by the studio today. We appreciate
Absolutely.
it. John Dillon,
My pleasure.
fixed income manager at Parametric, breaking down the municipal market for us today. And being from New Jersey, I can tell you, yes, some of it is richly priced, the muni market in New Jersey. In particular, the bonds that are issued by, for example, the Port Authority. But I won't go into that, Isabel.
I just stick to very boring vanilla investments.
Oh, I don't see that at all.
It's true. Because I feel like in my job, I get to talk to so many smart people, and sometimes they still get it wrong. So, you know, I mean, it just means that you just can't beat the market. Go spy, go voo.
Speaking of which, what did we learn from the collapse of Tricolor and First Brands? Apparently, absolutely nothing, Isabel.
Great segue.
There's a new credit blow-up. Market Financial Solutions, and I have to be careful here because when I say MFS, it's not the one in Massachusetts. We're talking about London here. Market Financial Solutions collapsing in London, and it's also at this point ensnaring some banks. So let's find out more. Michael Moore, the Bloomberg executive editor for finance, he's with us to explain exactly what's happening. What is MFS of London?
Well, MFS was a non-bank lender, did mortgages across, mostly commercial projects, and, was one of these firms that had been kind of filling the gaps where major banks weren't lending and trying to offer these flexible solutions. But it is now entering into the UK form of bankruptcy, and, and all of a sudden there are some allegations of double pledging of collateral, of, irregularities on some of the accounting, and it threatens to become another one of these cockroaches that have spooked the credit markets in the last few months.
So reports suggest that the same collateral was used for multiple loans. How big of a red flag is that?
I mean, it's a major red flag because the banks and lending firms that are offering the financing to this company are counting on that collateral to back them if anything goes wrong. But if they are one of 3 people counting on that collateral, then it can get hairy real quick. And some of the documents coming out today are alleging, you know, an 80% shortfall in some of the collateral here. And those are the types of allegations we saw, as you mentioned, in First Brands and in Tricolor. And so there are some echoes ringing here.
Okay, who's exposed at this point? The banks, and what's the reaction, whether it be in credit default swaps or, I mean, do I measure the reaction with the equity?
Yeah, I mean, we are seeing the stocks drop of some of the banks and investment firms involved here. You're looking at Barclays, Jefferies, Santander, Atlas, which is an arm of Apollo. All of them have some exposure here. You know, we're still reporting out to see who else may be exposed, but they, you know, all have some level of exposure. And we saw stocks drop yesterday on the news of that exposure, partly because of the potential financial hit, but also this fear of yet another cockroach.
Some say these blowups are mostly about bank lending and not private credit. How do you see it? And do you think we're really seeing a pre-crisis setup?
I think, yeah, we have seen kind of these twin fears, you know, like private credit gets a lot of the headlines, but the specific instances we're mentioning have been primarily bank lending and often extending lending to other lenders. So the private credit folks will tell you, hey, don't look at us for the issues, go look at the banks. And these things do pop up from time to time. You do have, you know, frauds. You know, I'm thinking of Steinhoff several years ago. You know, that there are, you know, blowups from time to time, but this is a number of decently large ones into the billions in a matter of months. So I think that's what's giving people pause. And then you have, you know, prominent people like Jamie Dimon out there warning that he sees competitors doing some dumb things.
Like 30 seconds left, but where are the regulators in all this?
It's a good question. You know, they were regulated at least in part by the FCA, and you know, this was a firm that Bloomberg covered a couple of years ago as having some dealings that were raising questions in the market. So this was, you know, kind of a known entity. So that's one of the questions we're asking.
All right, Michael, thank you very much. Michael Moore, Bloomberg Executive Editor for Finance, explaining what happened with MFS in London. And I should point out the financials, the worst performing of the major industry groups in the S&P 500, collectively down 1.9%. You're listening to Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here. Bloomberg, final trading day of the month of February. March, right around the corner. Stock sliding amid a tech slide, elevated inflation data, and geopolitical risks. The Dow, the S&P, NASDAQ, all in the red, but we are off session lows. S&P right now down 42 for the S&P. That is a drop of 0.6%. Right now, we have got the Dow down 1.1%. The Dow is slumping 535 points, while the NASDAQ Composite Index is down 206 on NASDAQ, a decline of 0.9%. The Bloomberg Mag 7 Index down 1.3%. The VIX at just about 20. We have got the 10-year 3.96% with the 2-year 3.39%. Gold up 1%, 52.36 the ounce. Silver up 5.9%, 93.50 the ounce. And West Texas Intermediate crude oil up 2%, 66.48 per barrel of WTI. Bitcoin, meanwhile, down 2.4%, 65,864 on Bitcoin. So stocks are lower. Nadia Lovell is head of global equity strategy at UBS Financial Services. And right here on Bloomberg Intelligence this morning, she told us the market focus now is on the potential disruption from AI spending.
NVIDIA had exceptional earnings, beat and raise, but it did not resolve the issues that the market is having around AI. It's no longer about whether AI spending is strong enough. It's really about how disruptive and capital-intensive AI is becoming.
Nadia Lovell of UBS, she mentioned NVIDIA, the stock now down by 2.4%. OpenAI, meanwhile, has raised $110 billion in a deal that values the startup at $730 billion, representing the ChatGPT maker's largest funding round to date. Amazon, by the way, investing $50 billion in the financing round. Amazon today, little change, down under 0.1%. Jack Dorsey's Block cutting 4,000 employees, reducing its workforce by nearly half in a move that the company describes as a bet on AI, changing the future of labor productivity. And shares of Block XYZ on the ticker, they're up 12.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And John Tucker, Isabel Lee, that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. That was really a great roundup of all the cross-asset moves we're seeing this morning. I want to bring in Priya Misra. She's the fixed income portfolio manager at JP Morgan Asset Management. She's someone who I bug constantly when it comes to my print stories, and now on radio too. She just can't escape me. But Priya, I want to ask about the 10-year. It's around 4% now, despite decent economic data and only slightly hawkish Fed talk. And you think this is about safe haven demand tied to AI disruption and overinvestment. Can you unpack that for us? Why are bonds acting this way? Because it's been a while since we saw that 4 handle.
Sure. Thanks for having me. And you never bug me. You always have great questions. So on the 10-year move, I think it's a combination of things. So number one, I think people had been lulled into this very narrow range. We'd been trading 410 to 425, 430. I think duration risk was just very light in most people's portfolios, with a view that, you've got higher inflation, a Fed that's on hold, maybe a sell America fear at the back of people's minds. So I think this was one of the cases where positioning was just not at all light. In fact, I would argue majority of investors might have been a little short duration. They were taking on risk either in the form of equities or credit risk. And I think what's happened in the last few weeks is there's a focus on maybe we should have more balanced portfolios. If we're talking about AI disruption on the labor market, we're not seeing the data yet. I know there's headlines, but you look at initial claims or payrolls. We're going to get a very important payroll report next week. But the fundamentals, we're going to be talking about AI disruption on the labor market for a long time. I don't think that's really in the market. I think this is a case of investors saying maybe we need a liquid, and treasuries are the most liquid asset class. We need a liquid asset, and we need an asset that does not have credit risk. I think that's what's brought us here. I mean, it's been a big move. I don't think we're necessarily at the end of it. I think treasuries as a diversifier, that's the role they play in portfolios. Fixed income, though, I will say, if the word in equities is dispersion, the word in fixed income is resilience. Even credit spreads are doing they're barely wider. and rates have fallen. So I think that's people looking for balance and diversification in portfolios.
Does your boss have a cockroach index, and what does it indicate right now? How worried are you?
You know, that's, yeah, great point. I mean, cockroaches, end of business cycles, they exist. And our job as, portfolio managers is to make sure we minimize them. I mean, is it in one part of the market versus another? I think that's the tricky part. We go back to fundamentals. And this is why having a research team that's looking at business models, that's looking at balance sheets becomes extremely important. You have to read through the docs to make sure you know what collateral you own, what structure you own. I mean, are there cockroaches? There are probably cockroaches out there. I don't see, from a macro standpoint, any sector that is really over-levered. I mean, there's been a lot of AI investment, but we're talking about how transformational this is going to be. So I don't know if there's a sector I would shun away from. Are there borrowers? And that's what we have to do the work and make sure we own the borrowers that we want to lend our capital to, and reduce those. It's a generic answer, but I think that it's telling you the importance of doing your credit work and, not just buying any credit or not necessarily being in a passive index either.
Well, I guess I'm specifically looking, and, God help me for using the word idiosyncratic, but with MFS in London, is that idiosyncratic? Should we have seen this coming? Does it infect others?
Given how tight credit spreads were and the amount of liquidity in the system, in capital chasing returns, I mean, Jamie Dimon did say, are people doing dumb things, or, do you have fraud? We've seen it before. This would not be the first time. I mean, I go back to Enron, WorldCom. Remember, those were very big corporate fraud. Do you have some sort of structural issue? I think late in the credit cycle, when spreads are tight, I think it becomes a risk we've been mindful of. And there have been sectors where we've said we're not getting paid up enough to take that risk. I would still say it's idiosyncratic when we're looking at the macro data. We're not seeing defaults pick up. Can there be a few cases of this? Absolutely. I think we just want to make sure that you're diversified enough that even if you do have these cockroaches, they're not big enough to sort of, take spreads much wider or to have big losses. I think that's why portfolio construction is very important. But yeah, I mean, late in the credit cycle when spreads are tight, I think the chance of seeing this is higher. And I think that's why we saw Tricolor and First Brands and now this. I'm sure this is not the last one. There'll be more, but we just need to be really careful to not own them or reduce the amount that we own of these.
We were just talking about that, like maybe why didn't markets and investors learn their lessons? But Priya, I want to pivot to the Fed. You expect 2 rate cuts later this year based on slow labor market gains and disinflation. How confident are you that the Fed will actually move given a divided FOMC?
Yeah, so great question, because we also have a change at the Fed leadership. And we've heard some investors say that that itself should result in rate cuts. No, I think the Fed is independent, credible, and vocal. And to your point, they're divided right now. So given the data that we have right now, I don't see imminent rate cuts. Now, this could change. In a week, we have the payroll report, and if you get a really poor payroll number and initial claims suggest that layoffs are picking up, I think they could absolutely cut. I think they're divided today, given the data that we have. But if you do see a quick slowing in the labor market, I think they'll be all on board and they'll be agreeing to cut, or a big decline in inflation. In our base case, where the low hire, low fire labor market continues, the unemployment rate only increases slightly. So that would justify maybe 1 rate cut later this year. And then on the inflation front, we do see signs, and that's what the data has not yet shown it, but the underlying, the guts of inflation, and today's report was also strong, but you look at shelter inflation, wage inflation, we're thinking inflation is going to allow for another rate cut. But I think the Fed will want to see data on this. I think there are many on the Fed that don't want to just base it on a forecast. They want to see it in the data. That's when the other rate cut would happen. So our rate cut call is a little further down in this, later this year.
Thanks, Priya. Good to see you again. Priya Misra, fixed income portfolio manager at JP Morgan Asset Management. You're listening to Bloomberg Intelligence. Right now, the major averages all lower. Dow down 624. The S&P 500 down 47. The NASDAQ 100, 139 points lower.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
And I'm John Tucker along with Isabel Lee. This is Bloomberg Intelligence. I was planning on painting my bathroom this weekend.
What color? Pink?
I was thinking like a grayish cloud gray. But you know what?
Pastel.
I think I'm going to have to... What's wrong with that color? I may have to put that on hold. You were planning on doing your pottery class, I think.
Yes, but you can paint and watch TV, and I can do my pottery and watch TV.
Or listen to the radio because it's on multiple formats. We are talking about a new live radio and TV show, Bloomberg, this weekend. It's going to look beyond the daily headlines to bigger themes, driving politics, business,
we've got it all,
and culture. And one of the hosts, along with David Gura and Christina Ruffini, is our own Lisa Mateo. I haven't seen her this excited since they put out the new potato chips upstairs.
I'm excited. Lisa, tell us, what is the show going to be like at 7 to 10 a.m.? What should people expect?
Oh, it's great. And you nailed it right off the bat because it's a show that you can take with you wherever you are because the weekends brings you different places, right? You're going to the market, you're going to the store, you're painting your bathroom, whatever you're deciding to do. You can watch us on TV. You can listen on the Bloomberg Business app. You can watch on the terminal. You can listen stream us as well. So there's so many different options. And we're going to have a variety of different things. It's like we like to say, it's a look back at some of the stories you might have missed, but the big thing is it's a look forward, right? Because the markets are closed, yes, but the thing is the news doesn't stop. I mean, it continues throughout the weekend. So now in Bloomberg, we have you covered with live coverage 7 days a week. This will take you through Saturday and it'll take you through Sunday, 7 to 10 a.m. And we're just excited. I'm going to bring you some news. We do have a guest that we can announce if you guys promise not to tell anybody.
Okay, we promise we won't. Just everyone who's listening right now.
House Minority Leader Hakeem Jeffries.
Oh, wow.
It's going to be one of our
Big
first
name.
guests. So we're excited about that, excited about the different executives we get to bring into the show, too. We have a C-suite segment. We'll bring in different executives from different companies to talk about whether it's their leadership style or whether it's future trends or what trends they're seeing in the certain business that they're in. But it's really good conversations, politics, culture, like you said, lifestyle, everything all wrapped up in one.
Oh, that's great, because I was going to ask if it's just politics and business, but then I like that there's culture and lifestyle, too, to give our brains a little bit of a rest during the weekend.
I don't think a lot of people know the extent to which Bloomberg News has bureaus across the world and the size of it. And how many times we come in on a Monday morning, you and I, and we're like, oh my God, look what happened over the weekend.
Yes.
We've always got it covered because we have
100%.
I would say the largest news organization in the world.
Half of Asia and Europe already did.
And you're going to tap into that.
And we're tapping into it. All our analysts, all our journalists, 3,000 around the world. And to dig deeper into some of these stories and give you some extended conversations with them. Because, the news doesn't stop. And it's also other experts, from different places as well. But we bring you in the best of Bloomberg because, Bloomberg Originals, Odd Lots, all these different shows, too, from Bloomberg. And we get to highlight those again, which is nice.
I'm not sure if I'm allowed to say this, but I saw the set and it looked very nice. So if you're just listening on radio, try tuning on TV.
I had some suggestions.
Oh, here we go.
Didn't follow it. I wanted a fireplace.
You were the fireplace.
You were the
come
best
through.
trial guest, right? I'm sure.
Yes, I was. I was one
He
of
was
the
the best
fake
trial.
guests.
Yes.
You could have picked with the furniture, but we do have a nice soft seating area too. So if we have guests, we want to sit down and have a nice intimate conversation. I mean, think about it. People are home. You're having your coffee. You're having your breakfast. Whatever you're doing, sit down with us too, and feel like you're at home. And that's what it is. We have podcast mics kind of set up in just a nice, relaxed setting. Of course, we have our news anchor desk too, but we also have that option. So it's nice.
Well, I think I mistakenly said the markets may pause for the week. It's there are things that are trading over the weekend as well.
Bitcoin, yes. You have prediction markets sometimes you can look at too. There's so much, and who knows with everything else going on. It's nice to know that we're there, and we have you covered in case anything breaks. I mean, the news lately, all the headlines, you guys know, you talk about it, things that could possibly happen into the weekend. We're there, and we got you covered.
That's amazing. Will it have a replay?
Yes, because Bloomberg has the streaming, the new digital platform that they have.
Great.
So you can find it there as well afterwards. And we have some of we'll have some of the top moments from there, top highlights. And we're really excited about it. Just, David Gura, Christina Ruffini, myself. And, we'll bring a couple laughs sometimes too. Yes. It's not always so serious because they're great personalities. And the chemistry is really fun.
I'm so excited.
Yeah. Well, I'm going to say that it's going to be must watch and must listen to set you up for the trading day that comes on Monday, because so much of what you guys do and what you see and what breaks over the weekend informs what we do for our coverage on Monday mornings.
So you're going to be listening, John Tucker?
Of course.
While
painting and watching
at the same time. Ambidextrous John. Lisa Mateo, thanks for stopping by. Appreciate it. I can't wait. We're very excited for it. So do catch our new show, Bloomberg This Weekend. David Gura, Christina Ruffini, our own Lisa Mateo in studio, bringing you unique conversations and in-depth interviews on news, politics, lifestyle, and culture. And yes, watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app, Saturdays and Sundays starting at 7 a.m. Eastern. And for our listeners in the U.S., also a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121, presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories, global business headlines are coming up. And right now, the S&P 500, 43 points lower, down 0.6%, 68.65. The Dow continues its sell-off, down 623 points. The NASDAQ 100 down 105 points. And for Isabel Lee, I'm John Tucker.
This is CBS News on the Hour, your home for original reporting.
I'm Stacey Lynn. Bill Clinton's in for a long afternoon of testimony as lawmakers question the former president about his ties to Jeffrey Epstein. Republican Congressman James Comer on what to expect.
Jeffrey Epstein was in the White House 17 times while Bill Clinton was president. We know that Bill Clinton flew on Jeffrey Epstein's plane at least 27 times. So those are questions that we're going to ask.
CBS's Nicole Killian with more on why the former president is being probed.
Recently released Epstein files show photos of Clinton with Epstein, as well as some unnamed women and flight logs that show that Clinton had flown on Epstein's private plane.
As a U.S. military buildup in Iran grows, correspondent Charlie D'Agata tells us Secretary of State Marco Rubio is traveling to Israel on Monday for talks on the tensions in the region.
Even as the next round of talks are scheduled to take place next week in Vienna, and those are described as technical talks over the details of the plan, even more U.S. military hardware is headed on the way here. Now, we're expecting the arrival of the largest aircraft carrier in the world. That's a Gerald R. Ford.
In a deal with the Pentagon, Scouting America's agreed to drop all DEI initiatives. Defense Secretary Pete Hegseth on the changes from the group formerly known as the Boy Scouts.
This includes reviewing and replacing politicized, divisive, and discriminatory language throughout the organization, programs, and all publications. No more DEI, zero.
Big announcement from NASA this morning.
NASA Administrator Jared Isaacman says Artemis 3 will no longer fly astronauts to the moon in 2027.
We will endeavor to rendezvous in low Earth orbit with one or both of our lunar landers.
And then
Artemis 4 and Artemis 5, we will endeavor to have 2 opportunities in 2028 to attempt a landing.
Isaacman says it's too big of a gap to go from the planned moon flyby right to a landing on Luna. Allison Keyes, CBS News, Washington.
A woman convicted of sneaking on a flight from New York to Paris in 2024 has allegedly done it again. Sources say this time she slipped past security at Newark Airport and boarded a United Airlines flight to Milan, again without a ticket or passport. CBS's Chris Van Cleve on what's next for the serial stowaway Svetlana Dali.
Once Italian authorities determine whether or not she'll face charges there locally in Italy, United will be required to return her to the U.S., where she will likely be hit with more criminal charges back here in the United States.
Wall Street taking a turn for the worse after a new economic report on inflation. Markets are all in the red. The Dow's down 580 points. This is CBS News. Some healthy changes for breakfast.
Attention Target shoppers. You won't be able to find artificial coloring in the cereal aisle come June. The chain says 100% of the cereal it sells will be made from products without certified synthetic colors by the end of May. It's already ditched all but 15%. The new announcement may shut out Lucky Charms and others for a while. General Mills isn't expected to eliminate artificial colors until the end of the year. Walmart has said it will remove synthetic dyes from its private label foods by 2027 as companies respond to Health Secretary Kennedy's crackdown on ultra-processed foods and additives. Deborah Rodriguez, CBS News.
It's almost grilling season, and Weber's recalling more than 3.2 million metal wire bristle grill brushes because of a serious safety risk. The U.S. Consumer Product Safety Commission says the tiny wire bristles can break off, stick to food, and you could swallow them. Stacey Lynn.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The guardrails for AI are still in place at the Pentagon. Welcome to the Friday edition as Anthropic stands by its principles in a standoff with the Department of Defense, which could hurt the company's business in the end. We're going to get the latest on this from Bloomberg Washington correspondent Tyler Kendall, who's at the White House, with insights from Mike Shepard, our senior editor for tech and strategic industries. Will the U.S. strike Iran this weekend? We'll ask Colonel Wayne Sanders at Bloomberg Intelligence, and we'll head to the Lone Star State ahead of Tuesday's Texas primary with analysis from our political panel. It's all after a look at Wall Street. We start right now live from World Headquarters in New York with Charlie Pellet and the Friday Trade. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Great having you back in New York. New York, we've got the Dow, the S&P, NASDAQ all very much in the red right now. Key takeaway off session lows. Right now we are looking at a loss of just about 36 points on the S&P. We're down 0.5%. Dow Industrials down 1.2%. NASDAQ down 0.8%. The NASDAQ 100 index down by 0.3%. The VIX right around 20 with a 10-year 3.97%. We'll say it again, 3.97%, falling below 4%. The 2-year 3.40%. Gold is up $46 the ounce, up by about 0.9%. Silver surging 5.7% now to 93.37 the ounce. And West Texas Intermediate crude up on global tensions, up by about 2.2% right now at 66.63 a barrel on WTI. And Bitcoin down 2.8%, 65,500 on Bitcoin. Bottom line here, traders are shunning riskier corners of the market at the end of a turbulent February, on track for a losing month. Savita Subramanian is head of U.S. equity and quantitative strategy at BofA Securities. She's got a year-end target on the S&P 500 of 7,100.
A lot of the curveballs are, we think, behind us, like when it comes to tariffs, when it comes to policy. Ahead of us, we just have, an environment where companies are incented to spend more money. We've got the Big Beautiful Bill Act. We have a lot more certainty around tax reform. We kind of know what the next few years look like.
BofA's Savita Subramanian interviewed on surveillance. Netflix has dropped out of the fight to buy Warner Brothers Discovery, clearing the way for rival bidder Paramount Skydance to clinch its $111 billion deal for the historic Hollywood studio. Shares of Paramount Skydance, they are now surging by 19.8%. Netflix up 10.6%. Warner Brothers Discovery, the target in all of this, down 1.9%. Recapping, S&P down 0.5%. The VIX at 20. We've got the 10-year 3.97%. That Joe Matthew again. Welcome to New York.
Nice to see you.
Bloomberg Business Flash.
Sharing the same studio, which is always a thrill, here in the Fishbowl at World Headquarters in New York, known affectionately to some as the Fishbowl. I'm Joe Matthew. Great to see you. Welcome to Friday. You made it to the threshold of the weekend, and we've got a lot to talk about today. We're going to be talking about Iran, of course, with the prospect for military strikes at any moment, unless, of course, this whole thing is just about leverage for the negotiating table, with another session set for next week. And we're going to get into this standoff with Anthropic. A lot of news coming out of the Department of Defense, or war, as the president likes to call it. New Iran talks set for next week as U.S. builds up forces. The headline on the terminal. But again, we've heard before, and if you go back to the first round of strikes against Iran last year, there was a timeline set that the president broke in that case because, well, obviously you're not going to telegraph your moves. So anything could happen with all of the ships, with the carrier battle groups suddenly in position. It's a story that we're following very closely here on Bloomberg Radio, streaming live on YouTube. Right now you can find us, search Bloomberg Business News Live, because we're going to bring you to the north lawn of the White House. And Bloomberg Washington correspondent Tyler Kendall, who's got her eyes on both of these stories. Tyler, it's great to see you, and of course, welcome back. As I stare down the line at you from New York City, tell us what the conversation is about Iran inside the White House today.
Well, Joe, there's a few recent headlines that could potentially complicate these ongoing talks between the U.S. and Iran, including that Bloomberg News is now reporting that Iran is conducting regular and unexplained activity at the uranium enrichment sites that were bombed last summer. This is according to UN atomic inspectors who have been blocked from examining these sites since Operation Midnight Hammer last June. And this could really be a new wrinkle into this. As you mentioned, it has been confirmed that we are expecting that next round of talks to continue next week. However, people familiar with Washington's position tell us here at Bloomberg News that Special Envoy Steve Witkoff and the president's son-in-law, Jared Kushner, emerged yesterday from the third round of talks in Geneva disappointed with the progress that was made. So these are all the factors that we're watching here as the White House maintains that diplomacy is the top choice, but still has not taken off the table the potential for military action. And we know that there are different differences between the U.S. and Iran, that at this point it is unclear what could ultimately be agreed to avoid a military strike and pursue that path of diplomacy. We know that at the moment these talks are only focused on Iran's nuclear program, but there are disagreements about how much domestic enrichment capacity Iran should be allowed to have, as well as what should happen to the highly enriched uranium that it already has in its possession. But then, Joe, as you well know, the U.S. wants these other critical items to be on the agenda, including Iran's ballistic missile program, as well as its support for proxy militia groups in the region. And I don't need to tell you that President Trump could really follow through on his threats, as we have seen this massive buildup of U.S. military assets in the region. And then another new headline overnight is that the U.S. decided to evacuate its non-emergency government personnel from the U.S. Embassy in Israel. So that is something that we are going to be watching very closely, as the State Department confirms that Secretary of State Marco Rubio will visit Israel next Monday and Tuesday.
Boy, really interesting. We've got a lot to keep our eyes on here, as you just outlined, Tyler. And I want to ask you about the other story that's coming out of the Pentagon right now. It doesn't have to do with war, at least not yet. This has to do with Anthropic and the potential use of its AI technology in a wartime setting. Anthropic last evening, as you heard live on Balance of Power, rejected the latest offer by the Pentagon in a dispute over safeguards, the guardrails around the use of AI when it comes to, in particular, autonomous weaponry. We heard from Emil Michael just earlier today at Anthropic, who had this to say.
We've been negotiating in good faith on the Department of War side for about 3 months. And we're working pretty diligently, and we sent over a proposal that we thought made a lot of concessions to the language that Anthropic wanted, and then, without any notice, they published an article where we thought we were getting close, saying that they were breaking off talks well before the deadline, which is generally not good partner-oriented practice, if you will.
Michael is, in fact, the Undersecretary of Defense for Research and Engineering. That was the Pentagon line that you were just hearing there. Tyler, is there another deadline? Is this going to evolve, or has the battle been fought?
Well, the Undersecretary's remarks to our colleagues this morning on Bloomberg Television did appear to open the possibility that negotiations aren't totally off the rails ahead of tonight's 5:01 p.m. Eastern deadline. But we've really seen the rhetoric between the government and Anthropic escalate in the last 24 hours, as Anthropic has said that there has been, quote, virtually no progress made on its demand for these safeguards related to the military using its AI tools. As you all know, those two safeguards that they're seeking are a prohibition on its technology being used, one for mass surveillance of Americans, and two in any tech involving autonomous weapons. And the Pentagon says that they don't want to use the technology for these uses and maintains that they will use the tech as it goes along with federal law. They just don't want to have predetermined restrictions put on them. And that's really what's opened up essentially this huge fissure. And Joe, there are two huge threats now on the table from the Pentagon. One is that Anthropic could be deemed a supply chain risk, which essentially would mean that the company's products would not be allowed to be used by other military contractors. This is an escalation that is typically reserved for U.S. adversaries like China.
Yeah, Tyler, thank you. Live from the White House, Bloomberg's Tyler Kendall, as we add the voice of Mike Shepard. He's been covering this heavily, the Anthropic story, our senior editor for technology and strategic industries, with a great understanding of this inflection point that we're in right now. These are the decisions that are going to inform and qualify the use of artificial intelligence potentially for years. Mike, it's great to see you. Is Anthropic now going to be deemed a supply chain risk?
Well, that really is the question we're going to learn the answer to come 5 p.m. Defense Secretary Pete Hegseth will be the one making that call. We heard that from Undersecretary Emil Michael during that BTV interview. And Michael has been the person shaping the AI strategy for the Pentagon, which really wants to accelerate its adoption of the technology and turn the military into an AI-first fighting force. They've set some very aggressive deadlines for themselves to meet in terms of that integration. And Anthropic was set to play a key role in all of that, Joe. Their platform, Claude, was the first AI tool that was cleared for classified use, and it's won widespread praise within the Pentagon for its ease of use and for its adaptability. And so this really puts the Pentagon in a way not only at odds with the company, but potentially at odds with some of its own goals as well.
Yeah, wow. 5:01 p.m. Do we expect news, Shep, or that may or may not be the case today as the company continues talks?
Joe, they have made clear all along that it was almost like an OK Corral moment, like 5:00 p.m., see you at sun. If you're not out of town by sundown, we will lower the boom. The question, though, is will they find a way or an opening at least to either continue negotiations or make just enough of a concession from one side or the other to try to diffuse this, because each has a lot riding on it. It's not just Anthropic's business, but as I said, Joe, the Pentagon really is on the march with this desire to adopt AI, and Anthropic is important to that. So they each have an incentive to try to reach some sort of a deal, but really we are seeing, though, this clash of visions and this unwillingness to yield ground on this last bit of a final point and how it is interpreted and expressed. And the company has really said that the latest proposal from the Pentagon, the contract language that they saw on Wednesday, still did not satisfy their terms, and they were concerned from the company point of view that it would still leave a back door for potential mass surveillance or potential fully autonomous weaponry without the company's okay.
Shep, we're just about out of time, but just to be clear, if Anthropic, in fact, loses its contract with the DoD and this whole thing is unwound, does Dario Amodei end up being a folk hero among technologists?
Well, if you go by the voices on X and a few other places, and certainly many rank and file in Silicon Valley and in the AI industry, they're applauding him for this stand because he has articulated this and he is not really wavering from the views that he has long expounded on when it comes to AI and all the safety measures. They are, after all, the safety branded AI platform.
Really fascinating stuff, and you've been just great this week helping us follow the beat. Mike Shepard live in Washington, D.C. I'm Joe Matthew in New York. We're going to talk to Colonel Sanders next about what's going on in Iran. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. A leg lower in the past few minutes for the S&P 500 index. Right to the numbers here. We got fast-moving markets as we wrap up a losing week and a losing month. S&P right now back down by 53 points. Drop there of 0.8%. The Dow now down 713. Decline of 1.4%. Nasdaq is down 251. Drop there of 1.1% with the VIX above 20. The 10-year 3.97%. The 2-year 3.40%. Spot gold is at $52.29 the ounce, up by about 0.9%. Silver up 5.6%, and Bitcoin now lower by 3.2%, 65,300. 101 on Bitcoin. Dell surging after the company gave an outlook for sales of its AI intelligence servers that exceeded estimates. It's a sign of robust demand for machines helping fuel the AI data center build-out. Dell shares, they're up now by 21%. Also out with earnings last night, but heading in the other direction, CoreWeave, that stock right now down by 19.4%. Again, recapping, the Dow, the S&P, NASDAQ, all in the red. Leg lower right now on the S&P at 68.50, down 0.9%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Balance of Power. He's here in New York. Once again, your host, here he is, Joe Matthew.
Just to see you, Charlie Pellet, and it's going to be great to have Charlie with us for the course of the program in person, well, at least for me, and it's not always that I get to share a studio, with the voice of Wall Street in the New York subway. Charlie will be back in about 20 minutes with the latest read on the Friday trade. It's pretty ugly, huh? Boy, everybody's in a bad mood around here. Dow's down 750. Bitcoin back to 65. We've got news, by the way. This is important. I didn't have a chance to mention it when we were talking to Shep. The Trump administration is apparently still working with Democrats to fund the Department of Homeland Security. We were starting to get the sense that this thing was on ice maybe for the rest of the year, and it could be, remembering that we have one agency still shut down over the argument involving ICE. And it's ironic because ICE is funded through the big, beautiful bill. You've heard us go through this before. We're talking about FEMA, the Coast Guard, the TSA, not getting paid. The Trump administration, according to Politico, sent a new DHS funding offer to Democrats. It happened on Thursday, yesterday, when we saw a number of senators, including Katie Britt, Lindsey Graham, showing up at the White House. So we get maybe a better sense of what they were talking about. But this is a very important development here. If we want to have a fully funded and functioning government, maybe there's still a chance. We're, of course, waiting to find out what's about to happen in Iran. We talked about it a little bit with Tyler Kendall, and we're going to dig into this for real now with Colonel Sanders, who's been watching very closely at not only this military buildup, the timeline around it, but exactly what hardware is going to what location. And when you talk to an expert like Colonel Sanders, it's really interesting to hear some of the ideas that we can draw from that, maybe some of the things that we can expect, the way that the administration is handling this in the public sphere. We talked about the whole idea of strikes and the potential for war powers resolutions clearing Congress with Congressman Jake Auchincloss, the Democrat from Massachusetts, a Marine Corps combat veteran who served in Afghanistan as well as in Panama, for that matter, had pretty strong feelings about it. Here's what he said.
If the president wants to engage in coercive diplomacy against Iran in order to prevent it from acquiring a nuclear weapon, ballistic missiles, or to continue funding of proxy terror forces, I think that's appropriate, and I support that coercive diplomacy. But if he thinks he's going to use American warplanes to conduct an aerial strike, he needs Congress to say so.
Not that the drive to bring a War Powers Act to the floor has been terribly successful here, and Republicans are not likely to support it, but the move is in place. And we have news now that CENTCOM leader Admiral Brad Cooper briefed the President of the United States yesterday about possible strike options. They're going to regroup again next week for talks, but the White House is doing both at once. Let's bring in the Colonel. Wayne Sanders, Bloomberg Intelligence Senior Defense Research Analyst, U.S. Army retired. Colonel, it's great to see you. Welcome back. I'm wondering what has your attention, including this batch of F-22s that was deployed to Israel. What are your thoughts today as we go into a weekend where we could see potentially strikes against Iran?
Thanks, Joe. Thanks for having me. We talked a little bit yesterday about it. One of the biggest things that I think is interesting is everything that came up for Operation Midnight Hammer and other issues with Iran was there wasn't a whole lot of choreography. There wasn't anything that was showing the U.S.'s hand beforehand. We kind of woke up and were surprised when there was a strike that actually took place and how it was done. This obviously has been very, very choreographed. There are over 150 U.S. aircrafts in that area, largest since pre-Iraq war. The F-22s, F-15s, F-16s, and others, as well as KC-46 tankers and KC-135s. Why is that important? Where I look at it from the aircraft piece first is that F-22s are what's called a SEAD aircraft. It's suppression of enemy air defense. It's a first night strike capability. It's not like a bomber. You're not carrying super heavy loads, and you're not trying to drop the GBU-57 bombs that were used in Midnight Hammer in this type of strike. These are the ones that you use to actually clear out enemy air defense. These are going after, if they were used, they're going to be the ones that are using are going after the launchers for a lot of Iran's air defense capability. I look at the F-15s, which are a deep precision strike capability for air superiority in the region. And then you have the F-16s for close air support to deal with proxy forces. So just from an aircraft perspective alone, you have a much different footprint and a definitely different message that's coming forward just based off of the aircraft that were chosen that are out in that space right now compared to before.
Really interesting. It's been asked a lot of times, and everyone wants to be an expert on this. Colonel, you actually know what you're talking about. The fact that this much hardware has been gathered in one place. The question is, would you go to that length without using it? Does Donald Trump need to do something? There's been reporting on a potential bloody nose strike, for instance. The elements are in place for that if he wants to do it. But how do you see, based on the actions of this administration in the past, the sort of public nature of this buildup and the long run-up to what could be strikes? Is the administration trying to increase its leverage at the table, or is it preparing to use this big stick?
It's a great question, because the big question everybody asks, this is a pretty expensive bluff, if not being used. However, if it brings Iran back for the nuclear material as they're going forward, as well as the missile conversation, right? That's one of the biggest pieces that I think really has the U.S. concerned from a security perspective. Obviously, the nuclear as well. But the delivery systems are going to be through those missile systems, and if they combine that with nuclear proliferation into the delivery, which can reach all of the Middle East, these are some of the concerns that you have if we're going to just allow them to continue to have these Fatah and Shahed missile systems, in that area that can deliver that, as we've seen in the Iran-Israel conflict as well. It's one of the reasons why I believe that the aircraft carriers are over there as well, right? So you're looking at a great amount of air and missile defense capability with the Aegis systems on those Navy platforms that are out there. Super, super important to be able to protect everything from Al-Udeid to Bahrain, the troop movement that are out there. They're in Bahrain, UAE, Al-Dhafra, Kuwait, Saudi Arabia. All of these are already out there ready to go. And some of the regional forces are also looking at it as well. Saudi Arabia has already told the U.S. they can't use their airspace for strikes, because they don't want to have to deal with Iranian retaliation in those as well. So these are some of the areas. But having the amount of naval power that's out there can still be 60 to 70 sorties per day, available 24/7 from that fire capability. That is a very expensive move. But if it actually gets them to the table to talk about removing some of the Iranian missile capabilities that they have, then maybe the bluff is actually worth it.
Wow, really? Let's talk about expensive for a minute, Colonel. You put this much hardware in one place. We're not just floating around in the Indian Ocean or in the Mediterranean. What does it cost, just without firing a missile, to keep this size flotilla, this size deployment in theater on a daily basis?
Yeah, I looked up some reporting on a carrier strike group costing somewhere between $12 to $16 million a day to be able to operate. So now, not only on top of that, you're talking about 2 aircraft carriers, 12 guided missile destroyers, 3 littoral combat ships at a minimum, and that's not including what I believe is there's probably obviously some Virginia-class submarines in the area as well. So you are talking about a significant cost to be able to do that. But if it stops nuclear proliferation in Iran, if it stops their ability to deliver additional capability with a potential nuclear warhead on some of these delivery mechanisms, then, at the end of the day, national security as well as global security may end up being a piece of this. Wow. But it does come at a very high cost.
So you're talking $30 million a day on gas, basically, is what we're...
Yeah, for being able to pay your folks, be able to do your flights for overflights. You're probably looking at air superiority as well. So not only the ships, but then also the aircraft, and then you got to pay all the the sailors, airmen, Marine, and soldiers that are out there.
So that's pay as well as gassing up the boats and the jets. That's staggering. I'm not sure I've ever heard a number like that before. Colonel, we just got some news from the president. He's on his way to Texas today, so he's with some reporters. He said he's not made a decision on Iran. We're running headlines on the terminal right now. He says he is not happy with how they negotiate, and went on to talk about Cuba separately here. What does that tell you when the commander-in-chief is speaking in that regard with such a massive amount of hardware at the ready?
Yeah, I think you probably would, based off of him not being happy with where they're at right now. You do have Secretary Rubio going to Israel on Monday. So if I were to see something over the weekend, I think that he's done this before as well, right? Hey, I'm not exactly sure what I'm going to do yet, and then choreograph something else, right? So I think this could be one of those areas. I would expect it to be a limited strike. I don't think this would be something too big right now, because I think what he's trying to do is gain additional leverage for when Secretary Rubio arrives. I think that might be one of it. But yeah, when you look at Iran, reduced IAEA access to the area, stockpiles are being questioned, different reports on hardening of the underground, as well as 60% fissile material for nuclear weapons. You put all those pieces together, that's a lot of uncertainty to go unchecked, in an area where, okay, if you're truly, as Iran, are trying to reach some type of peace agreement, then they need to be a little more clear on what they're doing.
Wow, boy, this is really something. He's asked, will there be regime change if you use the military? Colonel, he said, nobody knows. There may or may not be regime change in Iran. It doesn't sound like the most cohesive message coming out of the administration, and you wonder if they're waiting for these talks next week. Do we have anything else that we plan to send over?
I don't know whether or not we would or not. Like I said, there's always going to be the idea of having the long range bombers, right? Yep. They can leave from here. They don't have to go. They don't have to go overseas to be able to strike anything. So we have those capabilities. Obviously, cyber effects becomes a huge piece of this, right? President Trump has used these many times, all the way back to 2019 when the downing of a Global Hawk came in. He chose to use cyber attacks to show and cripple some infrastructure inside of Iran. So you put all these pieces together, it is something. He has a lot of different options, and I think he's just being a little sideways on where he wants to go right now, because he wants to be unclear. He doesn't want to carry that message forward.
Colonel, it's really great to have you. This is why our clients, or BI's clients, pay the Colonel to find out what's going on. Wayne Sanders, Bloomberg Intelligence Senior Defense Research Analyst, only on Bloomberg Radio.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all in the red. Heightened anxiety about the threat from AI and suddenly shaky bets on private credit delivering another bruising sell-off in shares of banks and asset managers. The S&P 500 index down 49 now, drop there of 0.7%. We've got the Dow Industrials down 729, drop there of 1.5%. NASDAQ down 1%, also factoring to all of this, as we have been hearing, geopolitical tensions. 10-year at 3.96%. The VIX, by the way, just above 20. The 2-year, 3.39%. Gold up $45 the ounce, 52.30, gain there of 0.9%. And we've got West Texas Intermediate crude up 1.9%, 66.46 a barrel on WTI. Bitcoin at 65,456. Bitcoin now down by 3%. As for the overall market backdrop, Laura Cooper is global investment strategist at Nuveen. She was a guest this morning on Bloomberg Daybreak.
Well, I think we're seeing market sentiment being driven by a mix of factors, whether that's trade uncertainty, given the recent tariff developments, whether that is concerns around these risks of AI disruption, and then as well, geopolitical tensions at the margin are also playing a role.
Laura Cooper of Nuveen, interviewed on Bloomberg Daybreak. Jack Dorsey's block cutting 4,000 employees, reducing its workforce by nearly half in a move the company describes as a bet on AI changing the future of labor productivity. Shares are soaring on that news. Block up now by just about 14.6%. And OpenAI has raised $110 billion in a deal that values the startup at $730 billion, representing the ChatGPT maker's largest funding round to date and bolstering its costly push to secure more computing power. Amazon, by the way, investing $50 billion in the financing round. Amazon shares today, right now they are trading a little changed. We do have Amazon up by just about down by 0.2%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to our New York studio. He's here in New York.
Oh, yeah.
Right next to me, Joe Matthew. Balance of Power continues.
Spending time together. It's like a buddy movie.
It really is. It's great having you in New York, and we love you for it.
It's fantastic to be here. And, of course, well, I mean, let's be honest. We're here for the big weekend show. That's something we're going to be talking about in our next hour. With the lovely and talented weekend duo, David Gura, Christina Ruffini. This thing is off the launch pad at 7 a.m. tomorrow, and I wouldn't miss it. I had to come in person just to see it all happen. And we'll get there. The President Trump's talking on his way to Texas with reporters. Some people living in the U.S., he says, want to go back to Cuba. When asked about what is happening, he says he hasn't made a decision on Iran, and he's not happy with how they negotiate. We also learned, by the way, the White House did send a DHS compromise, another offer to Democrats yesterday, and we are waiting for a response from Democratic leadership on that. But the president's on his way to Texas, like I mentioned, the port of Corpus Christi, where he's going to be speaking in, of course, the state that will be voting next week. Now, it's interesting. Typically, you'd see the commander-in-chief go down there and, try to stump for his candidate. But it seems he doesn't have one. This is the primary race for Senate, right? You've got the incumbent, John Cornyn, not endorsed by the president. Attorney General Ken Paxton, who a lot of people think is going to win, has been doing great in the polls, and Representative Wesley Hunt. The president has not chosen one, at least yet, and they're all going to be there. Joe Lovinger's covering it for us in our Texas bureau, Bloomberg Texas reporter. Joe, how awkward is this going to be?
Thanks for having me, Joe. Yeah, all three candidates have scrambled their schedules to be there for the president's speech today. And, getting Donald Trump's endorsement has been the #1 issue in this Republican primary. We've seen all three candidates try to make the case that they are the best candidate to support Trump's agenda and that they are his truest supporter in the state. Mm-hmm. So we've seen, John Cornyn has been, attacked for occasionally compromising with Democrats. Ken Paxton especially has made the case that Cornyn is not a sufficient defender of the Trump agenda. Cornyn, on the other hand, has really made the point that, he votes with Donald Trump 99% of the time. And so, this could not be a more crucial question hanging over this race. And it's really made it one of the most competitive and expensive primaries we've seen in Texas for the Senate in a really long time.
Really interesting. So it's almost loyalty versus MAGA in this case. Joe, there's a Democratic primary as well, and this has turned into another ripper with, Jasmine Crockett and James Talarico. They've both been on the program. Crockett has the name recognition, and we're going to talk about this with our panel. There's a push-pull here. She's likely to win the primary, but might not be as effective in a general election. What do you see on the other side of the aisle?
That's right. Yeah, we have a really competitive race for the Democratic nomination here. And, James Talarico, the state representative who's running against Jasmine Crockett, you're right that he entered the race with a lot lower name ID, but he's really blown her out of the water with fundraising. He's pulled in over $20 million to his campaign account. And I can tell you from personal experience, if you're watching TV in the Texas area, in the state, you probably have seen a James Talarico ad in the last week. We've seen a ton of spending to get his name out there. And, it depends on which poll you're looking at. Talarico has really struggled with black voters in the Democratic Party so far, but he's shown strength with college-educated voters, with Latino voters who make up a large percentage of the Democratic base here. So, we're also expecting to see a competitive race on the Democratic side here. And, as much as Democrats are focused on, who's going to win their nomination, we've also seen a lot of Democrats focused on that Republican side, because most analysts, most sort of poll watchers you speak to, they view Attorney General Ken Paxton as a candidate who really leaves the door open, particularly against someone like James Talarico, who is not really known as a flamethrower. He's a Presbyterian minister in training, so he can really make that case on morality and religion. I think both races here are shaping up to be, real barn burners towards the end of the race.
And, well, boy, I guess, and likely a runoff at some point here. Joe, thank you. It's great to see you. Come back and talk to us next week when we get to voting in Texas. Thank you for being with us here on the Friday edition. I'm deeply curious what the panel thinks about all of this. I'm glad they're back together today. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis reunited after the State of the Union. Rick is our Republican strategist and partner at Stone Court Capital, and of course, Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, let's get into this here because it does look like we're going to a runoff, and I'm wondering how you would handle this as somebody who's run campaigns before, to have all three candidates in the same room as Donald Trump, but no endorsement. Is it worth their time to be there? I guess you don't have a choice when Donald Trump comes to town, or should they be out raising money?
Well, it's too late to raise money. Those media buys are set, and everybody is pretty much just locked in for turnout around Election Day. And so this is all about just getting those eyeballs on TV, a little bit of mention that you're there. Texas is a big state, a lot of media markets, incredibly hard to campaign in. And so if you have all eyes of Texas on Corpus Christi around Donald Trump, you want to be glued to his side, endorsement or no endorsement. And so that's what you're seeing today.
Jeannie, this gets spicy. It's not just these three guys in the room with Donald Trump and three fighting fish in a bowl. But there's a split in the Trump sphere when it comes to this race. Tony Fabrizio, the pollster who you hear mentioned a lot on this show, is working for Cornyn's campaign, and he's got Chris LaCivita, one of the guys who got Donald Trump elected, as a senior advisor for the pro-Cornyn super PAC Texans for a Conservative Majority. On the other side is Steve Bannon, Jeannie. He's got a big problem with their involvement. He thinks that Ken Paxton has been MAGA from the beginning, and that it's time to have more folks like him in the Senate instead of, John Cornyn, who we should note has voted with Trump, I think 99% of the time. Is this where the break ends up happening here? What does Donald Trump do with this?
Yeah, Joe, and there was a pretty tough back and forth between Steve Bannon and Chris LaCivita, which included Chris LaCivita saying, "I'd rather be connected with Cornyn than Jeffrey Epstein," because of course there's recently been information about Steve Bannon's ties to Jeffrey Epstein. So it's getting ugly out there. And as I'm watching all three of these candidates come off, and I understand, Joe, and you correct me if I'm wrong, that Cornyn may be on the plane with Donald Trump today, which, I don't know, may give him a little bit of an advantage. But, I keep wondering, are they taking lessons from that Trump whisperer, that Democratic socialist in the city in which you're sitting, Zoran Mamdani, who seems to be able to, speak Trumpian? They need to take lessons because, of course, to your and Rick's point, they're all there. They're going to vie for this endorsement. And I understand, and Joe, I'm sure, can attest to this, for people down in Texas, it's hard to tell who doesn't have his endorsement because the ads are making it look like they all have his endorsement. So They're hugging him as close as they can today, Joe, and I'm sure through the rest of the primary.
Well, I had to chuckle to see Bill Cassidy's ads with Donald Trump all over it as well, as he's being primaried by Donald Trump. But we're not dealing with Louisiana right now. You know what's considered traditional or where the expectations are in Washington. Rick, should John Cornyn be insulted that the president of the United States has not endorsed the incumbent?
I would say John Cornyn is probably relieved that the president hasn't endorsed his opponent. Okay. You know, look, I mean, Cornyn thinks for himself. You know, he took a stand on guns legislation that was contrarian to Republican orthodoxy, got him a lot of points in the state, but, you know, rankled a lot of feathers with the GOP. He's considered an old school, you know, mainstream Republican. And Paxton has, you know, made a name for himself by being a MAGA firebrand. And that's where the collision is occurring in our party. The Republicans who are traditionalists and more mainstream in their thinking versus the, you know, sort of MAGA Republicans who, you know, are frankly just as unorthodox as the traditional Republicans, just from a different point of view. So this one is this one's a knockdown drag out, and as you pointed out earlier, the real question is going to be: does Trump get involved in the runoff? Because this one will likely be in a runoff, and both Paxton and Cornyn would benefit with a endorsement from Trump at that point in time.
Boy, an expensive runoff in the works here. Jeannie, talk to us about the Democratic primary. Do you believe that if James Talarico somehow squeaked out a win here in the primary, that he would be a force statewide if it was a Talarico Cornyn or Talarico Paxton, or is this a Democratic pipe dream?
You know, I like to say, because I like to bet Rick Davis, that Democrats can do this, and maybe before I'm 100 years old, they'll do it. You know, we should say that turnout is way, way up on both sides, actually, but particularly for the Democrats in Texas in the primary. The numbers are really off the charts. And one of the reasons, in addition to the State of the Union, the economy, the president is going down there, quite frankly, is to juice up these enthusiasm numbers, which are languishing terribly for the Republicans. So I think we're going to hear a lot of, you know, drill, baby, drill kind of talk when he's down there, because they really need to get enthusiasm up. And, you know, Talarico has had the benefit of having people as distinctive as, you know, Colbert and Joe Rogan and Joe Matthew, most importantly of all, around the country and the world interviewing him. So he's raised a lot of money. And so could he do this? Absolutely. It is still an uphill battle for Democrats across the state, but he's the only one of the bunch, I should say, Republican and Democrat, who's in this top tier, who is going for this broad tent approach. Everyone else, from Crockett to Cornyn to Paxton to Hunt, they're all doing this base first kind of thing. Let's get the base out, let's fire them up, and then they'll sort of move to the middle and the general. That's not what Talarico is doing, and it's an odd year, so who knows, Joe? I need a stake from Rick. I need that money back. So maybe he'll pull it out if he can get the nod.
Sounds like she's tripling down, because I think there were already 2 bets, Rick. You can correct me if I'm wrong on that. But what is your thought on this, Rick? Bring us home or bring us in off the ledge. Is this an actual conversation or a waste of money for Democrats?
I think that this is a sort of constant dream of the Democrats to someday win a statewide election in Texas. But look, there's definitely been improvement in the Democratic prospects over the years. Republicans don't have the dominant impact they used to have. And I'll just make a prediction. And if Ken Paxton's the nominee of the Republican Party in May, that you're going to see a flood of donations go into the state of Texas because they will see that this is the weakest candidate we've put on a statewide ballot in probably 10 years. Wow. And so at the end of the day, it's all about the candidate. And Mitch McConnell he had it right, a long time ago. And if we nominate a person who has the, really spotty track record that Ken Paxton has, it's a gift to the Democratic Party.
Wait, all right. We've got 30 seconds, Rick. Could Talarico or Crockett beat Ken Paxton?
Yeah, I think a combination of a good campaign and if they perform as good candidates in a bad Republican year, anything's possible in Texas.
Amazing. Great panel and a conversation. Jeannie, you're right. John Cornyn's on the plane right now. So is Ted Cruz. And Dennis Quaid of Jaws 3 in 3D fame. Well, he did play Ronald Reagan as well. I can only imagine the conversation on the jet. Our panel will be back in our second hour. Stay with us on Bloomberg Radio.
From Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump says he does not like the way Iran is negotiating. Welcome to the Friday edition as the president considers possible strikes against Iran, even as another round of talks is set for next week. We're going to get the latest with some fresh remarks from the president when we talk to Bloomberg Washington correspondent Tyler Kendall at the White House. The president now on his way to Texas, where he's going to be holding a campaign rally. Just no endorsement. We'll have insights ahead on Iran from Richard Haass at the Council on Foreign Relations, and news now on another counteroffer. to fund the Department of Homeland Security. We'll get into that with our political panel. Rick Davis and Jeannie Shanzano are with us for the hour. And we start, as always, on Wall Street. With me here at World Headquarters in New York is the great Charlie Pellet.
Hi, thank you very much, Joe Matthew. Great having you here. We have got the Dow, the S&P, NASDAQ, all in the red. Stocks are falling on concerns about AI disruption as well as private credit troubles. Right now, the S&P is down 49, drop there of 0.7%. The Dow is down 650, decline of 1.3%, while the NASDAQ Composite Index down 1.1%, and the Russell 2000 Index is tumbling now by 2.1%, small cap shares lower. The VIX just above 20, the 10-year falling below 4%, 3.96% now, the 2-year 3.39%, gold up $50 the ounce, 52.34, up by 1%, silver now surging 6%, 93.54 for silver, and Bitcoin down 2.6% at 65,690 on Bitcoin. Netflix made it official. It is dropping out of the fight to buy Warner Brothers Discovery, clearing the way for rival bidder Paramount Skydance to clinch its $111 billion deal for the historic Hollywood studio. Shares of Netflix, they are surging on the news, up by 11.9%. Paramount Skydance, meanwhile, the gains continue there, up by 24.1%. On the target, Warner Brothers Discovery down by 2.2%. Again, recapping here, the Dow, the S&P, NASDAQ, all in retreat. S&P down 0.7%, on track for a losing week, on track for a losing month. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go as Balance of Power continues. He's right here in New York, and we're glad to have him once again. Here he is, Joe Matthew.
Great to see you, Charlie, and thank you so much. Charlie Pellet will have more on stocks and bonds when we come back in just about 20 minutes' time with another check on the markets. We've got our eyes on Bitcoin as well today, as Charlie said, back down to $65,000, down about 2.5%. Thanks for joining us on Bloomberg TV and radio, the early side, Balance of Power, and the Friday edition with the President of the United States airborne on his way to Texas now. He's going to be in the port of Corpus Christi holding an event later today, delivering remarks on energy, says the schedule. But of course, we've got a primary in Texas on Tuesday that the president will likely be talking about, even though he has not endorsed any of the three Republicans, including the incumbent Senator John Cornyn, something we were discussing a bit earlier with our political panel. Rick Davis and Jeannie Shanzano are with us today, and they'll be back a little bit later on this hour as we consider the news, beginning with the Department of Homeland Security. This just fell in our laps, knowing that we're going to be talking about Iran as well this hour. Richard Haas will join us from the Council on Foreign Relations, but I want to get to Bloomberg Washington correspondent Tyler Kendall at the White House. She's there now, when they just heard from President Trump before he got on the helicopter. So a couple of things to get into. Tyler, we understand there's yet another counteroffer when it comes to the Department of Homeland Security, now closed for the better part of 2 weeks. And there's, of course, a big argument over ICE restrictions that has been stopped down by a disagreement over the use of masks and judicial warrants. What are we hearing from the administration?
Well, Joe, at this point, these are reports that this counteroffer has been sent over, but the timeline would make perfect sense because keep in mind, next Friday could be the potential first missed paycheck for nearly 206,000 federal workers that work at the Department of Homeland Security as this partial government shutdown enters into its third week. Now, the big question is which of those demands from Democrats could the White House be putting on the table to potentially codify into law? You mentioned perhaps the biggest two and most contentious ones, that idea of demasking federal agents while they're conducting immigration operations, as well as the ask for new judicial warrant requirements. So at this point, we'll have to see how this ultimately evolves. You have to keep in mind here that when we're talking about the impacts of a partial DHS shutdown, it's not really going to impact ICE, which is at the center of this debate, since the agency had received about $75 billion to tap over the next 4 years under the One Big Beautiful Bill. And as we get closer to that next Friday deadline, that potential missed paycheck, Joe, it's hard to see if something could actually pass. The Senate is out of town until Monday, and the House doesn't have planned votes until Wednesday. And we know that this is a compromise that ultimately will likely have to pass both chambers.
Interesting, and an important inflection point next week that Tyler points out. I'll have to ask you as well about Iran, Tyler. The president was asked in the driveway, Iran not negotiating in good faith and conscience. That does not make us feel like strikes are off the table. What are you hearing?
No, Joe, the president said he's not happy with how Iran is negotiating, which tracks with a person familiar with Washington's position, telling us that Special Envoy Steve Witkoff and the president's son-in-law Jared Kushner emerged from the third round of talks in Geneva yesterday disappointed with the progress. That is a much different tone than what we heard from Iran and the mediators Oman that had struck a more optimistic tone. But the thing is, we know that there are just such big disagreements at this point. Of course, the main focus of this round of talks are the Iran's nuclear program, and there are disagreements about how much domestic enrichment capacity, if at all, Iran should be allowed to have. But we have repeatedly heard from U.S. officials that they need to see some other agenda items on the table, including Iran's ballistic missile program, as well as its support for proxy militia groups. There's a few different developments that happened just today that could throw an extra wrinkle into these talks, including, Joe, Bloomberg News reporting that Iran has been conducting extra activity at these uranium enrichment sites that were bombed last summer during Operation Midnight Hammer. That's according to these UN atomic inspectors that haven't been allowed to examine these sites, and it is raising some big questions about what is ultimately happening at the negotiating table.
He's going to Palm Beach for the weekend. Tyler, that's the plan from Texas to Florida?
That is what is on the official schedule as of now, so we'll keep our eyes out for any developments. You mentioned President Trump heading down to Texas. This is part of that domestic tour, as we are here talking about foreign policy, but we know that the White House over the past week with the State of the Union has been trying to refocus that narrative around domestic policy and affordability concerns. He's going to be speaking at an energy cost event, but then also we'll be keeping our eyes if we get any sort of endorsement for that hotly contested primary that we are all watching to see how that one shakes out.
That'd be huge. John Cornyn is on the plane with him. Tyler, listen, maybe they'll have a moment. Maybe this will be different by the time they land. Bloomberg's Tyler Kendall, you need her on that wall. She's our Washington correspondent on the North Lawn of the White House and doing a great job as we consider the president's next moves with Iran. He may have to deal with Congress. Then again, I don't think Republicans are much in the mood for it. And even some Democrats, ask Josh Gottheimer, are not in the mood to support a war powers resolution. One man who is, we spoke with last evening on Balance of Power, Congressman Jake Auchincloss, the Democrat from Massachusetts, notably a Marine Corps combat veteran who served in Afghanistan, was not mincing words. Here's what he said.
If the president wants to engage in coercive diplomacy against Iran in order to prevent it from acquiring a nuclear weapon, ballistic missiles, or to continue funding of proxy terror forces, I think that's appropriate, and I support that course of diplomacy. But if he thinks he's going to use American warplanes to conduct an aerial strike, he needs Congress to say so.
No, we'll see about that. As we add the voice of Richard Haass, of course, the President Emeritus, the Council on Foreign Relations. Mr. Haass, great to have you back as part of our conversation here on Bloomberg TV and radio, and I'm deeply curious to hear what you have in mind as the president just now in the White House driveway says that he is not happy with the way Iran is negotiating, going further to say that he does not believe that they are well-intended at the negotiating table. Does this give you pause? Do you expect strikes this weekend?
Look, I have no idea whether there'll be strikes or when they might be. The real question is, what is it the United States is asking of Iran? What are we asking when it comes to their nuclear activities? Are we prepared to be serious about asking them to rein in their ballistic missile program, their support for proxies? You don't hear people talking much about protecting the internal opposition. So we just have to decide how ambitious we're going to be. Obviously, the more ambitious we decide to be in what we ask, the less likely we're going to get an agreement. That means we've got to use military force, presumably. Well, then you've got to ask yourself, what is military force likely to accomplish? What are the risks of using military force given how Iran could retaliate? So the fact that we're happy or unhappy with the Iranians, the first question is, what is it we are asking for, and how essentially, how serious are we about demanding it?
Well, as we often have seen with the administration, there's been an evolving sort of justification that began with protection of protesters. Remember, that was weeks ago. Donald Trump said on social media, help is on its way. And he actually took credit for Iran, for Tehran, backing off threats to hang protesters. At the State of the Union, though, Richard Haass, he talked about more than 30,000 protesters being killed. I don't know if they think that we've abandoned them or what they think of the prospect of strikes, but now it seems to be about not acquiring a nuclear weapon. And then we add another log on the fire with ballistic missiles. Is this too much? As the president says Tehran is not negotiating good faith, is it too much for their negotiators to follow?
Well, again, if we ask Iran to give up every aspect of a nuclear program, their ballistic missiles and the rest, they're going to tell us to take a hike. And they believe that they can put pressure on us. In some ways, they may be bad. They may think they are better positioned to take a punch over time than we can deliver one. There's things they could do to raise the price of oil. Given how important affordability is in this country politically, they may be calculating that's not something this president really wants. So we're still at the stage, I think, yes, we're negotiating, but some of this is also pre-negotiating. It's bluffing. And I think, again, using a boxing analogy again, I think the two sides are still feeling each other out.
Okay, little rope-a-dope maybe, but I do wonder, with the prospect of talks being scheduled for next week, if that matters, based on the behavior you've seen by this administration.
Well, in the past, the United States, last spring, we used force even though talks were scheduled. So what could drive things forward is if the United States thinks that talks are hopeless, or that they see activities, as you suggested, possibly taking place where the Iranians are trying to move or hide some important technology. But at the moment, my guess is the president's still improvising. I don't think he's decided what the United States is going to ask for, much less what it's going to do if it doesn't get it.
Okay, that's what I wanted to get to. Richard Haas believes Donald Trump is improvising, which could be dangerous in its own right, but I guess this is the way he operates, right? We talked to Bob McNally, Richard, at Rapidan Energy, who's got a real sense of the potential fallout here when it comes to what Iran might do, whether it's a bloody nose strike or a much longer campaign. Here's what he said.
If Iran chose to make the Hormuz Strait unsafe, it could do so for weeks. It's sort of like back in April when the Houthis absorbed 52 days of pummeling by the U.S. military, and we did not stop them from making Bab el-Mandab unsafe. Iran has much better weaponry, better coastline than the Houthis. So I can almost see spikes and reversals here, and if it gets to a prolonged Hormuz disruption, well over $100 a barrel.
And of course, Iran knows this, Richard. How far do you think Iran would go to retaliate?
Look, Iran will go pretty far if it needs to in order to, one, preserve the regime, and two, again, they may calculate that an extended conflict where the price of oil goes up, that they're better positioned than we are to hang in there. Look, part of the administration problem is they've amassed all this force, but they haven't really thought it through. I call it an armada in search of a strategy. I really don't think we've thought through where we're going to go with this and what's not just what's a desirable outcome. We also have to think about what's an achievable outcome. And I don't hear a lot of people talking about that.
Wow. You are, of course, someone who is steeped in many years of diplomacy, and I wonder your thoughts about the two gentlemen at the table, specifically Jared Kushner. It's been suggested that his relationship as the son-in-law to the President of the United States actually brings leverage and credibility. Is that true?
Yeah, I tend not to talk about people. I focus on policy. No one doubts that both he and Steve Witkoff have extraordinarily close relations with this president, which makes them both credible. But what matters more than their credibility is what policies are they authorized to advance. And I would keep the focus on that more than personal relationships or anything else.
Interesting. There have been questions about whether the administration is not only tapping the right people, but is not using enough of its expertise and institutional knowledge in this case. And I guess I would ask you, I know you don't want to talk about individuals in their case, but we have a Secretary of State who's going to be on his way to Israel in the coming days. How important will that visit be?
Well, again, I think the Israelis got the message when the Prime Minister visited the President here a few weeks ago to hang back. The United States wants, I think, a deal if it can get one without a military exchange. So I think the question is making the Israelis comfortable, providing certain types of equipment, air defense against Iran's ballistic missiles. Maybe we'll reach some understandings about what Israel would do or could do with our support if Iran widened the war and attacked it. But I don't think that's important. What's though more important, again, is what is the United States going to demand, whether Iran will agree. And if the more ambitious we are, they're not going to agree. and then what we're prepared to do and what Iran's prepared to do in retaliation. So Israel's important, but I wouldn't say right now it is central.
Got it. When we consider off-ramps, Richard, and based on what we've seen the administration do in Ukraine, in Venezuela, even Greenland, Iran knows who it's dealing with, and I wonder if an economic arrangement is how this ends, maybe in exchange for a lifting of sanctions when it comes to critical minerals, when it comes to energy. Is that something that would tempt this president?
I hope not in this case, because again, I think the president's right when he talks about a ceiling on Iran nuclear capabilities. The Israelis are concerned about ballistic missiles. I don't want to see happen here what happened in Venezuela, where essentially we cut a deal and ignored the population. I don't want to see the Iranian people somehow cast aside simply because the United States wants some sort of arrangement in the oil sector. So I would hope that kind of a deal is not on anybody's mind.
Interesting. What are you watching this weekend? What should our listeners and viewers keep in mind as we go through Saturday and Sunday?
I think to watch more than anything is whether there are activities on the Iranian side that would suggest somehow that time is of the essence. What each side says about the negotiations. But again, this is a crisis. Let's be clear. It's hard to answer your question because this crisis came about without a rationale. It wasn't as though Iran triggered it by its nuclear program or ballistic missiles or proxies. Yes, it did terrible things to its own people. We threatened them, then we did nothing. So 2 months later, we are where we are. So it's hard to know what to look for next because nothing, essentially, you'd be hard-pressed to explain how it is we got to this point.
When you see Saudi Arabia and Iran both accelerating exports of crude, what does that tell you about the status of talks?
What that tells you is they want to keep some cushion, some stability in the oil market. As you've seen, oil prices have gone up, plus or minus 10% over the last couple of weeks. So the Saudis tend to be, want to stabilize things. And it's a way of also signaling the Iranians that their ability to inflict pain on the world through oil pricing is not as great as they think it is.
Well, I'll tell you, oil prices are on the move here. Brent up 2.5%. WTI is as well. We're back to $67 a barrel almost in Texas, Richard. So investors are certainly paying attention to this. And we're awfully glad to have you with us. Richard Haas, President Emeritus, the Council on Foreign Relations. We thank you for the insights, as always. Yeah, barrel of crude in Texas, $66.83, up more than $1.50, 2.5% today. And you're looking at, what, another all-time high here for Exxon? Look at this. And all of the drillers are doing great as we keep our eyes on what might happen next. And that was already a pretty favorable trade before the saber rattling around Iran. I'm Joe Matthew in Washington. Our panel's going to come in next. We're also going to spend some time with David Weston here in New York. I'm a lucky guy. I'm surrounded by Charlie Pellet, David Weston, and of course, our new weekend team. They're going to spend some time later on this hour as well. David Gura and Christina Ruffini with an important interview with the Democratic leader in the House, Hakeem Jeffries. That's how you launch a program. They're going to be live starting tomorrow at 7 a.m. here on Bloomberg TV and radio, and we'll spend some time with them a bit later on this hour. I'm Joe Matthew. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 index of small cap shares all slumping. Wall Street shunning risks as stocks fall, bonds rise. S&P right now down 60 at 68.48, drop there of 0.9%. Dow Industrials down 1.4%. The NASDAQ Composite Index down 1.3%. And the Russell 2000 index of small cap shares hit hard today, down 2.2%. The VIX closing in on 21 again, 10-year 3.96%, falling below 4%. The 2-year 3.38%, and gold now up 0.9%, 52.29 the ounce on spot gold. Spot silver up 5.6%, $93.23 the ounce. And West Texas Intermediate crude up 2.5%. Oil rallying on geopolitical tensions. WTI at 66.88 a barrel. Bitcoin down 3%, 65,458 on Bitcoin. Jack Dorsey's Block is cutting 4,000 employees, reducing its workforce by nearly half in a move that the company describes as a bet on AI, changing the future of labor productivity. Block ticker is XYZ. Shares are surging on that announcement, up 15.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Back we go to Balance of Power. He's right here in New York. We love him for it. Joe Matthew.
Oh, Charlie, thank you. You're great. He'll be back, the voice of Wall Street, in about 20 minutes' time with another check on the markets. Indeed, I'm surrounded by the best of Bloomberg here at World Headquarters in New York, having made the trip for the big weekend show launch. And later this hour, we will talk to Christina Ruffini and David Gura about what they have up their sleeve, including an important conversation with Hakeem Jeffries, the Democratic leader in the House. Remarkable, just days after the Supreme Court ruling. In fact, well, that was a week ago today, wasn't it? A remarkable headline on the terminal. President Trump faces 2,000 tariff lawsuits following the Supreme Court loss. Knowing, of course, he's taking actions under different auspices to continue tariffs, but this has been a pretty noisy week. And as they say, send lawyers, guns, and money, because this is going to be how we spend the rest of the year. No one knows this more than my good friend David Weston. I'm really excited he can spend some time with us in the flesh, the host of Bloomberg Wall Street Week. David, it's great to see you. This has been a huge story for you leading up to the ruling. And I feel like, I don't know that we have a lot more clarity than we did a week ago, do we?
A noisy week, but also an exciting week for you. I mean, among other things, what was an hour and 47 minutes?
God, that was a late night, David.
With the State of the Union. Yeah, it has been quite a weekend, and it does include, of course, the tariff issue. But we had on Jason Furman because, as you know, Joe, so well, in some ways, that State of the Union was largely the State of the Economic Union, because so much of it was about domestic economics that President Trump was talking about. And so we asked Jason Furman, who, after all, was the chief economist for President Obama, what he thought about the economy. And he said it's not the horror the Democrats want to say, and it's not the turnaround the Republicans want to. And we asked about the tariff issues that you've identified, Joe, and specifically, how much difference does that make for the economy, whether we have those tariffs or not? This is part of our discussion.
I think it has subtracted a bit from growth and added a meaningful amount to inflation. The inflation one is easier to prove. You can just look through the different types of goods and furniture, consumer electronics, and you see those prices rising, and normally you would have expected them to be stable at a time like this. So it really is showing up. Is it a dramatic recession or an apocalypse? Definitely not. In fact, the models never predicted that you would have something that dramatic, but that doesn't mean that we should be blasé about what might be tens of billions of dollars of damage to the economy.
Business leaders often talk about uncertainty and how that is really a dampener on growth for them. Whatever the tariff rate is, tell me what it is and I'll deal with it, as opposed to I'm not sure. There's been a lot of uncertainty, both in the way the tariffs were imposed and now with the Supreme Court decision. Can you approximate what that might mean for the economy? Is it having an effect on the economy?
Delay of investment, some desire to do things overseas rather than in the United States. The Supreme Court decision, I think, ultimately will give us more certainty, because the IEEPA tariffs that the president had been doing before, he'd been constantly changing them at a drop of a hat. He didn't like the tone of voice, didn't like a television ad in another country, tariffs go up. The new authorities that he's still going to have, like Section 301, take more time and effort. They're hard to change them on a dime. And so if he wants to have high tariffs, we're going to have high tariffs. he can't quite change them on a whim in the way he was doing before under the new legal regime.
So, Joe, as you know, that's Jason Furman, who was the chair of the Council of Economic Advisors under President Obama. He is a professor of economics up at Harvard. And so he basically said, steady as she goes. Although I want to add one thing. You will remember, because you were covering it, Joe, the president saying we can replace the income tax with tariffs.
How about that?
And Jason Furman, who's a very measured economist, had one word. Ludicrous.
Ludicrous.
You said there's just no way that could ever happen.
Wow.
So,
yeah. Just to dangle that out there in a State of the Union is pretty remarkable. I hope they're not going to throw us out of here, James. Let us know. But delayed investment were the two words that struck me there, because when you talk about uncertainty, it's as simple as that, right? President Trump talks about trillions being invested in this country, but how many more have been delayed?
Well, exactly. And one of the questions is what happens with all those deals, supposed deals. We'll see what happens on the investment. Like Japan, for example, with $550 billion going to be investing here. Well, now, when it's not so clear that President Trump had the authority to actually negotiate those under IEPA, what happens to all that investment and how material is that? Or will countries decide they'd just as soon go along rather than have President Trump angry with them?
Boy, and to the point he made about Section 301, for instance, taking a lot more time. Is Wall Street ready for a 6-month investigation? What's this going to require?
Well, they've had it before. You remember, in Trump 1, in the first version, they had a 301 against China, and they go through it. And, you know, as I say, business can adjust to just about anything. They just like to know what the rules are. And as a practical matter, it's about 10, 11% effective tariff rate right now after this all happens? That's on goods. Goods are only 25% of the total economy. So it's not quite as massive as some people have warned in the past. But and that cuts both ways. It isn't as bad, perhaps, as some Democrats would say. And as Jason Furman says, it might not be as good as the Republicans like to believe.
Boy, very, very interesting. And I'll be curious to see how Republicans in Congress weather this once, particularly, we get through primary season. David, is this where the president's going to find the line?
Well, also, you would know this better than I, Joe, but it seems to me it's going to be a question of what the constituents are thinking back home. If inflation kicks in again, and there's a lot of stimulus coming in under the One Big Beautiful Bill Act, and there's a lot of stimulus coming in. If inflation starts picking back up again, a lot of what the president has said about affordability just being a ruse for the Democrats might be uncomfortable for some members of Congress, particularly in the House, going back and campaigning in their home districts.
Well, we'll hear and see that full interview with Jason Furman on the program this evening. Bloomberg Wall Street Week with the great David Weston. Great to see you in person, David, here at World Headquarters in New York as we assemble our political panel for their take on what we're talking about. And it really just comes down to an incredibly long week in the world of politics. A week ago, SCOTUS, Tuesday night, the longest State of the Union address in human history. And we have Rick Davis and Jeannie Shanzano to break it down. Bloomberg Politics contributors. Jeannie is our Democratic strategist and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, we've talked a lot about finding the line, so to speak, on Capitol Hill, and a number of Republicans have expressed their concern about moving forward with tariffs under various justifications, whether it's 301 or something different. Do Democrats have any say in where this goes? If Republicans aren't seizing on this in Congress, does the legislature stay out of the mix?
You know, unless something happens, as Donald Trump knows all too well, in November, and Democrats take the gavel, or, you know, we see Gonzalez moved out, and we are looking at an even house. I mean, we're so tight in these margins. There's a lot of opportunity, but at this point, you know, the president said during the State of the Union that congressional legislation wouldn't be next. And to me, as a political scientist, that's terribly disheartening because he missed the entire message of Neil Gorsuch's opinion, which was that American government depends on an active legislating Congress, not an active legislating president through EOs, and certainly not legislating from the bench. So terribly disheartening for those of us in the political science realm to hear him say that.
Rick, you work in the investment world. What are you hearing when you have conversations with people about delayed investments, to Jason Furman's point?
Yeah, I think it's just a lack of clarity of public policy that, you know, over time you would hope gets smoother and easier. And instead, certainly this week, it's been incredibly disruptive. And so I think that all you know, investors want is sort of a level playing field and some certainty around policy. And I think it's a good example where we haven't had a lot of certainty around the policy of the Trump administration, especially as it relates to the tariffs. And David's right. They haven't been as punitive as everybody thought they were going to be. Certainly not as threatened on Liberation Day as we thought. But at the end of the day, you're making decisions based on years of investment return, and you're seeing changes in public policy on a daily basis. The president came out just this last weekend and said he was going to up those tariffs by 15% post SCOTUS ruling, and it turns out when they were filed, they were only 10%. So people are making decisions on Saturday would have had a different question than they got on Monday. So in that regard, we certainly haven't had a lot of certainty to work with.
Isn't that the truth? And then you start wondering how they feel at the Federal Reserve about this. But boy, cue the lawyers, Jeannie. This is really something. More than 100 companies have filed new lawsuits since the ruling, just in the last week. You talk about finding the line on Capitol Hill. Maybe we're finding the line when it comes to corporate America. These are not small companies. FedEx, Dyson, Dollar General, Bausch & Lomb, Brooks Brothers, On Holding, L'Oreal. The justices, of course, were silent on the refund question, Jeannie. Are any of these companies going to get money?
I don't know if they're going to get it, but I think if we step back and look at this from a political lens, wildly unpopular these tariffs are. The president has doubled, tripled down on them. And now we're talking about this big boon for lawyers who have, filed all these lawsuits on behalf of these behemoth, major and smaller companies. And do they get refunds? I don't know. But for somebody who ran promising to help the middle and lower class, and quite frankly, won on that, a lot of people, when they go to vote in November, are going to be scratching their head to say, wait a minute, you're giving back refunds of our tax money to these big companies when those costs were passed to consumers in many cases. Why aren't we getting refunds? Which, by the way, is what the president said he was going to do with these tariffs. So this is a huge political mess for the president and the administration as they march into midterms where people are very unhappy about tariffs, inflation, and how he is handling the economy. And he's done this to himself, which is the most mind-numbing part of this.
Just 30 seconds left, Rick. Will the president regret offering $2,000 checks or promising $2,000 checks to all Americans?
No, I think that's pretty much overtaken by events. I mean, it's such a scrambled deck right now. I don't think anybody has any expectations. But kudos to corporate America. FedEx already has a website where you can apply for your return. So, corporate America will fill this vacuum. If the Trump administration's smart, they'll just get silent on it.
Once again. I think Costco was the first. They're leading the charge on that. Rick Davis and Jeannie Shanzano, great content and great conversation as always. Thank you both for the insights, and I'll meet you on the late edition of Balance of Power here on Bloomberg Radio. Bloomberg Politics contributors with both sides covered here. We're going to spend some time with the duo coming up next. Weekends will never be the same. Gura and Rafini straight ahead on Bloomberg.
Wall Street, we do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ, all declining right now. S&P 500 index lower. Stocks are declining on concerns about AI disruption and private credit troubles. Investors also focused on war jitters with Iran. S&P 500 index right now is trading lower by 0.8%, down 54. We're now at 68.54. Dow Industrials down 653 for the Dow, a decline now of 1.3%. The Nasdaq Composite Index down 278, Nasdaq down 1.2%. The Russell 2000 Index of small cap shares hit particularly hard today, right now down 2.2%. The VIX at above 20, the 10-year below 4%, 3.96%. Spot gold up 0.9%, 52.33 the ounce. And crude, West Texas Intermediate up 2.8%, 67.01 a barrel. And Brent, the global benchmark, up 2.6%, 72.57 a barrel. Bitcoin, meanwhile, selling off down 2.8%, 65,577 on Bitcoin. Dell shares surging after the company last night gave an outlook for sales of its AI servers that exceeded estimates, a sign of robust demand for machines helping fuel the AI data center build-out. Right now, we have got shares. They are advancing. Shares of Dell, they are surging now by roughly 10%. Again, recapping here, the Dow, the S&P, NASDAQ down by 0.8%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thank you. The great Charlie Pellet, live from World Headquarters in New York. He'll have more on stocks coming up top of the hour, 2 p.m. Eastern Time as Bloomberg Business Week Daily gets rolling. So I've been listening to Charlie throughout the day here. It's not often we're in the same room, spend some time together. It's been like a buddy movie since noon. And I guess the one thing that I've really learned is that everyone is just in a bad mood. That's the market. Here's the last day. Look at that, last day of the month for trading. We've got a Dow down over 600 points, like Charlie said. VIX is up, crypto's down. Got to talk to Mike Regan about why. Bloomberg managing editor for U.S. equities, also with me in the flesh. Mike, it's great to see you. The pessimism coming off of this earnings season is something. I guess unless your name is Michael Dell today, it's been pretty much straight down for tech. Even NVIDIA with this knock the cover off the ball report couldn't get investors excited. Is this going to be kind of, if not correction, a digestive phase that lasts an extended period of time?
Joe, hard to really predict and say for sure, but you make a good point about it potentially just being a correction. I mean, you look at the stock market; it went pretty much straight up from the volatility last April when Trump announced all his tariffs that he later sort of softened all the rates on. But I really think we've seen this shift in the narrative surrounding AI that's really hard to ignore. Yeah. It went from being the big beneficiaries of this, NVIDIA and Alphabet and the other companies really leading the market higher, to sort of two different perspectives of pessimism. One, are these companies really getting over their skis too much as far as the hundreds of billions of dollars in CapEx that they're investing in data centers? But two, everyone is admitting that AI is a truly disruptive technology. Yeah. So if you look at the biggest losers this month, it's really those software companies.
It's been brutal.
Yeah, your Intuit's, the tax software, Workday,
even Microsoft.
I mean, it's just this vibe coding idea that AI is going to be able to basically replace a lot of these software as a service revenue streams is really alarming. And then you pile on top of that, so many of the private credit companies were heavily invested in software companies. So you're looking at companies like Apollo Global, KKR, really getting beaten down this week. On top of that, you have Market Financial Services in London, the mortgage company running into trouble there, and worries about all their counterparties in the U.S. BlackRock's private debt fund cutting its dividend today. I hate to use that cockroach analogy, but it really is what people are talking about, that the cockroaches in this private credit space are really starting to scurry about.
At the same time, though, and I always come back to this point when we talk, if you look at the equal weight S&P 500, it's basically at an all-time high.
It's amazing.
How often do you see this much volatility beneath the surface, but so much stability in the indexes and a rotation that apparently is lifting the equal weight to new heights.
Yeah, it's really fascinating. And even on, I don't know about today, but yesterday, days we've seen these really big drops in the S&P 500. Most stocks in the index are up, and that equal weight index is outperforming by something like 6 or 7 percentage points this year. It's remarkable. So, it's not so much investors completely giving up on the market, but really trying to focus on, some people are calling it the halo stocks.
Yes, right.
Heavy asset, low obsolescence, meaning
that's right.
Those sort of energy companies, utilities.
You can't vibe code those businesses.
Yeah, the companies that can't get put out of business by AI. At the same time, you're starting to see the valuations in those creep up to somewhat alarming heights, valuations you're not used to seeing in these sectors. So you're right that the story is more about a rotation, but from the market cap weighted S&P level, it is a downdraft this month, or really the worst month we're poised for, about 1.5%, not a disaster.
1.5%.
Yeah, 1.5%.
It's felt a lot more painful than that.
It feels a lot more painful than that, especially, when you look at some of these individual movers. These software companies that you're used to sort of leading the growth in the index, really getting hammered this month.
Single stock nightmare, but the indexes are hanging in. Mike, thank you so much. With February under the bridge, well, almost at least, Mike Regan reporting for Bloomberg. Managing editor, U.S. Equities, doing a lot more than reporting, and with us here on Balance of Power. This is the part of the program where we get to hang out with the cool kids, because the real reason we came here was not for the Buddy movie with Charlie Pellet. It was for these two. Weekends will never be the same at Bloomberg, or hopefully for you in your household. You've got the clock set. I already told you it's at 7 a.m. And I'm not going to let something like this pass by without trying to be here, witness it in person, maybe even be part of it. And they were kind to invite me. This is, of course, David Gore, Christina Ruffini. You've heard about Bloomberg this weekend. They've had no opportunities to talk about it on the air, so we wanted to bring them in right now. Because, look, this isn't some wacky variety show or morning zoo show, unless you guys tell me it is.
Surprise.
But, I didn't expect that at all. But it's actually, you guys are covering hard news. And, Christina, that begins with the Democratic leader of the House.
It does. We actually just wrapped that interview this afternoon, and we asked a variety of questions. One of the good things about this show is, a bit like your show, we've got time to talk to these people. It's not a 2 or 3 minute
revolutionary hit.
We've got time to sit down, run them through all the questions you want to ask them. My question for any leader in the Democratic Party is always, who is in charge of your party? We asked that and a couple other questions to the leader, and I think we've got that sound for you now. Do you think your party is united enough to hold that line? And who is the leader of the Democratic Party right now?
I'm the House Democratic leader. We've got great members of the House Democratic Caucus as well that are leading in a wide variety of different ways. It's not my job to make determinations as to who's the Democratic Party leader. What I can tell you is that Democrats have won elections consistently for the last 14 months. And so whoever the leader may be, he or she is doing a great job. Because literally, we haven't lost a meaningful election in the entirety of the Trump administration, winning races up and down the ballot across the country, in places like New Jersey, in New York, in Virginia, in California, certainly during the off-year elections last November, in Mississippi, in Georgia, 3 state Supreme Court races that we swept in Pennsylvania, and then went on to win races in Florida, the Miami mayor's race for the first time in 30 years, and of course these special elections that we've seen dramatic overperformance, most recently in Texas by 31 points, and then in Louisiana, the home state of Mike Johnson and Steve Scalise, by 37 points in terms of an overperformance from the Trump number. So collectively, we're going to continue to message and communicate to the American people our values, juxtapose that with the extremism that the Republicans are unleashing on the American people, and let the chips fall where they may.
And emboldened.
He had all that at the ready. It seems like he was ready to rattle that off, that list of victories.
Yes. Wow. Boy, what a moment for him as the world predicts a landslide, essentially, for the House in November.
Well, the world is maybe predicting that. He is as well. Of course, he said that at the press conference at the beginning of this retreat that the Democrats in the House had in Lansdowne over these last few days. He seemed to me, and Christina, correct me if I'm wrong, very confident about the path forward here. And the first thing we asked him about was the status of that affordability agenda that he and other Democrats so often talk about. He was prepared as well to kind of tick through what the tenets of that plan are. And, a lot of our conversation, which, again, you can hear in full tomorrow morning, centered on the way that Democrats varied as they are going to kind of unify and convey that message to the American electorate. That, of course, Joe, is the big challenge here. If this party can stay unified and focused here going into those midterms in November.
Guess he got some sleep after that 2-hour speech.
Look, and David also really pressed him on whether he would or would not seek to impeach the president if the Democrats take back the House. And we're not going to tell you what he said. You're going to have to tune in.
You went there.
The I word.
Yes, a lot of Democrats are very worried about that being the sort of knee jerk, because that's the muscle memory from the first Trump administration.
Well, there's this debate. Do they overplay their hand, in the Biden administration going after Trump, which seemed to embolden him and his base and swept him back into office? Are they going to repeat those same mistakes?
It dawns on me as well. You guys are launching at an incredible moment. We're talking about a potential military action against Iran. You guys also have Berkshire tomorrow, right? Don't you have Berkshire Hathaway? Has Bloomberg ever been live for Berkshire
I was told in accepting this assignment there would be no earnings. And lo and behold, they are on Saturday mornings for Berkshire Hathaway. Warren Buffett was of the school of thought that if they came out on a Saturday when the markets were closed, you could go about your day on Saturday and Sunday.
3-hour thing on TV with the Coke cans anymore if Buffett's not there?
So what we will find out tomorrow is, yes, the quarterly report, the annual report, and then the first letter from Greg Abel, who has succeeded Warren Buffett as CEO. And in that letter, customarily, Warren Buffett would say when that shareholder day is going to be in Omaha.
Understood.
So we're looking for news of that sometime. It'll be sometime in May,
Amazing.
I believe.
So you guys, it's an interesting job doing this on a Saturday, on a Sunday, when the investment world, nobody actually really ever sleeps, nobody stops working, but you don't have live markets to deal with, which gives you, I hope, just a great opportunity to explore.
I think so. Look, we do have crypto.
Yes,
and we
Christina,
have,
very into crypto and the prediction markets.
I'm going to get all kinds of emails about that now.
If I have to go on one more date where someone talks to me about crypto, and now we've got to talk about it on the weekend. But look,
I want to know what you're hearing.
Crypto's trading. That's an off-camera discussion, Joe. Crypto's trading. We've got poly markets, which are increasingly taking up oxygen and part of the discussion in the financial markets. And this is the kind of world that needs some sort of news on the weekend.
Absolutely.
And we know Bloomberg viewers are not completely dialing out on the weekends, but we're hoping we can do this in kind of a different way, in a longer form, and give you what you need to know before you start your week.
We're all, though, part of this elite team, members of which have gotten a call at an early hour in the morning when big news is broken on the weekend. So this, in effect, is kind of formalizing.
This is all good for me.
It's good for you.
This is a lifestyle improvement for
I'll
a lot
let you know
of
my
people.
vacation days many months in advance, Joe. But no, it formalizes that if news breaks on the weekend, there is a place to go to for an update on that. It's not going to be ad hoc. And so we have great plans for what we hope to cover this weekend and next weekend. Of course, we're aware of the fact all of that could be scuttled perhaps dramatically, but we are prepared. And as you know, the newsroom is so huge and willing to spring into action if big
What's
things
Kalshi
happen.
saying about this launch, James?
That's a good question. I meant
are they
to
running
check.
odds on this working, or poly market?
America's producer checking that out.
I would unfortunately look. I would unfortunately put my money on something happening this weekend.
You do?
Just
You
what
just
we're
came
seeing.
out with that
Well,
unsolicited?
I wouldn't say. I would have kept that close.
I want to know why, though.
I think, I was asked this yesterday, so I'm happy to say it.
Okay.
And you never know with this administration, and there are so few people making these decisions. It's a really close hold, and it's advantageous to them because they can pivot very quickly, and it's not like they have to claw back a bunch of commands because they keep those so close to the vest. But I've been watching this situation in the U.S. Embassy in Israel, and I think the fact that they've gone on authorized departure tells you something.
How about that?
But we'll have to see. The counterpoint to
out of the
that
way.
would be there are talks on the books for next week, technical talks. I am happy to be proven wrong, and we will have you covered either way.
Where are those odds, James? 25% chance of strikes by March 2, 50% by March 13. That's poly market.
Yeah, that would track, because if you're banking on those technical talks going ahead next week, that would be where I think that's where that.
But if this bloody nose thing happens, that could be at any time, they say, to strengthen the hand at the table, right?
And that aircraft carrier has arrived.
That's for
It's
sure.
close to arriving, I know.
Absolutely. Yeah. So you guys got a couch in there and everything?
There's a
huh?
couch, yes.
There's nothing like,
There's both a
I don't have
traditional
anything in our
desk.
studio.
No, well, you're standing.
Well,
viewers know,
now
listeners
I am.
don't. You're standing up.
Well, you've been in there. It's just a big desk.
Yeah. Well, you're going to be there tomorrow, aren't you?
I will. I want to see. You have like a breakfast nook, I understand.
Yeah.
Is there anything else we should be warned about?
You'll come hungry.
Okay, great, beautiful.
For content and breakfast.
What time can people hear this interview with Hakeem Jeffries? That
We're going to 9 o'clock.
9 o'clock.
9 a.m. on
We
Saturday.
may tease it through there, but 9 o'clock is when that's going to air tomorrow in full. And we've got Tim
got some
Burchett, the
Republicans,
congressman from Tennessee, coming in as well. Always
Did you say Tim Burchett?
Yes, I did.
Oh, see, I'm showing up.
They're showing up for that. He's
Fantastic.
been up in Chappaqua, I believe, so we'll get an update from him.
Ask him about the UFOs. Ask him about UFO files. I'm not
You're
kidding.
the second person to say that to me. I also want to ask him about these long boards that he hand carves for members of Congress.
Also true.
So.
And if you want to be a friend, bring some cheese whiz. That's just
Cheese
between
whiz?
us for Tim Burchett.
Long blocks. I'll bring the Triscuits as well.
Perfect. See, this is working out.
No,
I can't wait. 7 o'clock tomorrow morning. I'm getting up early, and you should too. Well, it's not really that early. 7 to 10, both days, Saturday, Sunday, Bloomberg this weekend, with two of my favorite people, Christina Ruffini and David Gura. Give them hell, guys. I'm Joe Matthew. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody. Yes, indeed. It is Friday. It is a very busy Friday, February 27th. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters in New York City.
There's too much. I thought this was a Friday. What's the deal?
I don't know. It's like everybody had their Wheaties or something, and it's just our planning call this morning. It's like, how do we cover it all? But we're going to try and get to what matters over the next 3 hours. But in the next 60 minutes, we do want to point out we are watching stocks on pace for their worst month since March. This as we get ready to wrap up the trading month of February.
Yeah, backdrop is rising global risks, treasuries higher. Those are on track for their best monthly performance in the year. You pointed this out earlier today, Carol. The 10-year, the yield there dropping below 4%. Yeah,
that was technical.
That's technical. Okay.
Yeah, we've seen moves down in the 30-year and mortgage rates and all this good stuff. So we're going to talk about all of this. We also are going to talk about the inflation print we got this morning. Still a thing thanks to a hot print pointing to lingering inflationary pressures. So what you need to know about that. We're also going to maybe tackle just a little bit about AI and the reality in terms of jobs.
Yeah, we got a lot there, but also a lot to check in with the C-suite about. We've got the CEOs of Compass International and Rocket Companies.
It's a C-suite palooza.
It is.
Just say it.
Okay, well, here's some of those people who are coming on. They're going to talk about their plan to build affordable homes. Jay Chaudhry is going to be here from Zscaler. And then Duolingo stock taking a hit today. The CEO and the co-founder stops by. All about going up against AI.
It's a company you know a lot about. So,
yeah, Luis Von Ahn is coming in.
Yeah, I do feel like everybody's trying to figure out the world in terms of AI and also some other issues. All right, do not go anywhere. But first up, let's get you going on this Friday with a check on the trading session. Here is Charlie.
Hi, thank you very much. Happy Friday. Not such a happy week or month for the bulls. And just remember, it takes AI to spell pain. We have got the Dow, the S&P, NASDAQ all experiencing pain right now, with the S&P 500 index down 52 at 68.56. Drop there of just about 0.7%. Dow Industrials down 6.11, a decline of 1.2%. NASDAQ down 1.2%. Stocks are falling on credit and war jitters, also AI concerns. The Bloomberg Mag 7 index down 1.8%. The Russell 2000 index of small cap shares particularly hard hit, drop there of 2.1%. The 10-year below 4% on this Friday, final trading day of the month. The 10-year 3.96%. The 2-year 3.38%. Spot gold up 1.2%, 52.48 the ounce. And West Texas Intermediate crude up 2.8%, 67.05 a barrel. This on geopolitical concerns, and Bitcoin now down 3.2%, back at 65,318 on a Bitcoin. Netflix investors today are cheering the decision to drop the Warner Brothers fight. The streaming industry leader says while it believed its deal would have passed muster with regulators and created shareholder value, it did not want to keep bidding. Shares of Netflix, they're up now by 12.5%, but Paramount Skydance, the acquirer, surging 23.2%. The target, Warner Brothers Discovery, down now by about 1.9%. So again, recapping here, we do have U.S. equities moving lower, S&P down by about 0.7%, with a 10-year below 4%, 3.96%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. Tim and Carol, that is a Bloomberg Business Flash.
All right, so appreciate it, Charlie Pellet. Well, prices paid to U.S. producers in the month of January rising more than forecast, fueled by services and pointing to lingering inflationary pressures. Consecutive months of firm wholesale price readings adding to evidence of slow progress toward beating inflation. We've heard this from a lot of our guests. We've heard this from Fed officials. Higher duties also on imported materials have encouraged many producers to raise prices or find other cost savings to protect margins. So we knew we had to check in on the latest read on inflation.
We got to bring in Enda Curran, a Bloomberg News global economy reporter. He joins us from the Washington, D.C. bureau. Enda, is this 1 month a blip, or is this part of a worrying trend?
I think it's just a reminder, like Carol said, that inflation is still lingering. It hasn't completely gone out of the system. So this is the producer price index, the kind of upstream prices that wholesalers and the like factories are paying. It doesn't necessarily correlate as a one-for-one with consumer prices, but it's a warning of or a signal of what's ahead. And it rose, as you were saying there, 0.5%. That's the fastest rate since September. Within that, it speaks to the idea that wholesalers have got confidence now and margin room to lift prices. And some of that story does reflect, of course, tariffs. Not all tariffs, but that's part of the mix. Within it, actually, you could see that physicians, PPI airline fares, and portfolio fees That's just a calculation that reflects the stock market boom. All of these things adding up to push PPI higher. And the one other thing to say about PPI is that within those numbers, there's a core reading that the Federal Reserve looks at when you take out likes of food and energy, and they like that particular calculation because it gives them a good handle on where inflation's going. And well, with the overall uptick in PPI, it suggests that the Fed's preferred reading on inflation is probably a bit faster than expected too. So the net takeaway is inflation remains a little bit more stubborn than thought, and it kind of does complicate that story for when the Fed might cut interest rates again.
All right, which made me think, okay, higher rates, and yet I'm looking at a U.S. Treasury trade where we have seen rates slid down. There's lots of things at play, and whether it's geopolitical concerns, the impact of AI, there's a lot of stuff going on, but I'm looking at a 10-year below 4%. We've got a 2-year note at 3.38. The guys who we're going to talk to...
The real estate guys are nodding when you said the thing about the 10-year.
We're going to get to them in just a moment, but what's going on here? Because it sounds like this is a little bit of a predicament for the Federal Reserve.
Yeah, I mean, as you say, there are so many push and pull factors going on right now. I mean, we've just had the week of AI, beginning, of course, with the viral report, warning of doom and gloom, and of course, ending, I think, with a lot of economist notes kind of pushing back on some of the analysis in that. And in between, everyone's trying to make sense of what is going on. I think with the Federal Reserve and interest rates right now, the story seems to be that the jobs market is stabilizing, but we get jobs numbers on Friday coming up. They will be very important. If those payrolls come in again, somewhat robust in line with expectations, I think you can take it that the Fed will be happy with that. Of course, if they come in much weaker than expected, then you're going to get that whole story re-emerging about, hang on, our interest rate's too high, what does the Fed need to do to help jobs? And as I say, if that comes in stable next week, and provided inflation is where it is, I think we're probably at a point where the Fed is on the sidelines on the policy story for a couple of months from here at least.
Hey, and just the last 30 seconds, we got to get you to weigh in on AI and what that means for labor. I think the story shifted for a lot of people yesterday when they heard about Jack Dorsey's block cutting 4,000 workers, more than 40% of its workforce, really leaning into AI. It got people very concerned. Wait a second, is this the future? Leaner, meaner, more AI-reliant companies. What is the effect, just very briefly, of AI on the labor force?
The effect is a worrying one. People are uncertain. I think a lot of economists will tell you disruption is coming. There will be an impact on the labor market. Some sectors are more vulnerable than others. But where it ends is the big unknown right now.
Yeah, which is why everybody, it feels like, is scrambling to do research. I was looking at some stuff from the Dallas Fed. All right, Enda, thank you so much. Have a great weekend. Enda Curran, his Bloomberg News global economy reporter. All right, that's the latest on the U.S. economic picture. Let's get to two companies looking at our economy and the issue of affordability, especially when it comes to housing and really the ability to own a home. As we know, home ownership in the U.S., it offers stability. It's an offer, a way to create wealth. And this is a really big part of the American dream. I laugh, but it's not funny because a lot of people, between U.S. home prices outpacing wages, it's made it really difficult for many to afford a home in the United States.
Well, two companies are looking to address that. We're talking about Compass and Rocket companies. The two announced a 3-year strategic alliance aimed at expanding home listing inventory to create a significantly enhanced and affordable home buying and selling experience for American families.
All right, we wanted to know more. Also, we should point out our next two guests, both of them had earnings last night. Compass shares are a little bit lower. The company forecasts first quarter revenue that top analyst estimates, and shares of Rocket rallying after the mortgage finance company posted revenue and adjusted profit for the fourth quarter that beat the average analyst estimate, which means we're going to get to the macro as well. With us in studio, Robert Refkin. He's founder, chairman, and CEO of Compass International Holdings, and Varun Krishna, president and CEO of Rocket Companies, both joining us here in studio. Welcome. Like, you are the perfect guests to have right now with so much going on. I want to talk about the partnership, though, and how it gets to the affordability issue. Let's go right there. Robert, or whoever wants to kick it off, please.
Go ahead. So
that's a good partnership. You go.
Well, look, what this represents is the #1 largest brokerage in the world, Compass. 340,000 agents, 9 brands, Compass, Corcoran, Sotheby's, Coldwell Banker, Better Homes and Garden, ERA, Century 21, Christie's, and Ad Properties, partnering with the largest mortgage company in the world to help sellers by giving them something they've never had before, which is the ability to market their homes to 60 million buyers without days on market and price drop history. Ultimately, there's a risk to listing, negative insights that are on listings that we are taking off the listing so for the first time so that they can market without risk. There should not be these artificial barriers.
Yeah, Brune, come on in here, because if we think about affordability, you know, what we hear over and over again from economists is, yeah, mortgage rates matter. You know, it matters how much people are thinking about buying and their salaries and how they think about affordability. But it really has to do with supply. Yeah. And if we're not building more homes in places where people want to live, we're just not going to make a dent. How do you do it if you're not a builder?
I think it's a very complicated problem, and I think it's really important that industry participates and does its part. And the purpose of this partnership is really to attack affordability in two ways. The first one is inventory. As Robert shared, we plan to bring, as a result of this partnership, 500,000 to 1 million listings to the market that are not accessible. And so,
why aren't they accessible?
Because part of the issue is that certain sites provide access to these private exclusives and coming soon listings. And these are inventory that really comes down to a more flexible way for sellers to be able to advertise their home. And what we think is that everyone is really focused on the buyer. That's obviously a very important side of the equation. But in some ways, the entire world has forgotten about the other side of the equation, and that's the seller. And so this partnership first is focused on the seller. It's about lowering the barrier to entry so that more listings can be advertised online, on Redfin and on Compass. So that's one side of the equation. The second side of this is a mortgage partnership, and that's where we are building a more integrated platform for buyers so that buyers that use Rocket Mortgage, that use Compass, can actually save money. They can get up to $6,000 in closing cost coverage. They can save up to 1% on payments for the first year. And so it's a very multifaceted challenge to fix affordability. But what's great about this partnership is it fixes things for both buyers and sellers on both sides of the ecosystem.
But I got to ask, you know, one of the things that Tim and we've covered this a lot in terms of affordability. And yes, some of it is buying homes, affordable homes where they are needed. It's not just buying homes. But the other thing is a lot of folks have said, we need to pay people more, that it's an income thing. So like, are you guys going to give mortgages? Are you changing your metrics in terms of income and so on and so forth?
Like who qualifies?
Yeah, because that gets to the affordability issue too.
Yeah, I mean, I think, look, the reality is affordability, as you said, is much more than just supply and demand, although supply and demand are probably the major ways to attack the problem. But a part of this is you have to have more ways to qualify people. You have alternative ways to look at things like credit. You have to think about reform. You have to think about wage. You have to think about self-employed. We have diversified the way that we look at our population. I mean, you look at things like the creator economy. You look at the self-employed economy. So you have different ways that people make income, have credit. And it's really important, I think, to acknowledge that and to diversify the way you qualify folks.
So the idea, big picture, is you increase supply, you get more homes listed out there. It frees up inventory for people to buy that first home, Robert. But yeah, go ahead.
So you mentioned developers and builders. Look, unfortunately, that will just take too long. If we attack the builder side, that will take 2 years to have even the most modest impact. The bigger impact,
and that's not really where you play.
The bigger impact, exactly. Well, we play on both, but the bigger impact is on existing home sales, and that's where there's been less inventory because so many homeowners are locked into low mortgage rates, and they don't want to lose that low mortgage rate to transfer to a 6% mortgage rate. So the way to expand the existing home sale market is to reduce the barriers to entry. And so let me give you some examples.
Yeah.
Why do sellers say, when's the right time to list? There shouldn't be a right time to list, but they're worried about days on market. Why is there a fear of what price should we go at? Well, there shouldn't be a price drop history. That shouldn't be a conversation. You know, my wife would never want to sell her home. But if you ask her, is there a price you'd sell your home?
Yes.
There's a price. There's always a price.
But don't those histories inform the potential seller? Doesn't that data show and help inform a buyer? Doesn't that provide more information to the market?
So look, if I were buying your company, I would love if your investment banker told me how long you've been trying to sell your company, how many times you dropped the price. But that's not what I'm buying. That's a negotiating point for leverage. If buyers deserve to know price drop history and days on market, sellers deserve to know how long has that buyer been searching, how many times they put in offers that fell through and fell out of contract. And so we believe if you, the buyer, what you need is you need more inventory. So to help you, the buyer, the best thing that we can do is just let the seller sell however they want. And if we do that, there'll be more inventory.
So then wait a minute. So then now does the seller have more information, or you're just getting rid of it and it's just kind of a through?
We're just getting rid of it for the first time.
So you just list it and you go.
If you go to Australia, the word days on market and price drop history are not on the sites. They don't exist. The reason why is that system was built for sellers. Here, it was built because everyone's forced to put in the MLS. It was built for buyers. And so we're just trying to bring the pendulum back and give individual homeowners the same advantages as the builders. Builders market without days on market and price drop history, so we should give homeowners the same opportunity.
What makes you so sure this is going to work in terms of the affordability issue? Because I also wonder if you remove some of that information, to Tim's point, if there have been price drops, that ultimately brings down the cost of the price of housing. But if you don't have that and it just kind of stays and maybe doesn't really indicate what's happening at the broader market, doesn't that lead to price appreciation? And that doesn't get to the affordability
Well, I think there's
issue.
two things to point out. I think the first thing is, I think no one can disagree that today there is no inventory, right? Like, we have an issue with the way the system works today, which is that we looked at some Redfin data, and so half of the homes that are listed right now have been on the market for 60 days plus. So we have a lot of stale inventory. You don't have a lot of new inventory. So
I even see that in
fundamentally,
my neighborhood because I like to check and keep an eye in terms
there's
of
just
valuation.
there's not much
But stuff
inventory
stays-
coming on market.
Yeah.
And so to me, it's less about some of these metrics. It's more just like, how do you create more inventory? More inventory creates more competition, it reduces scarcity, and that creates pricing advantage. And so the bigger picture for us is just, how do you attack the supply problem? Because without sellers, you're not going to have buyers, and every seller ends up being a buyer, and that's really what we're focused on here.
Robert, you are a data-driven guy. How do you measure if this actually works? Like, what's the metric?
We will see more inventory come to the market.
How much more inventory?
Before restrictions came into the industry through something called clear cooperation, which forced every individual American homeowner to put their listing in the MLS after 24 hours, 90% of our listings started off outside of the MLS system. And when that rule came into effect, we saw less inventory. And so I can't give you the exact number, but we will see how much more inventory we will bring to the market, and we'll share that with the public.
Will this work in any rate environment?
Absolutely. Just, there should be no fear to list. There should be no downside to list. There should be no barrier to list. You should just be able to list however you want. Do you want to not disclose the price and say price upon request? Do you want to have how many photos you want? Do you want to have no photos? Do you want to have an address that just says 5th Avenue luxury penthouse without saying the exact unit number? Whatever you want. If you take away all those barriers, you will have more inventory.
Help me understand, too, what does this do to the selling process? The real estate agents who are selling properties, who often, sometimes I would say, covet certain properties. Does that change any of that?
Well, obviously, I believe deeply in real estate agents. My mom is a real estate agent.
That's what I'm trying
All
to
my
understand.
clients are agents.
Is your
Yeah,
mom calling you and say, what the heck are you thinking about?
My mom supports this idea.
Okay.
She supports the partnership. But no, agents are at the center of this. And we, both our companies with loan officers and real estate agents, we are empowering the real estate professionals that are required to make the transaction happen.
The other thing I would add around the rate environment to that question.
Because you guys did kind of smile when I said what was going on with the 10-year and how we saw rates move down.
Well,
so it does impact this market.
It's great
big
to
time.
see rates moving in a good direction. We think that gets more buyers off the sideline. But I think what's unique
Unless the
about
economy's slowing down and
That's
nobody's
right.
going to be working.
That's right. What's unique about Rocket in particular is that Rocket has the home search experience. We have a servicing book. And because of that, we can acquire clients at a lower cost. And when you can acquire clients at a lower cost, you can help save them money on the overall transaction. And so you eliminate a lot of the friction, you become more efficient by using technology, and that turns into real savings in terms of lower rates and lower fees. And that happens in any rate environment.
So
That's what's unique about
so
our
that means
business model.
some of the mortgage origination costs, like some of these things will go away or be reduced or what?
That's right, and that's because many of the clients are buying. They're already homeowners that we service, and then they're buying their next home, and so the cost to acquire that client becomes significantly lower. And because we do a good job servicing them, we can then provide them with their next purchase, a cash out refinance, a home equity loan. And we can do all of that more efficiently because that cost of acquisition has come down significantly.
Well, we have a couple minutes left, and we want to talk a little bit about the macro environment and the individual companies. As Carol mentioned, both of you guys reported earnings late yesterday. Compass shares down about 1.5%. The company forecasts first quarter revenue that topped analyst estimates. When you look out out at the landscape right now, where are you seeing signals of strength and where are you seeing signals of weakness, Robert?
So overall, we have more inventory, which has been the key bottleneck over the last 5 years, where just has not been enough inventory. So we have 9% more inventory than we did this time last year, but still less than pre-pandemic levels. Prices are basically flat to up 1%. We have 4% more pending contracts than we did this time last year. So things are okay. We're not out of the woods yet. Mortgage rates being at 3-year lows at just under 6%. I think the key is, can we see sub 6% mortgage rates, not for a day, not for 3 days, but for a season? If we do, then I think we will see strength in the market.
Varun, same question to you. What are you seeing when it comes to the macro? How does it compare from last year, a year ago, 6 months ago? And your visibility on the outlook?
Yeah, I mean, generally, when you look at all the different industry forecasts, we expect the mortgage market to be bigger in 2026 than 2025. I mean, the question is just how much bigger and how far up and to the right.
So more activity.
More activity, more purchase behavior, more refinance behavior. Obviously, as Robert said, we see inventory starting to creep up a little bit, which is good. We're starting to see rates cooperate, which is good. And I think that for the first time, you're starting to see a 5 handle on the rate environment, and that's going to bring a lot of buyers off the sideline. And so we do expect 26 to be better than 25, but a big part of this is just some companies have built a business model to be able to thrive in any rate environment, and that's kind of what our focus is.
We know the president is so focused on affordability. He's focused on making sure that people can get into homes. Have either of you guys had conversations with the administration?
We have. I mean, we have great relationships with everyone at the administrative world, and we support reform. We support affordability. We support new programs, new initiatives, anything we can do to create more buyers and sellers and improve the supply challenge that we have in this country, we support.
Was there anything in terms of a specific program that you would like or policy that you'd like to see the administration support?
Yeah, I'd very much like to see them eliminate NAR, the National Association of Realtors, clear cooperation rule that forces homeowners to put their listings in the MLS. It's not NAR's home, it's the homeowner's home, and they should have the freedom to market their home when, where, and how they want.
Great stuff. Please come back. Let us know how this partnership's going and the impact that you guys are seeing. Really appreciate it. Robert Refkin, founder, chairman, and CEO of Compass International Holdings, and Varun Krishna, president and CEO of Rocket Companies, joining us right here in studio. Gentlemen, thank you again.
Hey, let's get on over to the Bloomberg Business Week studio. Charlie Pellet is standing by. He's got an eye on markets with a little over 90 minutes to go. Hey, Charlie.
Well, hello there, Tim and Carol. We have got the Dow, the S&P, NASDAQ all in the red. And right now, just about 1 hour, 40 minutes to go until we wrap up the trading month of February. Where's this year going? Also, we wrap up a week for February and the week on track for a losing week right now. A lot of red on the screens right now. Stocks are falling on credit and war jitters. Oil is surging, and the S&P now down by 0.8%, back at 68.53 as we head into the trading month of March. S&P down 54. We've got the Dow down 661 right now, a drop there of 1.3%, while the NASDAQ Composite Index is down 1.2%. The Russell 2000 Index of small cap shares hit particularly hard today, down now by 2.1%. The VIX closing in on 21. The 10-year 3.95%. Spot gold up $63 the ounce to $52.48. On the precious metal, that's an advance of 1.2%. Brent crude up 2.6%. West Texas Intermediate crude on geopolitical tensions also up by 2.6%. Bitcoin right now down 3.3%, 65,240 on Bitcoin. Another volatile week there. Dell shares are surging after the company last night gave an outlook for sales of its AI servers that exceeded estimates, a sign of robust demand for machines helping fuel the AI data center build-out. Dell shares up now by 21.75% after earnings. CoreWeave, an operator of AI data centers, going the other way after earnings. CoreWeave right now down by 21.2%. And briefly, Netflix rolling the closing credits. It decides to walk away from Warner Brothers Discovery. Investors are cheering. Right now we got Netflix up by 13%. Paramount Skydance, the apparent victor, up 23.8%. Warner Brothers Discovery, the target, lower now by 1.9%. Recapping, a down Friday, down week as well. S&P down 0.8%. Carol and Tim, that is a Bloomberg Business Flash.
Yep, down about 1.2% on the S&P for the month of February, and down about 2.6% for for the month of February for the NASDAQ 100. Hey, we are also watching shares of Zscaler. They're getting smacked down a bit today, down about 13%, hitting a 52-week low, now down about 36% year to date. Stock is down more than 60% since November of 2021.
Investors selling shares after the security software company's second quarter results. They beat estimates. They weren't, though, seen as strong enough to reverse recent negative sentiment toward software companies. It comes on top of a tough week for company shares. Stock tumbled 10% on Monday on the AI scare. Worries again, Carol, over the impact of AI on companies and industries. Shares, though, rallied back close to 17% in the next 3 days, thanks to a calming down a little bit in the trade.
Yeah, it's been a crazy week for Zscaler, no doubt about that. We should point out a bunch of analysts weighing in on the company's earnings and lowering their price target on the stock. But let's get into the business, the outlook, and more. Delighted to have back with us Jay Chaudhry. He's founder, chairman, and CEO of Zscaler, joining us from San Jose, California. Welcome back. Also with us, someone who follows this company very closely, our own Mandeep Singh. He is Bloomberg Intelligence Global Head of Technology Research here in studio. Jay, tell us a little about the quarter, and I think we all want to know how AI is impacting your business. Let's start there.
So AI is a massive opportunity because what AI is doing is bringing lots of AI agents in the enterprise. Agents are somewhat like people. Traditionally, users have been the weakest link for cybersecurity. Now AI agents are becoming the weakest link. How do you secure them? Well, you need to make sure that you can do one-to-one connection. That means an agent can only access certain applications and nothing more. That requires a global infrastructure that Zscaler has built in the form of Zero Trust Exchange. That's why we're very bullish about our future.
So go ahead, Mandeep.
Yeah, I mean, Jay, I think the street obviously didn't like the billings number in your print, and that was seen as, moderating. Like, was that attributed primarily because of seat growth slowing down, and we keep hearing, layoffs like the one that Square announced yesterday, or was there anything more to the billings number last night?
So billings is a secondary number for us. The number one area of focus for us is ARR growth and revenue growth. Our revenue grew 26% year over year, ARR 25%, free cash flow 18%, operating margin 22%. They're all great numbers. Now, we have a Z-Flex program that gives some flexibility in billings. So billings can get impacted, but with Z-Flex, customers are doing multi-year, 4 or 5 year deals with us, committing to Zscaler, which is a very strong sign. So I don't think the billing should be viewed in a negative light. Overall business is very strong.
Jay, I want to go back to what you said about AI and protecting these AI agents and just how you're thinking about that, because I think a lot of people are trying not just to understand the impact of AI on cybersecurity, but the impact of AI on a company like yours when it comes to operations. So from an operations perspective, with the context of what we saw from Block late yesterday, the company relying more on AI and less on actual human beings, how are you using AI at the company operationally to increase your margins, to make your employees more productive?
Or get rid of employees.
Nobody's going to answer that.
Well,
everyone should and need to use AI. We use AI to make sure we can deliver better customer support to our employees. The AI agents are helping us. We are increasing in productivity of our engineering team by using all this stuff. But I think the numbers that Block shared, they seem way out of line that anyone else is saying out there. We are seeing some reduction in hiring, additional hiring, but I do think that in some of these critical areas, you need people. I am hiring more developers for AI development, for example. And for us, many times customers think that as the number of employees may not grow, that means it impacts our user-based pricing. The user base may slow down from growth point of view, but we are actually securing all the agentic traffic, all the agents. When we have millions of users, we'll have billions of agents to secure. That provides an opportunity for us to secure the enterprises and monetize it.
Maybe, Jay, I want to go to a different topic around sovereigns, because we've been hearing more and more that, every sovereign wants to build their own AI. How does that impact a company like yours that operates globally, given, sovereigns are more keen to deploy this on-prem? Does that impact a cloud security company like yours?
Actually, sovereign clouds is a positive development and opportunity for us. We built Zscaler architecture where the data that we store, which is essentially metadata and logs, can stay in that country. We have had a cloud that's built for EU and is EU with data in EU for a long time. Now, many of the large countries also want to operate the cloud in that country as well. We're working with many large countries to really provide them a sovereign security cloud that will access the data wherever the data is. So there are two aspects. There may be AI models sitting in India or France or Germany, but our sovereign security cloud will make sure they can access the model, whether it's sovereign or non-sovereign. So overall, it's a positive thing for us. It's our architecture that allows us to build sovereign security clouds.
Yeah, and look, Amazon today announced this $50 billion investment in OpenAI. Google, we know they've closed their acquisition of Wiz. So how do you see, the hyperscalers playing in this space where they obviously are deploying the models on their cloud, they are bundling security? Is that going to have some sort of an impact in terms of the AI security aspect that you alluded to?
Not directly on providers like Zscaler. Look, hyperscalers, the cloud providers, have been building applications, and people said, oh, can they take over security market? We haven't seen any of that. It is true that AI model builders will provide some of the applications, such as perhaps testing and red teaming. But when it comes to being the zero trust exchange, that makes sure that agents created by Microsoft, OpenAI, Anthropic, or whoever can securely access the right application. They look for someone like Zscaler. We become the Switzerland that connects right party to right party, just like we've built such a strong business for securing users in spite of all these other vendors out there. The more models they create, the more application they create, the more agents that get built, the more opportunities Zscaler has.
Does that mean the hyperscalers, you're getting bigger orders from them? I'm just curious. Like, where are you getting business? And is it the hyperscalers? Is it, yeah.
So we are getting business from enterprises because enterprises need to secure access to applications no matter where they are. So applications become destination for us. We are the switchboard providing zero trust access, the market we pioneered. And we are way ahead of anyone else. The rest of the market is doing firewalls and VPNs. And we are probably the only real credible choice for enterprises. And that's what has given us business. Over 45% of Fortune 500 companies
so Jay, in this
depend
case,
upon us today.
How are these enterprises measuring the efficacy of your product versus, whatever is coming bundled with the hyperscale solutions? Like, what is it that is really making them go with Zscaler in terms of the efficacy aspect specifically?
So Zscaler is not a piece of code that you bundle with the hyperscaler, it goes out there. Zscaler is a globally distributed infrastructure sitting in 160 locations around the globe. So any traffic from an enterprise that may be from users, that may be from cloud workloads, that may be from AI agents, it needs to access certain application services, and we become the switchboard, the policy enforcement for that. That traffic will go to Microsoft, AWS, Google, Anthropic, doesn't matter. We are the policy enforcement point to make sure right people get access to right application, right agents get access to right applications. Imagine agents getting hacked and hijacked on your network. That's a problem. That's what we secure.
You mentioned Anthropic, and fresh in our minds is what's happening between the U.S. government, the Department of Defense, and Anthropic right now. We're going to be covering that in our 4 o'clock hour today. But on the government, is the U.S. government actually buying more of your services right now? Are deals happening? Are they getting delayed? How would you characterize that?
So federal is a strong market segment for us. Last year, it went through some changes, but it is back on track. We have strong pipeline. We have strong business in the federal government. 13 of the 14 cabinet level agencies use Zscaler to secure themselves.
So just to recap, 30 seconds. AI not a threat to your business? I mean, software.
AI is an opportunity for our business.
Not a threat.
Not a threat at all. And securing agentic technology is the number one thing CIOs want to make sure they can do it. That's holding them back from larger rollout, and we become enablers of it.
Well, we always appreciate getting time with you. Jay, thank you so much on what was a busy week. Jay Chowdhury there, founder, chairman, and CEO of Zscaler. Have a good weekend, along with, of course, our own Mandeep Singh, Bloomberg Intelligence Global Head of Technology. Got to say, though, Zscaler, we're continuing to see this stock trade lower in the trade, down about 13%.
I'm thinking about the weekend and what's happening tomorrow at 7 a.m. Our new weekend show, Bloomberg This Weekend. David Gura, Christina Ruffini, and Lisa Mateo, Bloomberg TV and Radio.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The U.S. 2-year now at the lowest since 2022. Bonds extend the rally. We have got the 2-year yielding 3.37% and the 10-year 3.95%, moving below 4% today. The Dow, the S&P, NASDAQ, all in the red. Stocks are falling on credit and war jitters. Oil is surging. S&P right now down 56, drop there of 0.8%. The Dow down 673, down 1.4%. NASDAQ lower by 1.3%. And the Russell 2000 index of small cap shares down 2.2%. Again, the 10-year at 3.95%. That 2-year, 3.37%. Gold up 1.1%, 52.44 the ounce. West Texas Intermediate crude is rallying 3% on geopolitical tensions, 67.18 a barrel on WTI, and Bitcoin down 3.1%. Bitcoin now at 63,350. Jack Dorsey's block cutting 4,000 employees, reducing its workforce by nearly half in a move the company describes as a bet on artificial intelligence changing the future of labor productivity. Shares of Block today, ticker XYZ, they're surging on the news, up by 15.4%. Again, recapping, we've got the 2-year yielding 3.37%. S&P down 57, drop there of 0.8%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Shares of Duolingo are tanking today. The stock, in fact, right now down about 17%. It did, though, hit its lowest intraday since February of 2023, now down more than 80% since May of 2025. And about 22% of the float is short, so there's some real negative sentiment on the name. Shares sliding after the company said its drive to gain subscribers would mean slower earnings growth and narrower profit margins in the short term. Tim, you keep reminding us that there's a lot going on at the company, some transformations here.
Yeah, the company said it would step up investment in AI and sacrifice some degree of monetization in order to accelerate user growth and engagement. The goal, double the current number of daily active users to 100 million in 2028. Great to be talking again with a member of the Duolingo C-suite. Back with us, Luis von Ahn, co-founder, chairman, president, and CEO of Duolingo. He joins us from New York. Luis, always good to see you. We're going to talk about the quarter and the outlook in a minute, but I want to start big picture with AI because, you've been thinking and researching AI for decades at this point. You're a recipient of a MacArthur Genius Foundation grant back in the year 2006 for working on AI. This is nothing new to you, what's happening right now. But answer the question for investors. Is AI a threat to your business?
Well, first of all, thank you for having me. But, I think that we're in a unique point in time where because of AI, we're going to be able to teach significantly better. Duolingo is by a wide margin the largest app in education in the world. And I think because of that, we're going to be able to really take advantage of this, AI boom to be able to teach significantly better. And our sense is that within the next few years, we're going to have an app that teaches us well as a one-on-one tutor, but also is as fun as a mobile game. And if we're really able to do that, I think there's just so much more that we can capture. So that's what we're doing. We're really shooting for that.
So jumping on the AI bandwagon, I guess what investors want to know is what is Duolingo's advantage over potential new AI learning apps?
Well, at the moment we're not particularly concerned with competition in terms of other education apps. We have, for example, for language learning, we have about 85% of the market share of all daily active users of people who are learning a language. So we have huge scale, and what differentiates us is that because of that scale, we just have more data into how people learn than anybody else, and we can use that to train our own specific models. So we just have the advantage of scale of being able to watch literally billions of exercises every day by people who are learning different things.
But as you know, this is moving pretty quickly, the AI impact, it seems. And to be fair, you are right. Like, we'll see. Many say this is, we're kind of early in on this process and the impact. But what does Duolingo offer that can't easily be replicated by a large language model? And how do you kind of view that competitive landscape evolving?
Yeah, there's a number of things. For one, with Duolingo, what we do is we try to build a habit of learning. mean, for example, 15 million of our daily active users have a streak of longer than 365 days, meaning they have been using Duolingo for a year or longer and haven't missed a day. So we're really trying to build a habit for that. And this is why Duolingo is part game, part education. And that's, I think that's just the right thing. It just turns out the hardest thing about learning something by yourself is staying motivated. The content to learn has been there for a long time. So for example, it's, you've been able to learn a language by just reading a book for hundreds of years. That has been there. It's just what we do differently is we motivate people to continue doing it. And that's hard to get right.
So what are investors not getting right in your view? Carol mentioned some of the stock moves and now, down at a point that you haven't seen since February of 2023. What are investors missing here?
I think it's a matter of timing. On our end, we are trying to build a company for the very long term. We're trying to do something that, for example, in our shareholder letter, we said that we're shooting to have a double the daily active users that we have now. I mean, at the moment, we have a little north of 50 million daily active users worldwide. We're trying to have more than 100 million, but we're saying that that's going to take some time, and so we're concentrated in the long term. And what we're doing is we're trading off this year's financial metrics for a much larger thing in the long term.
Yeah, go ahead.
Well, I get that, right? Companies have to invest in order to provide growth going forward. And I think it's fair to say that we understand why investors, they're not loving your forecast for first quarter adjusted EBITDA. That's missing the mark from what the street was expecting. 2026 revenue, also that forecast missing. Same story for 2026 adjusted EBITDA overall. So you talk about building this to double your daily active users to 100 million. How long will that build actually take? And what kind of visibility do you have on that to kind of maybe reassure investors that this isn't something that takes longer while the AI world continues to challenge established players?
Yeah, the way we're seeing it is we're going to spend this year really working on three things, really. Teaching better, improving the free user experience, and also expanding to other subjects. By now, we already teach math, music, and chess. And we've been growing quite a bit. About 15% of our active users are learning things that are other than languages. Our chess course has grown quite significantly. So these are the three things that we're working on, and we're going to be working on that for the rest of the year. And we're expecting that towards the end of the year, we're going to see some improvements in our year-over-year growth rate. We're still growing. We've had 5 years of really phenomenal growth. We IPO'd in 2021, and since then, we've more than 5x'd our active users. So, we expect that we'll continue growing pretty strongly.
Luis, is the idea in making changes to the free tier, is it to get more people who don't use Duolingo now to use the free tier? Or is it to get those free tier users to upgrade to a paid tier?
Historically, what we have done is we have tried to the way we generate value on Duolingo is there's two parts to it. One is how many active users we have. That's kind of like the size of the pie. That has grown quite significantly. And then there's how many of these people are paying us because we have this freemium model. That's like the fraction of the pie that are payers. Historically, we have worked on both. We have worked on growing the pie and also growing the fraction of the pie that is paying, which is why our bookings have grown really significantly over the last 5 years. This year, we're mainly concentrating on just growing the pie. That is the number of people that are actively using Duolingo, because it is our belief that because of the moment that we're in, we really want to have as many people as possible actually learning something meaningful in Duolingo. And once we're able to do that, one of the main advantages that we have, certainly against new entrants, is scale. There's just no other education app that has the scale that we have.
Well, great to always get a check on what you guys are up to, and really appreciate it. Love to hear more, too, as we go out throughout the year, how things are going.
I'm at 355, I think, on my Duolingo. How many days? Yeah, I'm almost at a year.
I think Sebastian actually said he's on, his streak is about 778. That's one of our producers. Hey, Luis, thank you so much. Luis Vanon, co-founder, chairman, president, and CEO of Duolingo. When we come back, a check on trading and stocks on the move. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, getting ready to start the last hour of trading on this Friday, wrapping up the day, the week, and of course the month of February. Having said that, yields have definitely moved lower, which is interesting because we got a hot producer price index, so a hot inflation print earlier today. As for stocks, a little bit lower, down about almost 0.9% on the S&P 500, off 100 that is, and down about 0.75 percentage point, Tim.
I'm Tim Stenovec along with Carol Masser. Let's take a look at some stocks on the move today. We're joined by Bloomberg News cross-asset reporter Isabel Lee. A lot to choose from today.
A lot to choose from, but I made sure to choose double-digit gains or declines because go big. It's Friday. So let's start with Block. Ticker is XYZ, which is also cool on its own. So shares are up around 15%. This comes after the company said it was reducing its workforce by almost half in a bet that AI will just change labor productivity. So that amounts to some 4,000 employees. And Jack Dorsey's company has been restructuring its business model since staffing in 2024. That's as the stock has lagged. And I want to bring up this point that they have really hired so much. They tripled their workforce between 2019 to 2023, which is why analysts say, is it really AI or
just a reset?
Maybe,
Pandemic over,
yes.
right? And like we heard that from a lot of companies, I feel like, over the last couple of years. So is that what's going on, or is it something more dramatic when it comes to AI?
Because the move, which was announced in a shareholder letter, offered little details.
Jack Dorsey did respond to some of that criticism. He said, yes, we overhired during COVID because I incorrectly built two separate company structures, Square and Cash App, rather than one, which we corrected mid-2024. But this misses all the complexity we took on through lending, banking, and buy now, pay later, and that we're now targeting $2 million in gross profit per person, 4x our pre-COVID efficiency, which stayed flat at $500,000 from 2019 to 2024, and we have to do and run an efficient company better than most.
What does that mean?
He says this is the way to make it more efficient. He's acknowledging that they overhired, but this is the right. You can see it on the screen right there.
Yes, they are investing heavily in AI tools to run more efficiently. They have their own AI tool called Goose, like the singular version of geese. So, I mean, who knows? Only time will tell. But for now, investors are liking it. I mean, up 15%. That's pretty big.
People tend to like it.
Yeah, I mean,
unless you can't do everything you need to do.
The story here is this just something that Block is going to do, or is this going to become commonplace? And that's the fear.
I know, especially after the Citrini report.
Yeah,
we're just
very true.
Dun, 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 which I like to do. Okay, yeah, there are questions. We're going to dig into more of that later. Let's go to Duolingo. We just talked to the company's CEO.
I know, that was a good interview. Duolingo, tickers DUOL, shares are down more than 17% after the company gave a full-year outlook that is below expectations. This is the lowest since February 2023 if you type SINS Go. So Duolingo is a language learning software, and a lot of people are obsessed with this, including my team leader, Valdana. She has a more than 2,000-day streak. And I said, that is a little crazy.
I mean, this is how many... Wait, this means every day you're on the platform?
Yeah.
Yes.
Exactly. So
Learning...
I'm in the 350.
And you're doing
Tim,
what, chess?
That's nothing.
No, I know.
That is nothing.
But what are you learning?
Language. She's learning French.
I do Spanish, but I did chess.
2,128.
And she's doing Spanish.
I have a 5-day streak, I think, 5 years ago.
It's not too late.
But I'm committed to my job, not the language.
Oh, sick burn.
Isabel's bosses, are you listening?
Valdana is my boss. So
well done,
why are shares down? Because the company said that in their drive to gain subscribers, this would mean slower earnings growth and narrower profit margins. I also feel like maybe this was a pandemic thing, you know, when people were stuck at home. Now I'm in between the office, travel, meeting friends. So maybe it could be that too.
But they're a learning platform, so it's math, it's other things, right? So they're doing some changes,
chess, math,
right?
music.
Yes, absolutely.
Mostly language.
But time is finite. Wow. Deep.
Yeah, and Luis has talked about, he didn't talk about this with our interview just now, which if you missed, you can check it out on our podcast feed, but he has in the past talked about we compete with, you know, anytime somebody opens their phone. So we compete with something like Netflix, or not Netflix, Instagram or
TikTok,
Facebook, TikTok, anything like that.
Or Bloomberg
that's why we need to make it fun.
Or maybe you just sit there and go,
Exactly. That's
It's a meditation
really
app.
It's very okay. Let's go to Figs.
Figs. Ticker is Figs. Figs. So I have never worn Figs. I'm not a medical worker, but a lot of my friends who are love it.
They're comfy scrubs.
Okay, exactly. So my friends in Asia, they
I
would
remember
order.
having family members in the hospital, and they were really cute and
Exactly.
comfortable. And like you would go to the nurse and like, can we have some?
They'd order here, and I'd have to bring them back, and they're also like way more expensive than others. But then my friends would say, no, it's really worth it.
But they like them.
Yes, it's the
Okay.
quality and stuff. So anyway, shares are up, let's see, 23%. This
Cool.
is the highest since May 2022. The company results were much stronger than expected, prompting a lot of analyst upgrades. One of them is Goldman Sachs. They said that this shows momentum. KeyBank also upgraded. They said the better than expected results show that Figs is focusing on delivering profitable, sustainable growth. And Bloomberg Intelligence also said that this is really
Having a sample sale as we speak, up to 40% off.
Why do you know you wear Figs, Carol?
No, I'm just, Googling. That silly little tool.
A little tool called Google.
Isabel Lee, thank you so much. All right, check out our Stock Movers podcast. Find it on Apple, Spotify, or anywhere you get your podcast. That's going to do it for this hour. We continue on Bloomberg Business Week Daily. The close coming your way on Bloomberg TV.
This is CBS News on the Hour, sponsored by JTV.com.
I'm Jennifer Kuiper. The U.S. has cleared some diplomatic staff to leave Israel amid tensions with Iran. No deal has been reached on Iran ending its nuclear program. President Trump, before heading to Texas earlier, told reporters that he's not happy with Iran.
It'd be wonderful if they'd negotiate really in good conscience, good faith and conscience, but they are not getting there.
As CBS's Nancy Cordes reports,
the Iranians had been reporting that the talks were going well. In fact, they said that yesterday were the most extensive, most detailed talks so far, and they felt that they were getting closer to an agreement. And that's why so many of us out there on the White House South Lawn wanted to ask the president how things are going from his point of view. And it was a bit of a surprise when he said he doesn't think that things are going well.
Former President Bill Clinton is testifying about the Epstein scandal before the House Oversight Committee. Republican Florida Congresswoman Anna Paulina Luna is on the committee. She says, based on testimony from the Clintons, Epstein knowingly targeted influential people.
President Clinton, as of right now, is cooperative and answering all of our questions, and that it leads me to believe that if we can remove the partisan nature of this investigation, we actually might be able to get justice.
The former president says his brief acquaintance with Epstein ended years before the late sex offender's crimes came to light. NASA Administrator Jared Isaacman says Artemis 3 will no longer fly astronauts to the moon. He says 2 later missions will attempt to do so in 2028. Isaacman says going from the planned moon flyby via Artemis 2 straight to a moon landing was not going to work.
We are doing this to get back to the moon and have the capability to stay, certainly to build a moon base, which is going to be ideal, which can be an ideal learning environment for us.
He says a 3-year launch cadence was too long. The fighting between Pakistan and Afghanistan is raising a lot of concern around the world. CBS's Cammie McCormick.
UN Secretary General Antonio Guterres called for an immediate ceasefire and said he's deeply concerned about the escalation of violence. Pakistan's defense minister says the 2 countries are now in open war. Tensions have been high for months. Pakistan accuses Afghanistan's Taliban government of harboring militant groups who have staged attacks across the border. Pakistan is also angry about the Taliban's ties with its arch rival, India.
U.S. wholesale prices came in hotter than expected last month. The Labor Department reports its Producer Price Index, which measures inflation before it hits consumers, rose 0.05% from December and 2.9% from January 2025. Stocks are down on Wall Street. The Dow has fallen 713 points. The Nasdaq is down 291. This is CBS News. Research from Boston University School of Medicine shows that playing football may have lasting effects on the brain.
The study found that former players showed more memory problems and mood issues than non-players. And even decades later, they had
worse performance on cognitive tests, as well as more symptoms of depression.
Neurology professor Michael Alasko said it was especially apparent in those who played longer and at a higher level.
These weren't just professional football players, but they played college, and they also played in high school and youth, and we saw the symptoms get worse the more the football that they played.
Stacey Lynn, CBS News.
Teenage girls are most likely to tear their ACLs, and researchers are pressing the sports world to take the devastating injury more seriously and trying to bolster prevention efforts. Despite decades of research on it, parents, researchers, and trainers say that information is not being used enough by teams, coaches, or sports leagues. Jennifer Kuiper, CBS.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we're just about 55 minutes away from the closing bell on this Friday, February 27th. Carol Masser, Tim Stanovic, live in our Bloomberg Interactive
This is
Broker
it for
Studio.
February.
See ya.
Yeah.
See ya.
March is busy.
March, I know you're like, he's a little overwhelmed. He's got a lot going on. You will hear about all of it. In the meantime,
I might be here and I might not. Might be too busy to do the show.
You'll be here, buddy.
I'll be, I know.
Good afternoon, everybody. S&P 500, kind of an even split in the index. Got about 240 to the upside, 260 to the downside. So, that's the trade overall. But if you look at the major market averages, we're definitely seeing those numbers all in the red, down about 0.8% on the S&P 500. NASDAQ 100 down 2/3% off our worst and best levels of the session. But we'll talk about the trade in just a moment. What are we doing this hour?
I'm looking
and
at shares of
hours?
Block, the company formerly known as Square, up 15%. Highest going back to, just last month, but the biggest move going all the way back to 2024. What you need to know about those layoffs, we're going to talk about it from a lot of different angles. So we're going to talk about the fintech angle. Emily Mason is going to be back with us.
Block the company in the business.
Block the company in the business, yeah.
Okay.
We're going to talk about that with Emily Mason. The AI angle, Rachel Metz is going to talk about, she's our AI reporter, one of our AI reporters. She's fantastic. She's going to talk about the effect of AI on the labor market, because that's the conversation that people are having today. And then we've got the CEO and director of the fintech company Payoneer, publicly traded company, $1.5 billion market cap, joining us in just a few minutes. How is he using the technology? How's the company using the tech? What are his thoughts on these Block layoffs and more?
You're on a roll. Keep going.
All right, so we're going to talk credit too. Carol got this on my radar early this morning.
Sit back here.
Well, this is you.
No, I am obsessed. We all are as a team about the private credit markets and the private markets overall, because bank shares are getting walloped by more cockroach credit woes. Our senior editor of credit's going to join us. I don't know. There's multiple stories about what's going on with private credit firms, Apollo, Marathon, Asset Management, a couple of other firms. We're trying to make sense about what this means. Who was it that said? Who was it that said the thing? Was it Jamie?
About cockroaches?
No, not about cockroaches, but akin to the 2008 crisis. Who just recently said that?
Jamie Dimon said
but
he said, and this was on Monday. We reported on.
Sorry,
we talked about it on
Monday
Tuesday.
Seems like a long time ago.
He said he's seeing competitors do things that are not very smart. Not in those words.
Right.
That he saw in 06, 07, 08.
I just feel like there's momentum, so we're trying to stay on top of it for you. And then, speak of stay on top of stuff, there's a lot more stories when it comes to the Epstein files. Stuff that's been posted, pulled back, new stuff. We're going to do the week wrap-up with our own Jason Leopold, who's on it.
I got to throw one more in there. Katrina Manson is going to be joining us in the 4 o'clock hour, because the clock is ticking for Anthropic and the Department of Defense. We'll see what happens later. Anthropic came out last night and said they're not going to cede, but then the Department of Defense earlier today saying, hey, we want them to have more time to be open to discussion.
You mentioned Rachel Metz and AI, and we're going to get to Charlie in just a moment, but we're also going to get into OpenAI, trying to understand their balance sheet, because there's another deal, another funding round. This is a company that just keeps getting money, and we're like, what's really the business and what's the balance sheet look like and what does it mean? So we got a lot coming your way. Do not go anywhere. Grab a beverage of your choice, as Tom Keene would say, but do stay with us. All right, let's get a check on the trade. Here is once again Charlie.
All right, thank you very much. 50 minutes to go until that closing bell clangs on Wall Street. We wrap up the trading month of February. We wrap up the week. It will be a losing week and a losing month. Do want to begin, however, with a new development in the Paramount Warner Brothers saga. Now, sources moments ago telling Bloomberg that Paramount Skydance has paid that $2.8 billion breakup fee owed to Netflix after the streaming company dropped its planned deal to buy parts of Warner Brothers Discovery. Those sources also say Warner Brothers is expected to announce later today that it formally signed an agreement to be acquired by Paramount. Right now, we got Paramount shares surging 19.6%. Netflix investors are cheering as Netflix walks away, up 13.3%. Warner Brothers Discovery down by 2%. The Dow, the S&P, NASDAQ, all in the red right now. S&P down 0.8% at 68.54. Dow Industrials down 672, drop there of 1.4%, while NASDAQ is down 1.2%. The 10-year at 3.96%, falling below 4% today. The 2-year, 3.37%. Gold up 1.3%. Geopolitical tensions, 52.51 the ounce. West Texas Intermediate crude up 2.8% now, 67.07 a barrel, and Bitcoin down 2.9%, 65,535 on Bitcoin. A Bloomberg exclusive as we launch Bloomberg this weekend. Tomorrow morning, we sat down with House Minority Leader Hakeem Jeffries for a wide-ranging conversation. Jeffries spoke with Bloomberg's David Gura and Christina Ruffini and said the Trump administration is the most corrupt in American history.
As Democrats, our approach is going to be very different. We'll be laser focused on driving down the high cost of living, fixing our broken healthcare system, and cleaning up corruption wherever it's found, in the Congress, at the Supreme Court, and certainly with this administration, the most corrupt in American history.
House Minority Leader Hakeem Jeffries. And by the way, listen or watch the entire conversation tomorrow on our new show, Bloomberg This Weekend. You can catch it on Bloomberg TV, radio, and the Bloomberg Business app, Saturdays and Sundays, starting at 7 a.m. Eastern. Recapping, S&P down 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week Daily. Carol Master, Tim Stanovic. Bloomberg Business Week, it is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. So to get a free gold and silver info guide, learn how to add metals to your IRA or 401k tax and penalty free. Just head to goldencrestmetals.com/guide. That is goldencrestmetals.com/guide. Tim?
I'm looking at shares of Block, ticker XYZ. They're going up today by 15.2% as we speak, up as much as 21% earlier in the session. The news, cutting 4,000 employees, reducing its workforce by close to half in a move the fintech firm is describing as a bet on AI changing the future of labor productivity. For the latest, we bring back Emily Mason, Bloomberg News fintech and crypto reporter. She joins us from New York City. Emily, you joined us as soon as this broke yesterday on the program. We've had some time to think about it. Analysts have had time to weigh in. Jack Dorsey has had time to explain himself more on X, which is just funny because it was Twitter when he invented it. But that's neither here nor there. Is the pivot to AI, are analysts saying this is actually something it's doing, or is this a company that was bloated? Is it using it as an excuse to just get rid of employees en masse?
Yeah, I mean, that is kind of the question everyone's trying to answer. I've heard different things from different analysts. Some of them really kind of believe that Block has effectively implemented AI. At their investor day in November, they kind of unveiled a lot of products like MoneyBot, which is a personal AI assistant for Cash App users, Square AI, and they say all of this was powered by Goose, their internal software tool. So that is kind of the case that this is really AI driving efficiencies, but at the same time, Jack himself has admitted that he overhired during COVID, and this might be correcting that. So it could be a story where, both things are the case, but, talking to the management team is probably the best way to get a view into that.
Yeah.
Management team weighed in on it.
They did.
Jack Dorsey weighed in on X.
Speaking of the management team, let me just share what he said. He said, yes, we overhired during COVID because incorrectly built two separate company structures, Square and Cash App, rather than one, which we corrected mid-2024. But this misses all the complexity we took on through lending, banking, and BNPL, of course, buy now, pay later. And that we're now targeting $2 million plus gross profit per person, 4 times our pre-COVID efficiency, which stayed flat at around $500,000 from 2019 until 2024. We have and do run an efficient company better than most. Is this like...
I read that earlier and you were like, what does that even mean?
Is this like, wow, Wall Street community, we are efficient, we can be efficient. Like, we really just don't know, right? Or like is there stuff that needs to be still answered in your view?
I mean, I think the proof points that the company provides is like that things like MoneyBot and Square AI, like we've shipped these products faster, or they'll point to Cash App Pools, which is like a group payment tool that they say that they launched. I think the figure that they give is 3 months from like inception to production. So that's what they would point to as evidence that like they really have implemented these tools and it has translated into faster product velocity. You know, but the overhiring is not something that like you can totally dismiss or overlook. So it could be both of these things.
How do we figure out what though specifically? Like, what do we have to do, or do we wait for more analysis, or like how do we figure out what it exactly is? Because Tim is freaking out about AI and jobs, and we're trying to figure out what the truth is.
I mean, I think it's going to have to be seeing how they execute from here. Like, one of the questions that I have is like, you know, and I think Jack has said this, like you can have the tools available, but you also need your employees to be fluent in them and be able to actually use them to do their jobs better. So we've got to see them continuing to ship product at like a really fast rate and like deliver on the things that they're promising now. And if there's any weakness in that, it's going to show up much more dramatically because it's going to cause a lot of skepticism, and it might hurt people's confidence in the management team to make these kinds of calls.
The peanut gallery on Twitter, X, was so active last night. I opened the app and everybody had their own take on what this meant. And there were a lot of comparisons about, okay, well, Block has this many employees, but only this market cap, and X company has this many employees. And even Mandeep Singh, when we asked him about this, he referenced Anthropic. This is a more than $300 billion value private company that has, you know, roughly 5,000 employees. To just speak about, you know, employee per value when you put it that way. What are the right comps to look at for a company like Block that plays in crypto? They play in buy now, pay later. They have the Cash App. You cover fintech. What's a comparable company?
Yeah, I mean, Block plays. They're kind of interesting because they have sort of like a two-sided network, right? So they've got the Square business, which is talking to merchants and, you know, selling to merchants, and then they've got Cash App, which is more of a neobank consumer play. So you could look at different businesses for different reasons. I think, you know, PayPal is a potential comp. They've obviously had kind of a rocky ride recently and some management shakeups. So that's something you could look at. Toast, Block competes with them closely on the restaurant point of sale terminal side. So those are some companies you could look at. You might, I mean, Toast I think has been trading pretty flat today. So, you know, that is an indicator that maybe people are reacting to more the cost cutting than the AI narrative with Block, since they're up. But yeah, those are some comps that you could look at.
So I think it was really smart what you said before about like kind of, as we look at the business going forward, if some of that stuff doesn't live up to snuff, then maybe the programs that it's doing or its initiatives and strategies isn't working. So is that kind of what as a reporter who covers this space in this company, that's what you're going to be watching most closely? I mean, like if you were sitting down with Dorsey right now, like is there something you would ask him?
I think I'd ask him, I mean, that would be it. It would be sort of like, okay, and also it would be like, they're touting that they had this great 2025. So it's sort of like, why make such a bold move? Like, what's the advantage of cutting 4,000 people at once, which is going to inevitably create a lot of internal turmoil and potentially bad will with your existing employees and maybe put them under more pressure versus like taking a more tapered approach and, you know, testing, iterating, seeing if it works and, you know, letting people go kind of slowly. But that can also be bad for morale if you're doing like repeated layoffs over a long period of time.
Yeah,
Which, to be fair, Jack said in one of his notes that's what he didn't want to do. He wanted to essentially rip the Band-Aid off all at one time because those repeated layoffs, year after year, can really hurt morale.
All right,
Yeah,
Emily.
that can also be demoralizing.
Great stuff. Thank you. And thanks for all the reporting and checking in with us. Emily Mason, Bloomberg News FinTech and Crypto reporter. We're going to stay, though, on FinTech and payment platforms. We've got another guest on this.
I want to bring in John Kaplan. He's back with us. He's CEO and director at Payoneer. It's got a roughly $1.5 billion market cap. Shares down about 23% so far this year. He joins us from New York. John, welcome back. We're going to talk about earnings and the news that you guys have. But before we do that, I do want you to weigh in on the Block news and what you think about the effect of AI on the fintech space. Just what was your reaction when you saw that Jack Dorsey was cutting more than 40% of staff at Block?
Yeah, I was listening to your conversation before I joined, and it's a really important moment for leadership, I think, which is how to embrace emerging powerful technology and drive shareholder value and take care of your customers, but not to forget that the most important asset most of these organizations have is the humans that help deliver the value for customers and shareholders every single day. So I've read Jack's post. I've seen some of the comments about, is it a mask for the bloated organization, or is it actually a bold move in terms of bracing AI? What I can tell you, what we see inside of Payoneer is our organization across the board, engineers, our customer care group, our go-to-market team, are all prototyping ways AI can enhance their productivity and really take the parts of their job that suck the most, which everybody's role has something that they don't like to do, to leverage the agents to make yourself more productive, I think is likely the best way to begin to drive that adoption, as opposed to sort of a wholesale removal of thousands of people en masse without the proven results. I think proven productivity improvements, proven margin improvements, and proven, frankly, customer value improvements, with that, then you move expeditiously. Without that evidence, it may seem a little bit more efficiency move masked as AI innovation.
Interesting.
Yeah, there's definitely a lot of tasks that we'd all like to offload.
Oh, that's what you're thinking about?
I like the idea of this kind of suck factor.
No, I mean,
I want to coin it. Yeah.
Yeah, I mean, let's talk about it, right? Like, I'm using Claude in our secure environment to do research on market opportunities, to look at the competitive landscape, to think broadly about how we can connect all of our data systems to serve our customers more effectively. But we're also using it so our organization can basically take their day and say, if I'm going to spend 40 or 50 or 60 or 70 hours a week serving customers, how do I do that more effectively? Offload manual tasks, offload repetitive tasks, and use judgment and humanity to create value. Payoneer is a business. We have a couple thousand employees. We have customers in 190 countries and territories. Our business has had 17% compound annual growth since I became CEO. Our profitability is really growing. We guided to doubling our core business profitability for 2026. It's the humans at Payoneer that made that happen. And so actually, I want to help unlock their productivity. The more we do that, the better we can run. I do think we can't be naive, right?
Well, that's what, John, I want to ask you, though. Do you anticipate some of these jobs can be replaced by AI going forward? And so, we're talking about your stock was down 18%, fourth quarter that missed the average analyst estimate. So if you can increase productivity with less workers and cut some of your costs, you have fiduciary responsibilities to look at what's the best way to run your company.
Yeah, the best entrepreneurs in the world don't save their way to greatness. They actually build and innovate their way to success, and that's what we do at Payoneer. Certainly, like I tell my kids, if there's someone who can do your job better, faster, and cheaper than you can do, it's the fiduciary duty of a leader to choose that person over you. So you have to create more value than
or that technology that can replace an actual individual.
Yeah, so like I won't actually predict you know, we used to like deliver the mail with horses, and now we send emails instantly. Like clearly, if you were the mail guy riding the horse, you lost your role when cars, trains, buses, planes, and email happened. So none of us can be an ostrich and put our head in the sand and not say innovation's going to happen. Of course, innovation is going to happen. The question is, if you have high quality people who create more value than they take, they are always going to be valuable in organizations like mine.
But you might need less. But you might need less of them.
Yeah, you might need fewer of them.
Sure,
that's true.
you might need less. Like I mean, we when I came in, sorry to cut you off here. When I came in, I took 9% of Payoneer's workforce out because I felt we were bloated in some areas and we could drive improved profitability. We've seen revenue per employee growth really solid. So none of us are. It's not the choice is not humanist, capitalist. It's actually, can you be both? Can you actually recognize humans are uniquely powerful and agents are tools to help us be more productive, not to replace us?
Well, I think the challenge with this environment, if you compare it to, you know, horses carrying the mail versus email, is that shift is happening in a much quicker time right now. Like, you know, Anthropic didn't exist 6 years ago. Amadei and company left OpenAI in 2020 to go and do this.
Yep.
And now we have Claude, which you're using in the C-suite right now. Has it actually helped you to the extent that it has replaced people within your organization?
It actually has helped the people we have be even more awesome than they already are. It is, and what you want me to say, I think, is sort of like, of course there'll be fewer jobs. The reality is, everybody's smart enough to understand that if the job you're doing can be automated such that a technology can do it better, faster, cheaper than you can do, end to end, 100% of it, then your job will be eliminated. That is an assembly line in a factory. Like the productivity enhancements are net positive for humanity, and I think embracing them is a net positive for humanity. I imagine what we should all do here is to say, holy cow, this is happening really quickly, but we are a compliant, regulated financial institution where I sign for the central bank in Ireland and our regulator in India, I sign in blue ink 50 times once a month so they know it's me.
Wow.
That an agent isn't going to replace a regulated financial institution and banks. Like it is, I think it's sort of maybe in some roles, and we're seeing this in customer care organizations, that if you're doing tasks that are repetitive and not value enhancing, those tasks are at risk. I'm not making any news saying that out loud. I tell my kids that you got to create more value than you take.
And I think people, 40% of Square would argue that they were in those positions, or a large portion of that. Hey, they were in positions that were creating value. We do want to talk about your business, John. We're speaking with John Kaplan, CEO and director over at Payoneer. They specialize in cross-border payments. They're a fintech company, about a $1.5 billion market cap. One of the areas of innovation that you have identified is this idea of a digital bank, filing an application for Payo Digital Bank. You said in a statement, through Payo Digital Bank, we aim to provide customers with a trusted and regulated way to leverage the latest payment innovations as part of their global financial operations. What would Payo Digital Bank allow you to do, allow Payoneer customers to do, if it's approved by regulators?
This is the best question, and I'm grateful late on a Friday afternoon for you asking it. So our business helps cross-border entrepreneurs around the world, a business process outsourcer in the Philippines, an iPhone case exporter from Shenzhen, China, a group of software developers in Argentina participate in global trade. The way the Payoneer account works, it's a multi-currency wallet. You get paid in dollars and you convert them into your local currency to buy a glass of orange juice or buy a hammer wherever you live around the world. So what we're doing is we're integrating stablecoin rails into the multi-currency Payoneer account, which will mean you may have USDC, but you can't take your wife out for dinner in Hanoi with USDC. You need local currency to do that.
Or a credit card.
What's that?
Or a credit card.
Or a credit card. But the central banks around the world like their fiat currency, and sort of combining fiat currency with stablecoins enables this innovation to go from a traded asset to a truly commercial asset. So the bank will give us the ability not only to issue our own coin should we choose to, but actually also allow us even more speed and flexibility in our global payment network, right? And the combination of the old world network plus the innovation with stablecoin will mean we are a best-in-class provider for cross-border businesses who are selling around the world and sourcing from around the world. You know, our $87 billion of volume on the Payoneer platform last year, that volume was going between Dubai and Vietnam, from Colombia to Turkey. It's connecting the world's economies, and it's really designed to help entrepreneurs, cross-border businesses participate.
John, just got 1 minute left here. Small businesses, you have some great insight into it. You say 190 customers globally. What can you tell us about the macro environment right now?
Yeah, we do business in 190 countries and territories, and we have 2 million active customers. You know, we're over $1 billion. We just passed $1 billion in revenue. What I can tell you about the macro environment is everybody wants certainty. Like, the more clarity there is about trade rules, trade policies, you know, kinetic events and wars, the less noise and the more focus. Entrepreneurs just want to sell stuff, drive margin, and send their kids to college. And that's the same wherever they live around the globe.
All right, John, thank you so much. Really enjoyed it. John Kaplan, CEO and Director at Payoneer, joining us from New York City.
Hey, let's get an update on everything happening in today's trade. We only have about 30 minutes to go in the equity trade. Charlie Pellet is in the Bloomberg Interactive Brokers studio. Hey, Charlie.
Oh, well, hello there. Indeed, 30 minutes to go for the trading month. 30 minutes to go on the week with the Dow, the S&P, NASDAQ, all in the red. Do want to begin with a number of developing stories, headlines right now on the Bloomberg Professional Service. SpaceX is set to weigh a confidential IPO filing as soon as March. Those sources say SpaceX could seek a valuation of over $1.75 trillion in an IPO. Also, Netflix is confirming that money is changing hands. Paramount Skydance has paid that $2.8 billion breakup fee owed to Netflix after the streaming company dropped its planned deal to buy parts of Warner Brothers Discovery. As for how those stocks are doing, Warner Brothers Discovery right now trading lower. It is down 2.1%. Paramount Skydance up 20.6%. And Netflix shareholders are cheering as well. We got Netflix up by 14.1%. Stocks lower ahead of the close here with the S&P down 36, drop there of 0.5%. Dow Industrials down 1.1%. NASDAQ down 1%. And the Russell 2000 index of small cap shares now lower by 1.7%. The 10-year at 3.96%. The 2-year 3.38%. Gold up 1.4%. 52.59 the ounce. West Texas Intermediate crude 67.23 a barrel, up 3.1% heading into the weekend. And Bitcoin down 2.8%, 65,561. I'm Charlie Pellet, Carol and Tim. Lots going on. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, sticking with our, I was going to say our theme of today, but it's like
theme of the year. Let's just brand it already.
Yeah. Can you guess what it is, everybody? Can you guess what we're talking about?
Wait. 2 letters, often used to describe it. Rhymes like, no, you can't do that.
All right. Well, this time we're talking about OpenAI. It's raised $110 billion in a deal. It values the startup at $730 billion. It's the largest funding round to date. It bolsters its costly push to secure more computing power and talent for AI development. Amazon, SoftBank, NVIDIA are among the names that have invested in this round. Let's bring in Rachel Metz. She's Bloomberg News AI reporter. She joins us from San Francisco. So to Carol's credit, she just, on our call this morning, she's like, I want to talk about OpenAI's balance sheet. I want to understand what money they have, where it's going, what they're using it on, and what this investment means. And we were like, we got to get Rachel Metz on the program because there are some heavy hitters here, Rachel, who are involved, some existing investors, some frenemies. It seems like everybody's kind of like in Anthropic or OpenAI. What can you tell us about this round?
Very spicy. Yeah, Carol, just first for your first statement, you want to know more about the balance sheet? Me too, Carol. Me too.
Well, that says a lot. Like, is that crazy? Like, they're all throwing money at it. So what do we need to understand about Anthropic?
Anthropic or OpenAI.
Or OpenAI, sorry. OpenAI,
I mean, there's
sorry.
a lot. It's okay.
We're going to do Anthropic in the 4 p.m. hour because the clock is ticking.
I meant OpenAI. Go ahead.
The clock is ticking. Okay, so as you mentioned, there's this funding round. It's huge, and the last funding round was slightly less huge, right? So it has to raise more and more money, in part because it has enormous and ever-rising costs. And probably the biggest chunk of that is compute. It is so expensive to train models, to refine them, and to run them. And when you have more and more customers who are using things like ChatGPT more and more for different things like coding, just having back and forth conversations, all these innovations that they've been rolling out. And they also have different kinds of things you might do, like Sora for generating videos, stuff like that. That is a lot of computing power that you're going to need. So one thing that we do know about their balance sheet is that their revenue has been rising over the past few years, and their compute use has also been rising. And it's interesting that they've actually kind of risen in the same amount since 2023. So that's, and they're also expecting revenue to rise to a huge number, I would say, compared to where it was today. I'll back up for 1 second. In 2025, the company's CFO, Sarah Fryer, recently said that their annualized revenue topped $20 billion. Okay, so that's a pretty large number, right?
Not nothing, as some would say.
It's not. Yeah, you're right. It is not nothing. But as my colleague Shreen Ghaffari recently reported, the company is expecting revenue to go higher than $280 billion in 2030, which I think we can agree 4 years from now, that's not that long to go from 20 to 280 of anything. That's a lot of growth, right? And their costs are going to keep rising too. I mean, they've been using a ton of compute, and they've also committed to spending, oh gosh, they've said I think it's 1.4 trillion on AI infrastructure in like the many years to come. And again, back to Shireen's recent reporting, the company's telling investors it's planning to spend 600 billion roughly by 2030. So we've got a bunch of things that are going to supposedly happen in the next 4 years, a lot of growth and a lot of spending.
And not to mention the actual human beings and those human brains that they have to pay and attract with pretty big salaries, because that's not nothing when it comes to the expenses. I know that the compute is a big part of the expense, but there's a talent war going on as well.
Yeah, that's a really good point. And the company has grown pretty quickly over the past few years. I don't know why I said pretty quickly. It's grown very quickly. You have to hire people. There's a very scarce amount of people that you can hire to do what they want to do in certain parts of the company. So it's and you have to pay them a lot of money. We see people like Mark Zuckerberg saying hey, here is an enormous pile of cash.
Literally. $20 billion.
Yeah, literally. I'm not exaggerating.
Sorry, $20 million, excuse me. Yes.
Yeah, well, I mean, who knows how high these offers have gone. But yeah, that definitely kind of brings up the stakes. I mean, these would have been high-paying jobs previously, but now they're in some cases becoming incredibly high-paying jobs. So yeah, but I would say compared to things like infrastructure, the cost of compute, salary stuff, I mean, it's a big chunk of money, but the compute stuff is, I think, for me, what I really keep my eyes on, since it gives you a sense of what they're spending to make their products, and also what they have to spend as people are using the products.
These circular deals, though, of a company like an Amazon or something that invests into another company that it's also working with, that's going to then, demand, product from that company. I mean, does that make it really difficult to figure out, how this is going to kind of end in terms of which companies are really going to be lasting? It's a lot of money floating around. I also know Amazon AWS for a long time had a lot of money going into its build before all of a sudden it was whoa, big business. So I don't know. Is that the model we follow with this? I just don't know.
I mean, there is precedent for this kind of circularity, and I agree that both as a reporter and as a consumer, you can be like, what? What's happening here? Right. And it's also, it's an interesting sort of circle or trail to follow, to think about, okay, well, who could be the last man standing, if something fell apart. And it's a little hard to tell, actually, for me at least, because they're pretty dependent on each other. Like NVIDIA, for instance, if it's investing in companies and then they're using its chips, but also OpenAI is starting to branch out a bit. They're working with Cerebras, for instance, which also makes chips. So it's like a little bit hard to tell like who's the most dependent on who ultimately.
Well, Rachel, we're talking to Katrina Manson a little later about Anthropic, and I know Carol's has Anthropic on her mind, so it makes me think about the sort of the battle of the bots, and I'm saying the battle of the chatbots.
Amazon,
right?
by the way, longtime Anthropic backer, but also now OpenAI.
Everyone's doing everything.
It's fun at the Thanksgiving gathering, right? Everybody loves each other.
Can you imagine?
So
where nobody holds hands.
But if we were talking, and people sort of change their view very quickly on which is the better chatbot or which is the better LLM, and I have to tell you, increasingly over the last couple of weeks, over the last couple of months, you turn every direction you turn, it's Anthropic and it's Claude. Is this the leader, and OpenAI needs this money to catch up to Anthropic?
I don't think the money is what it needs to catch up to Anthropic. I mean, look, like things keep changing, goalposts keep shifting, and people seem very fickle. I think that's what we're seeing. People want to use what they think is best, right? Yes. So there may be a lot of switching. I think some people feel very set on using this chatbot for this and that chatbot for that. I know a lot of people like Anthropic for more of like a business kind of work, and some people like ChatGPT for more of a like relationship. Some people feel vice versa. So yeah, I think that it's just going to take a long time, I think, before people really if people really decide, this is the one that I like versus that one, or perhaps, maybe people will just keep switching back and forth using both.
What do you like for your Defense Department work, Carol? Sorry, it's just a little inside it.
Too soon. Well, Anthropic, obviously.
We're watching the clock because
it's funny. When I got to work this morning, I was talking to my editor. I was like, "So, do you have a clock going?" Like he's on the East Coast. I was just curious. But yeah, it'll be interesting to see what happens here, and then what happens after what's going to happen.
Well, and I do wonder how many get intertwined, and it's hard to unravel some of that stuff, especially when you're thinking about national security and defense. Rachel Metz, I feel vindicated because I feel like this is an important story, and so I'm so glad we talked with you.
Always here to vindicate you.
We will always come back to you. Rachel Metz, have a great weekend. She's AI reporter at Bloomberg News in our San Francisco bureau.
Even breaking news has an AI angle.
It does.
SpaceX targeting filing confidentially for an IPO as soon as next month, according to people familiar with the matter, as billionaire Elon Musk's rocket and satellite company moves forward with plans for the biggest ever listing. We've got Bloomberg News, U.S. IPO and deals reporter Ryan Gould with us in the Bloomberg Interactive Brokers studio. So what did we learn? What did you and the team find out?
I think the fact that this is coming as soon as March, by the way, it's March on Sunday.
Yeah, that's true.
So if you think about just how close this could actually be, I think maybe the takeaway here is maybe such that you're looking at an IPO that is still on track to come as soon as June. You remember there was a line that came out maybe a few months ago that said Elon was looking to align the launch or the listing of SpaceX with what is known as a conjunction, a planetary conjunction where Venus and I think it was Mars and Jupiter were going to appear close together.
So now he doesn't care about that?
How could you get that wrong?
I mean, sorry, yeah, astronomy.
It's a little bit of both astrology and astronomy. Yeah.
So that doesn't matter anymore.
No, I think it does because the idea that SpaceX is looking to file with the SEC as soon as March suggests that they are still doubling down on that June timeline.
Well, I did say there was an AI angle here, and that's because this is now the parent company of XAI, and Rock, and X. But is that a tiny portion of? I mean, we're still calling it the rocket and satellite maker. I mean, SpaceX is Starlink, and Starlink is SpaceX. Need we say more?
I think, it really gets to the heart of this idea that Elon does see these companies almost as one. I think, it's got SpaceX in there. But I would just like to add, I think we like size and scope here. I'm just digesting this story that was just gone out. If you think about it, at $1.75 trillion evaluation, if it does get that would make it apparently larger than 495 companies in the S&P 500. Which would be
that is incredible. Sit with that for a moment. $1.75 trillion. And as you said, much larger than a lot of companies that are out there, publicly held companies that have been out there for a while.
Right. And we think about, and I cover a lot of software companies, and the people I talk to like to think about the S&P 493, i.e. minus the Mag 7, and we look at how those companies have performed. I mean, now you could say SpaceX kind of has a bit of that in it. Not to say that SpaceX with XAI is a software company, but it does kind of, really insert itself in a lot of pictures.
What do we know about their balance sheet? I'm really into balance sheets today. So in terms of revenues, because I'm trying to get an idea of a valuation for this puppy when it comes out, assuming this valuation. Do we know anything or anything we can share on that?
I mean, there are many more people at Bloomberg who are far more in the weeds than I am on the revenue, for sure. But I think if you just think about the fact that they're looking to raise $50 billion at a valuation of 1.75, I mean, you're looking at a very, very robust go forward, at least growth multiple.
Do we know who gets the listing? Is it going to be in the U.S.? Is it going to be the NASDAQ or the New York Stock Exchange? Do we know who gets it?
It will certainly be in the U.S. We don't yet know which of the exchanges will get it. There are 4 or 5 banks.
They are fighting for it.
And still the dual class structure, or we don't know yet?
Yeah, we did report that they are looking to target a dual class structure, which kind of gets at something else to lead on, I think, as long
control.
Yeah, you said that, not me.
Yeah,
but
some say it would be control. Yeah,
look
it would be
at
control,
Tesla
though, right?
and the way that the board has had these pay packages, and he said
For
it's
sure.
about
And I mean,
control,
it was
not
the same
about pay.
proposal that he, unsuccessfully floated at Tesla. I mean, the shareholders said, actually, no, we'd prefer not to have that.
And then didn't we talk about him wanting to just fold everything into one?
We did. The convergence of what is known as the X company.
Right.
We actually reported shortly before the XAI merger was confirmed that, I think the idea of merging SpaceX into Tesla and Tesla into what was then still XAI. These things, I would say, as a deals reporter, ostensibly, I don't think of myself as being surprised anymore. I'm very aware that I could wake up tomorrow and see something outlandish relating to something that Elon is doing with one of these companies.
And Tesla also a 1.5 almost $1 trillion market cap company.
Did you see that EchoStar is rallying? I think I saw EchoStar is up as much as 9%. That will give EchoStar a very, very true comp as it relates to
in terms of valuation,
business.
right? Yeah, because it's a pure play. Yeah, I'm looking at that stock.
But EchoStar doesn't launch its own. They don't have that business that launches
up about 7%.
Other people's satellites.
Correct. But it has a lot of that key infrastructure, the connectivity, the networking, and, it also has the military component, which clearly SpaceX has too.
I love it when Ryan comes and hangs out with us, and we don't even plan for it. It's just like some breaking news, and we get Ryan Gould in here.
Thanks for having me.
Anytime. Always. He is Bloomberg News U.S. IPO and deals reporter Ryan Gould joining us right here in our Interactive Broker studio.
I want to make a deal with Charlie Pellet. He's been standing by patiently, waiting to give us the latest when it comes to everything happening in the markets, because we got less than 15 minutes to go, Charlie.
Indeed, 15 minutes until we wrap up the trading month of February, 15 minutes until we wrap up a losing week for the U.S. equity market. But right now, let's head right over to the first word breaking news desk for today's afternoon call. Lots going on. Here he is, Bill Maloney.
And good afternoon, Charlie. Markets are on edge right now with anxiety in the financials. The Dow is currently down 600 points, was down as much as 820 points. S&Ps are lower by 0.6%, and the NASDAQ is off by 1.2%. The U.S. 10-year yield sinks to 3.96. Gold and oil are surging, but Bitcoin, that's trading lower by 3%. Among the main 11 SB sectors, leaders were energy and healthcare. Tech and the financials were under pressure, and leaders to the upside of the Dow, Merck and Walmart, while American Express fell 8% and led to the downside. After earnings, CoreWeave plunged 22%, and among the financials, Jefferies fell 10%. Goldman Sachs dropped 8%. And wrapping things up, OpenAI is expanding the Amazon Web Services pact by $100 billion over 8 years. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, have a great weekend, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I've been driving all night, my hands wet on the wheel.
Come on, let's take a drive.
A drive?
Yeah, a drive.
Can you just focus on driving? Focus on the road.
Why would I drive fast?
Because I'm asking you to.
Just take your place in the drive. Just drive, baby.
This is the drive to the close.
Where we're going, we don't need roads.
on Bloomberg Radio.
All right, everybody, we are just about 12 minutes away from the closing bell on this Friday, getting ready to wrap up, as I've been saying, the day, the week, and the month of February. So right now we've got, as you just heard from the team, Charlie saying right now the S&P just down about 0.6 of a percentage point. NASDAQ 100 down 0.5%. So off our highs and lows. Just kind of that kind of day.
Hey, our producer Talia keeping an eye on all the breaking news that's happening, sending us a post from True Social. The president posting about Anthropic and federal agencies. He's telling all agencies, the president that is, to stop using Anthropic. Federal agencies cease use of Anthropic's technology. Anthropic made a mistake to strong-arm the Pentagon. This is now a redhead crossing the Bloomberg terminal. The president posting on True Social about Anthropic and federal agencies. The latest, the president telling all agencies to stop use of Anthropic's technology. We're going to have Katrina Manson on the program in the 4 o'clock hour. There was a 5 p.m. Eastern time deadline. Yesterday, Anthropic's Dario Amodei came out just after our program ended and essentially said, we're not wavering from our position about our technology not being used for these two things: mass surveillance of Americans.
Correct.
And fully autonomous fully autonomous weapons.
Right.
Yeah.
But talking a lot about in terms of mass drones being used. And my understanding was that the Pentagon was going to be talking with Anthropic. So we're kind of counting down to the wire on that as well. In the meantime, we want to get to our own Eric Weiner, talk a little bit about the trade today, the week, the month. Ready to start a new one. Eric Weiner, Senior Editor, Equities Americas here at Bloomberg News in our Interactive Broker studio. Never a dull day. Interesting trade. Interesting trade. Where should we begin here as we are wrapping up February?
One word to use.
What?
Yeah, that's interesting as one word to use. I mean,
the market, stocks are down for the week overall.
Should we start with banks?
Well, yeah, because
yeah.
Well, yes, but I'm also confused about a hot inflation print, but yields are down, and I'm trying to understand that. Doesn't make sense to me. Is it just that we are so worried about the outlook here, the private credit worries, the private market worries, leading to, yes, what you said. So homage to you, Tim, in terms of banks.
Did you say that? Because that's actually what appears to be going on. I mean, you can't get a straight answer directly from like the bond market, but that does appear to be what's going on. Which is, I mean, the key word would be uncertainty. There's so much up in the air. It's because it's not just private credit. It's basically the whole lending landscape possibly being, at risk. And so you're looking at...
You're talking about corporate, retail, individual, everything.
Well...
Or what?
So there's risk that there's rising... There's rising problems in credit cards. There is, rising delinquencies across the lending spectrum. And then you have all of this private funding, which is less regulated and has been financing a lot of the technology growth that's been going on. So you have this big mishmash of risks that are flowing in ways that we can't really predict right now. What we do know, though, is that the last time there was a blow up, it got really ugly. So that's really what, the First Brands thing, all of the stuff that happened a couple of years ago is really scaring people right now. And if you look at who's exposed to it, it's much bigger companies and much more important and central companies, because you're talking about OpenAI, you're talking about Anthropic, you're talking about companies that are driving the technological growth that we need and that we're counting on. And if they can't get the funding that they are anticipating, then that spending that is ricocheting across the market could be pulled back. And that's really the underlying fear of everything going on with AI right now. So it sort of spills over into a whole bunch of different places. And we haven't even talked about Iran yet.
We haven't. We're going to talk about Iran, but you've got me on the underlying fears about AI, and that's certainly one of them. Is the idea that maybe we won't see the results of all this spend. Another one is what happened with Block/Square last night, and a 40% reduction in force, and it has people thinking. And I'm sorry to beat a dead horse, but we've been doing this
No, yeah.
all day today because I think there are
Trying
a
to
lot
make
of
sense.
Yeah, I think there are a lot of questions still about, is this idiosyncratic to Jack Dorsey and to Square, or is this something that is actually going to happen at many different companies with white-collar jobs? Because it does raise market questions. And yes, the stock reaction for Square today is up. But then when you start thinking about this, okay, if all these companies can do more with half the number of employees, where do those employees go? And then what does it mean for their spending power?
So is Citrini right?
Well, yeah.
In other words,
we did all. I mean, look, I made my bones on that this week, but you're on the tip of the whole concern, which is that if you look at all of the technological innovation that has happened, over the last 100 years or so, mostly it's involved things that may kill a job here or there, but will ultimately increase jobs.
The horseless carriage, for example.
Yes, exactly. The automobile, which put buggy whips out of business, but then created a whole transportation industry. So this specific technology is designed to make things more efficient in a very specific way, which is to eliminate the need for you and I to be intermediaries.
Yeah.
And that's white collar jobs. So the concern is very real. And Dorsey kind of got after it. I mean, he's running a successful business. They're making a lot of money, and if he can make things that much more efficient, then great for him. However, what we're hearing is that we are very, very far away from this. It's interesting, the Pentagon attacking Anthropic. Nobody would say that right now you need automated weapons. We're just not there yet. And the idea that we shouldn't have guardrails on this seems like very much being out in front. In the same kind of way that thinking that everybody is going to be replaced tomorrow is being way out in front. However, the longer term risk is yes, that high earning jobs, this is coming after high earning jobs, which are really underpinning the economic growth, not just through production, but through consumption. And this could actually go right after those people that we need to be spending, which is scary.
Fortunately, between now and Monday, if we don't get replaced AI, I think I can say this, that you're going to join me for a special live conversation on Monday morning. I'll send out the details of it, but it's at 11 a.m. Eastern time, and we're going to talk about this exact thing, Carol.
Yeah, I don't know. I do worry about this circular financing that's confusing, and I don't want to say Ponzi scheme or anything, because I think but this idea of
Did you look at the OpenAI deal today?
Yes.
Oh yeah, we've been
Okay,
talking about
so
it.
Do you know what I'm saying?
Oh yeah.
I want to be
Oh, yeah.
careful. I don't want to accuse. I'm not that smart, but
This is the risk. This is the risk. So, and realize that, and then take one step back and realize that it's coming from private credit. So if you look at OpenAI today, okay, Amazon is going to spend $50 billion, and then OpenAI is going to spend $100 billion more on AWS, and all of this is coming from, Amazon has cash. Right. But their free cash flow actually is going to be negative next year. But the idea is that they don't really need the private.
Look at it, we're like, yeah, but it's okay.
It's okay. Well, but they don't really need the private market, but OpenAI does. So if all of that gets pulled back and they can't honor the $100 billion that they promised, that unwinds a whole bunch of expectations, including Amazon's expected revenues. So, how do you value the stock? And that's really the question.
When I go to our AI expert, Rachel Metz, brilliant, smart on this AI, and we say to her, I want to understand OpenAI's balance sheet, and she's like, me too. Oh. And so that to me is, we talk about the importance of transparency and understanding value, and yet we don't quite have it. And I feel like we're going to have to do this. You have 5 seconds.
Well, that's really it. That's the danger of the private. Now, they're going to go public, so they will have the stock, but this is the danger of private companies.
Bow down to Eric Weiner. We do it because he is the best.
So killer. Eric Weiner, thank you so much. Senior editor here at Bloomberg News. All right, folks, do not go anywhere. Over to our TV colleagues. The closing bell starts now.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Bailey Lipschultz in today for Katie Greifeld. We're taking you through to that closing bell. It's a global simulcast. Carol Massar and Tim Stenovic, and I believe a third party also joining us there from the room. Welcome to our audiences across all of our Bloomberg platforms, television, radio, and our partnership with YouTube. Final trading day of the month, Carol Massar, and for a lot of folks, it's a month to forget.
Yeah, not so great unless you're, bear in this market or shorting it. But I'm looking at what the S&P down maybe about 1% for the month, a little bit more overall. The NASDAQ 100 down about 2.5% for the month overall. So not a great one. But I got to tell you, the path to it has not been an easy one. That's for sure.
No, I mean, worst month going back to April of last year, which is actually interesting given that it's actually not down that much. It wasn't that bad of a month for the S&P 500, but it just goes to show how much we've seen stocks go up over the last year.
And looking at some of the weakness, Tim, on the day, information technology is down more than 2%, as was financials. We were talking about that on the desk. When you look at these moves that we're seeing in Morgan Stanley, Goldman Sachs, it's not just a normal 1% down day. We're talking about 6, 7, 8% moves on an intraday basis on some of the largest U.S. banks.
Yeah, and also, too, I mean, we're going to get into this a little bit later, but when we talk about some of the moves to the downside this month, yeah, at the index level, you're certainly right, Tim. It's certainly not as bad as it could have been. But when you start to go through some of those individual sectors, you have some significant weakness, particularly in that asset management space, definitely in the software space, deep now into a bear market. As we get the closing bells here on this February 27, 2026. All of the major indices here in the U.S. are going to close in the red on the day and on the week, but the monthly story is definitely a lot more texture. The S&P right now losing about 30 points, down about 0.4%. It's going to close out the month of April down about 0.9%. The Dow Jones Industrial Average down 500 points on the day, or about 1%, but it is clinging to a modest gain on the month of about 0.2%. The NASDAQ Composite down 74 points today, or just about 0.3%, but down 2% or more on a month-to-date basis. And take a look at the Russell 2000, and I want to point this out. A 1.6% loss, 1.7%, excuse me, on the day, 1.4% on the week, but still holding on to a 0.7% gain on the month and a 6% gain year to date.
All I'm going to say is I can't wait till you talk yields, but we'll get to that in just a moment. I'm going to go back to the S&P 500, kind of an even split, guys. Bailey, we've got 278 names higher for the Friday trade in the S&P 500, 225 to the downside.
Yeah, and looking at that on a sector level, again, tech and financials, the biggest drags. But we are seeing outperformance in the healthcare and energy spaces. Just want to call out, guys, the S&P Equal Weighted Index closing in the green at a record, a fourth consecutive day of gains. So as much as we want to talk about tech and banks leading to the downside, there is some green going on.
All right, so let's get to some of the individual gainers, if I may. Let's go to Paramount, Skydance, and Netflix. Definitely some outperformance. Paramount, Skydance up almost 21%, guys, today. And you have Netflix up about 14% here. We know Paramount clinching that deal finally for Warner Brothers Discovery, outmaneuvering Netflix after a months-long battle by agreeing to pay $111 billion for the legendary Hollywood studio. Yeah. We should point out, though...
Outmaneuvering.
Well, here's the deal.
Yeah.
We could have a lot of conversations because Tim and I have talked about maybe Netflix was just really smart in pushing up the price.
$2.8 billion that they didn't have yesterday?
Yeah.
Netflix.
Right. They have, right.
But it's also interesting, too, because, I mean, we didn't really talk about this. This happened while we were on air because Ted Sarandos was at the White House, and he did come out of the White House. Reporters asked him what happened. He was like, I'm not doing any media. And then, of course, a few minutes later, we got the headlines that they were moving on. But there's been a lot of speculation here about what Paramount is paying, whether it's too much, and a lot of jokes online saying that, hey, maybe if Sarandos just waits a couple of years, he can actually maybe buy some of those assets at a fire sale when Paramount, maybe if Paramount doesn't execute on that.
Yeah, let's be conspiracy theorists for a moment.
Yes.
Like, what if Netflix was all about just pushing up the price and increasing the cost of this deal and like
the cut of your jib there.
Increasing the
Where's your tinfoil hat? Is that down there?
on the balance sheet? I mean, come on. Like, I don't know. All right, we're moving along. It's been a great saga to watch. But anyway, Paramount and Netflix definitely outperforming in today's session. Let's go on over to Dell, #1 gainer in the S&P 500. Shares jumping by the most in 2 years. Stock up about 21, almost 22% today, pretty much finishing at its highs of the session. This is after the company gave an outlook for sales of its artificial intelligence servers that exceeded estimates. Definitely a sign of robust demand for machines, helping fuel the AI data center build. That company, by the way, saying it will generate about $50 billion in AI server revenue in the current fiscal year, which ends in January of 2027. And investors liking what they heard from that company. And then I got to mention Block, ticker XYZ. This one finishing up just shy of 17% here, up the most in about 2 years, at least intraday, after the company said it was reducing its workforce by nearly half in a bet on AI. Yes, Mr. Boston?
Well, no, but this is important before we move to Tim's decliners here, because, I mean, obviously, if Block does pull this off, the idea that they have these efficiencies and are able to continue generating the same revenues and profits with a lot less, that's great. But what does that mean for the economy? If a company can look at their workforce and say, we can get rid of 40% of y'all, at some point, this is like, isn't this the AI gloom and doom that we were all kind of dismissing a few months ago with regards to, you know, how it's just going to kill all the jobs? And then what? I mean, who's going to be left to buy these services if nobody has a job?
Exactly. Who uses Square if nobody has any money to spend?
Thank you, Tim.
Yeah.
What if it's just overhiring, you know, just trying to cut costs? Mr. Dorsey, who some have questioned before in terms of his management.
That's what I'm saying, though, Carol. If we're going conspiracy theory a little bit adjacent, I mean, you're talking about a stock that's down how much from a 2021 peak, and you continue to expand headcount? It's easy to say, oh, well, we're going to be more efficient. Okay, look in the mirror. Maybe you overhired by, I don't know, 50%, 60%?
Bailey, you can come on anytime.
That still lost jobs.
I will say he did address that.
Taking from the economy, right?
But
where are those people going?
But is it indicative of AI and what it's going to do in the future? And
I don't know.
We don't know.
I don't know.
Or is this a very Block-specific Jack Dorsey story?
I don't know.
We'll tell you in 18 months. I think that's what happens.
Yeah, what did our team say? That you got to watch in terms of some of the business expansions and things it's done, whether or not we see the growth in those areas. If you don't, then maybe it isn't just AI helping out here.
Okay, the jury's still out on that, but the conspiracy theories live on. Let's get to some of the decliners on the day today. Do you want to start with the banks? Look at this, the KBW Bank Index falling close to 5%. Financial firms grappling with signs that private credit issues are starting to emerge following a series of blows from the threat of AI. The KBW Bank Index earlier in the day fell as much as 6%, all 23 members sliding to end the day. You have Goldman Sachs down 7.5%, Morgan Stanley down 6.1%, Capital One down 6%, JP Morgan down 1.9%. Every member in the red today. Credit spreads also started widening. Wall Street-backed UK mortgage lender collapsed, adding to fear that banks could face rising defaults in the opaque world of private
and you saw the great story that we had about that letter that was circulating around Goldman Sachs Asset Management. The idea here that basically, you know, trying to reassure clients that what's happening right now, redemption rates, software exposure still relatively low and contained.
Yeah, we're going to be doing a deep dive, and I'm going to have a little more on Blue Owl in a minute, but with James Crombie, who edits Credit. He's senior editor for Credit, in just a few minutes. So if you guys want to come over and join that conversation.
Well, Bailey can come up.
Wow, thank you.
Let's look at what happened to NVIDIA after yesterday's rout post-earnings on Wednesday. Shares of NVIDIA today fell another 4%. This after a 5.5% decline, adding to the sell-off today. The stock priced at less than 22 times forward earnings, well below its 5-year average of 37, basically even with the S&P 500's multiples. So some people, at least according to that valuation, are seeing this, dare I say, as a value right now. Investors are concerned that the hundreds of billions of dollars in spending pledged by AI developers will have to be scaled back, which would likely hit NVIDIA's revenue hard. And finally, Blue Owl, to finish out just a tough month for the company. Shares on track for their biggest monthly decline in nearly 4 years. Shares fell today by 6%. Anxiety, turbulence over the private credit industry, concerns over the industry have mounted after Blue Owl halted redemptions in one of its funds and decided to sell some assets to help pay investors. That sparked a drop in the firm's market value. Blue Owl shares down by 6% today.
I'm so fascinated by this story, and I'm fascinated by just how much all these other names are getting dragged down, like Goldman and KKR and Apollo and others. And it gets to the idea, too. It's not even so much whether there truly is a crack going on underneath the surface. It's the idea of transparency. And some of these companies are more important than their CEOs. They need to get out there and start talking about this, assuming that there is nothing to hide there. I do want to quickly, though, point out what we saw in the move in yields, because there was a bit of a flight to safety, not only here on this day, but quite frankly for the month as well. I mean, you take a look at that drop in yields. In fact, this was actually the best month for treasuries on a price basis in about a year. TLT up 4%. That's the main ETF that tracks long-dated bonds. 4% gain right now for the month of February, and that's pretty much the gains for the year. So that gives you a sense of just how much things have flipped in sentiment in the past month.
On a hot inflation print.
Yeah,
right?
Inflation's back. Did you not know that?
No, I did.
Did you think it was gone?
No.
Oh, you probably don't do shopping. You probably have somebody do your shopping for you and stuff.
Yeah, it's called my husband.
Yeah. All right, but for us, salted
he
earth
cooks
people
too, by the way,
who have
Romaine.
to go to the grocery store and see it firsthand, interact with the community.
Billy, I don't know how you do this. All right, we got to go. All right, Finley, we're going to go. All right, guys, have a good and safe weekend. Be well. That's going to do it for our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We like hanging with each other, as you can tell. Romaine and Billy continuing there on the close on TV, and Tim and I continuing on Bloomberg Business Week Daily on radio. Be safe, guys. We'll see you again, same time, same place on Monday.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
So if we're...
What? You want to head for the bunker, don't you?
Oh, no. I mean, this is the conversation we need to be having right now.
Yeah.
We spent a lot of time talking about AI, and this is related to AI.
Totally.
Credit, a big part of today's trade. Wall Street traders shunning riskier corners of the market, stocks falling on concerns about AI disruption, and any troubles related to private credit, a key funding source for tech firms.
Yeah, which is what Eric Weiner or somebody else was talking about, right?
Eric Weiner was
talking about. We've got a private credit fund overseen by Apollo Global Management, cutting its dividend and marking down the value of its assets amid signs of strain in parts of its loan book. You also have Invico, I think I'm saying it hopefully right, Capital Corporation. It's a private credit manager, crafting a plan for one of its funds to deal with redemption requests from large investors as firms face elevated withdrawal pressures across the broader market. Romaine was just talking about, pick your player in this space. We're seeing these stocks under pressure. He was saying that the managers need to get out there and be like, hey guys, either we're okay or here's our holdings or whatever. Something needs to be done.
Yeah, we don't even have time to go over all the other stories that we put in here.
BlackRock too, right?
BlackRock, and then there's the Blue Owl one, which we just talked about on the close. I want to bring in James Crombie, senior editor, credit for Bloomberg News. He joins us here in the Bloomberg Interactive Brokers
You have
studio.
to make sense of all of this.
You do have to make sense of all this, not just for the Bloomberg News audience, but also for the entire investing audience, because it's a really opaque market. So what is going on when it comes to these jitters?
Well, I hate to ruin your weekend, but we have to talk about contagion. Things are spreading. We started the week talking about just Blue Owl and everyone thinking that it was a Blue Owl problem. Yeah. Blue Owl has a high exposure to technology, which is rattling everyone on the software side. Particularly, we expect a lot more defaults on the software debt. But as we've seen over the course
Smaller players or larger players?
Well, I think, it depends. I mean, it's hard to see exactly where, but, the smaller ones are more exposed because they have smaller capital structures, so they're going to be more easily taken out. But, definitely the problem has spread because we've seen other business development companies, that's investment vehicles that are listed, they're traded, and they invest in private loans, mostly to middle market companies. Their results aren't good. And you mentioned the KKR BDC, that traded down as low as it's been since the pandemic. People, want their money out. It's a bit of a panic. We've seen that across other funds as well. But, crucially, I think the value of their loans being written down. There's been a big question about, how much are their loans actually worth? We've seen them being consistently marked at par, even though leverage loans, which are kind of the public alternative, they're dropping, they've had their worst month since 2022, when the Fed started aggressively increasing rates and everyone was fearing a recession. So, leveraged loans are clearly under pressure. Private credit should be. Now we're starting to see a bit of transparency on how much this stuff is worth.
Well, I think this is, an important conversation because especially as you have the private credit world wanting to push into 401ks and other investing areas, kind of find more areas, avenues for the money it has to put to work. Having said that, and I've gotten feedback from folks who are watching and listening and who are super smart and understand this world. I mean, when you do private equity or private credit, it is not liquid. Like, you have to expect that you're going to put your money away for a while. That's how it works. And you do expect a manager in a certain environment, if it's not ideal and you don't have an exit, we're going to have to hold on to it longer. So is there some misunderstanding about how this market works? Or is there too much money in the private credit world and they're moving into areas that aren't as smart or have a lot more risk and investors don't understand that risk?
I think it's a bit of all of those things, particularly when you look at when a lot of those loans were made in the era of zero interest rates and much higher multiples, much higher leverage was applied, and the assumption was everything's going to be great, particularly on technology and software firms. Now we're seeing that it's not so great, and now those loans are actually coming due, so they need to be repaid or rolled over, and a lot of the rollovers aren't happening because the fundamentals of those companies have substantially changed. And on the retail side, yes, I think there is a misunderstanding about how liquid these things are, because if you want to pull your money out on a daily basis, you're not going to be able to.
But is there an understanding that when you do this, it's 3 years and I'm out? Or no, that it's loose?
I mean, I think these things are getting punted because things are getting worse in terms of, the businesses. They need to refinance. They're not cashing out.
And one more thing, when you talk about these loans being written down, basically at some point these loans are made, maybe in a zero rate environment. All right, so a loan at that point maybe is easier to deal with. Rates go up. You have a business and maybe the environment for that business is deteriorating and they have higher costs on that loan. And that's where ultimately an Apollo or a BlackRock or whoever put out that loan, issued that loan, has to then write it down because they understand in its current form it's just not going to work.
I think it's more that in the secondary market, the valuation of that loan is not due yet, but it's clear that it's worth less than face value.
But because it's not going to get back up.
Because it's not traded, you don't see the actual mark. But no, it's not going to get back up because the fundamentals of the company have deteriorated and has the business.
You started out the conversation by talking about the fear of contagion. And when we think about that, how far does the contagion go? Like, who is exposed here? Because we certainly saw a sell-off in the KBW Bank Index today over fears like this. And I think a lot of people don't necessarily know who actually has their hands in this web.
Well, I mean, the leveraged loan market is a $1.4 trillion market, and everyone's exposed to that, in various forms. That is dropping quite substantially, has a large-ish exposure to software, around 10%, more than other parts of the credit market. But then obviously the banks are involved in funding private credit. The ETFs have exposure. We're seeing more short interest on some of the big loan ETFs. The CLOs are being, given some of these loans to take on. The CLOs, one of the big trades that a lot of people are very heavily into, and so if that starts to unwind, then people are going to lose some money.
Jamie Dimon earlier this week, indications of maybe activity akin to what led up to the great financial crisis. What are you hearing? Are people talking about it in that way, or what?
I mean, I think people are definitely saying it's different this time. Obviously, we heard that the last time.
Oh,
so
James!
We're more.
Are you allowed to say that? Did they bleep that? Did they bleep that out? Did you guys bleep that out?
We're more careful this time, obviously. But yes, it does seem that balance sheets are in better shape. According to the bankers, it does seem that there is less leverage in the system. It does seem that the economy is doing okay, but it doesn't take much to rattle confidence and to money to flow out.
Okay, so rattling confidence, I'm glad you said that, because do we see, and when you talked contagion, you talked about some of the exposure, but do we see this rippling further into equity markets and actually seeing, look, nobody can make this prediction here and know, but is that a risk here?
It's possible. I mean, private markets, you can't see them. You fear what you can't see. there is a chance of this feeding on itself and other things being sucked into it. There are definitely going to be buyers. We've seen Boas Weinstein come in with a bid for 65 cents for some of the Blue Owl assets. So he also said the whole thing was falling apart. If he really thought that, he wouldn't be bidding 65. But there are going to be buyers at certain levels. I think the overall assumption around credit for some time has been that it is mispriced. It needs a shakeout, but there are buyers at the right price.
James Crombie, senior editor credit for Bloomberg News, joining us here in the Bloomberg Interactive Brokers studio.
All right. We know we'll be coming back, certainly, to you again. Hey, listen, for everything when it comes to what you need to know for the financial markets, what happened in the past week, what's coming, be sure to check out our weekend show starting this weekend.
Yeah, 7 a.m. Bloomberg This Weekend. David Gura, Christina Ruffini, Lisa Mateo. They're bringing you unique conversations, in-depth interviews. Bloomberg TV, Bloomberg Radio, 7 a.m. Saturday, Sunday.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We have closed the books on the trading month of February. It is on to March, but do want to begin with a number of developing stories, headlines that we are reporting here at Bloomberg. President Trump directing U.S. government agencies to stop using Anthropic's products due to a feud over safeguards on its technology. The president announcing a 6-month phase-out period for agencies using Anthropic's products, including the Defense Department. SpaceX weighing a confidential IPO filing as soon as March. Stocks did move lower today with the Dow, the S&P, NASDAQ all declining. Traders shunned riskier corners of the market. Stocks falling on geopolitical concerns. Today we saw the S&P 500 index slumping 29 points, down 0.4%. Wrapping up the week, a losing week, heading into the weekend at 68.78. Stay tuned with Bloomberg right through the weekend for any and all geopolitical developments, especially as we kick off our new weekend show tomorrow morning. We've got the Dow lower by 521 points today, down 1%. NASDAQ down 210, a drop there of 0.9%. So bottom line here, the Dow, the S&P, NASDAQ all lower today. Bitcoin particularly hard hit today. Bitcoin declined by 2.6%. Dell Technologies shares surged today after the company gave an outlook for sales of its artificial intelligence servers that exceeded estimates. Dell was up 21.9%. Now, CoreWeave also reported earnings last night. It's an operator of AI data centers. CoreWeave shares plunged today by 18.5%. Again, recapping, S&P 500 index lower today by 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellett. Carol and Tim, that's a Bloomberg Business Flash.
Hey, Charlie, thanks for that. Appreciate it. Well, former President Bill Clinton delivered a sweeping denial of any knowledge of Jeffrey Epstein's crimes as he began closed-door testimony Friday before a House committee investigating the disgraced financier's political connections. It does come after yesterday. That was when former U.S. Secretary of State Hillary Clinton said she denied any association with Epstein. This was during a, quote, repetitive, hours-long deposition before congressional investigators. The former Secretary of State was deposed behind closed doors. She spoke to reporters after.
I don't know how many times I had to say I did not know Jeffrey Epstein. I never went to his island. I never went to his homes. I never went to his offices. So it's on the record numerous times.
That was former Secretary of State Hillary Clinton speaking to reporters yesterday after she was deposed behind closed doors. I want to bring in Jason Leopold. He's Bloomberg News senior investigative reporter. He's author of the FOIA Files newsletter. It comes out each Friday. You can read it and subscribe on the Bloomberg terminal or by going to bloomberg.com/newsletters. Jason also hosts the podcast Disclosure. Jason, the latest with the Epstein files, with the Clintons, many would say finally being speaking more publicly about them.
Yeah.
How does this change the conversation about the information that we know with regard to Jeffrey Epstein?
So I think it's important first to just let everyone know that, you know, neither Bill Clinton nor Hillary Clinton have been accused of a crime. And much of the discussion, you know, that has gone on over the years about the Clintons and Jeffrey Epstein has been about what did they know and when did they know it. And we know that Bill Clinton traveled on Epstein's jet about 16 times. There is a very clear link between Ghislaine Maxwell and the Clinton Global Initiative. As well as one-time Clinton aide Doug Band. So there's a lot out there, you know, that went on over the years where money exchanged hands, gifts were exchanged, not directly with Bill or Hillary Clinton, but there is that relationship there. And then from the files, there's also pictures, right? There's pictures of Bill Clinton and Jeffrey Epstein. So their response, what we know thus far about you know, what they testified to, won't, you know, put to rest any of those questions, because it comes down to, you know, from the clip you just played, Hillary Clinton saying, don't know Jeffrey Epstein, and Bill Clinton saying, I knew nothing of Jeffrey Epstein's crimes. and I did nothing wrong. So, there's going to be still some time that we're going to need to see what that, what the other questions were. What other details were discussed? Was money discussed? Was a Clinton Global Initiative discussed? I mentioned Doug Band. We reported last year in our Epstein series. He was a Clinton aide who went on to work with Bill and Hillary Clinton, Bill Clinton with the Clinton Global Initiative. He was it appears that they got Jeffrey Epstein and Ghislaine Maxwell got a watch for him, a very expensive watch. So those are some of the more detailed questions about money, relationships, travel. That's what we're going to need to wait for.
Right, and we know Hillary Clinton talked about Ghislaine Maxwell coming to her daughter Chelsea Clinton's wedding only as a guest of someone else. It's kind of interesting. I think what was also interesting, and I'm curious how you read this, Jason. Hillary Clinton was kind of defiant in her statement and just said, I don't know why you're talking to me. Maybe you should be talking to President Trump. Maybe you should be talking to Melania Trump. As we know, there are pictures of both Donald Trump, Melania Trump with Jeffrey Epstein and Ghislaine Maxwell. So was some...
There's also pictures of... I'm sorry to interrupt you, Carol, but there's also pictures of, I believe they're all, together at some point. Not all four of them, Bill Clinton and Hillary Clinton and, Donald, Melania. But there are similar pictures like that as well.
All right. So it's been an interesting week, right? We had somebody, the head of Davos, stepping down as there was stories about Jeffrey Epstein and Davos and his connections. We have had members of Congress calling for the president to be looked into and those missing files. Just clarify for me too, there's a lot of stuff. Didn't even some photos come out and then get pulled again? What?
Yeah, that's happening fairly regularly, by the way.
Why?
Well, it's complicated. You're going to get, depending on who you will speak with, you'll get different answers. So first and foremost, when they released these files, they seem to have known that, there would likely be information that they didn't redact, information, pertaining to victims that was not redacted or not withheld. And there's an email established on the website that says, if there's any information here, or if you're a victim, send us an email, and we'll remove it. So in terms of why it's being removed, the answer, that I've received has always been, it's about, there's information related to victims. But it's hard to sort of understand that being the justification for everything that has disappeared and reappeared. Let me give you one example. Banks filed suspicious activity reports on Jeffrey Epstein over the years. And these suspicious activity reports went to an agency within the Treasury Department called the Financial Crimes Enforcement Network. So those SARs were available that would show what the suspicious activity was, what the potential or alleged financial crime was. Those were available. They were removed. They have since been reposted, but entirely redacted with the exception of a header, right? That says FinCEN. So you can't really justify saying that meaning, the DOJ, that relates to, a victim, because it was discussing Jeffrey Epstein's accounts. So there's lots of different reasons, but not one that actually, really makes sense as it relates to all the different records.
It raises the question, Jason, as somebody who's been deep into FOIA files for decades at this point, is there a pathway to get some of that unredacted? Is there a way for a a judge or some sort of body to weigh in and say, hey, government, you have to redact this because it is clearly not related to what the redactions were supposed to relate to?
Yeah. So there, just as far as some of the files that have been removed, the judge who has been, presiding over the case against Maxwell and Epstein, I believe, has already said he will hear arguments or hear information from members of Congress who have had questions about, what's being removed, and that comes on the heels of, the FBI interview summaries as it related to the allegations against Donald Trump. Separate from that, there is an ongoing FOIA lawsuit that started way back in 2017 for the same records, for all of the FBI and DOJ's Epstein records, that is still working its way through the courts. It's at the Second Circuit now. There was an appeal. And so that actually may be a path toward getting, additional information. Or, at the very least, an explanation as to why the material has been redacted and why the material, has just been removed. Because that's what we really don't have at this point, is an understanding of what is redacted and what's the reason behind it. So, for example, does it relate to an ongoing, law enforcement investigation? Does it relate to privacy? Does it relate to attorney-client privilege? These are historically the reasons or the justifications that the all government agencies would provide if they were releasing similar documents under the Freedom of Information Act. But we're left guessing at this point.
I want to be careful. I've started playing, as Tim knows, I'll be like, I've been searching the Epstein files. Like, it's kind of crazy. Like, you can come across something and...
Yeah, watch out, Jason.
Even though it feels... I know, I want you to come back here.
You can find, Carol. Let me know.
But even though it feels uncomfortable, you're like, it doesn't mean it's a truth or reality. When it comes to President Trump, material missing, and forgive me, Jason, I've only saved about 40 seconds. Does it feel like there are questions to be answered?
Yes. They're definitely. It feels like there is material missing. I think that we do know that there is some material missing, and that's what members of Congress are trying to force DOJ to release.
All right, going to leave it there. That's why we're going to be talking to you forever. Jason, so appreciate it. And we should point out, I know the president was recently, I think, asked about it and basically has said, that I can't remember the words, but just everything's been cleared or whatever. So we continue to track all of this. Jason Leopold, thank you so much. Senior investigative reporter, author of the FOIA Files newsletter.
His newsletter this week is actually not related to Epstein.
Because he does do a lot of other stuff, which is fascinating as well. And check out his podcast Disclosure. You can find it wherever you get your podcasts. Yeah, we got more to come.
Anthropic next.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Paramount Skydance makes it official moments ago, saying it entered a definitive merger agreement to acquire Warner Brothers Discovery. Today we had shares of Paramount Skydance up by 20.8%. Warner Brothers Discovery down 2.2%. Meanwhile, Netflix investors are cheering as Netflix walks away. Netflix today up by 13.8%. A down day for the Dow, the S&P, NASDAQ down week, down month as we move on to the trading month of March. S&P today down 30, wrapping up the week at 68.78, down 0.4%. Dow Industrials down 521, drop there of 1%. NASDAQ down 210 for the NASDAQ Composite Index, down 0.9%. The Russell 2000 Index of small cap shares lower today by 1.6%. The 10-year under 4%, 3.94% now, with the 2-year 3.38%. Gold up $90 the ounce, up 1.7%, 52.74 the ounce. And West Texas Intermediate crude amid geopolitical turmoil up 3.4%, 67.41 the ounce. And Bitcoin now at 65,620, down 2.7%. A Bloomberg exclusive as we launch Bloomberg this weekend. Tomorrow morning we sat down with House Minority Leader Hakeem Jeffries in a wide-ranging conversation. He spoke with Bloomberg's David Gurr and Christina Ruffini. They discussed the Middle East conflict.
And the last thing we need is another failed foreign forever war, which certainly would be the outcome if Donald Trump decides to get us entangled in Iran and the Middle East.
And you can watch the entire interview tomorrow morning on our new show, Bloomberg This Weekend. Catch it on Bloomberg TV, radio, and the Bloomberg Business app, Saturdays and Sundays beginning at 7 a.m. New York time. Again, recapping, stocks lower, S&P down 30, drop there of 0.4% with a 10-year 3.94%. I'm Charlie Pellet, Carol and Tim. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. President Trump directed U.S. government agencies to stop using Anthropic's products, capping a feud between the AI giant and the Pentagon over safeguards on its technology. The president said before 4 o'clock today,
right,
there would be a 6-month, quote, phase-out period for agencies, including the Defense Department, that are using Anthropic's products. I thought, and we're going to bring up his tweet in a second. Here it is. The left, Truth Social, not a tweet, I'm sorry. The left-wing nut jobs at Anthropic have made a disastrous mistake trying to strong-arm the Department of War and force them to obey their terms of service instead of our Constitution. Their selfishness is putting American lives at risk.
Meantime, we've also seen, according to Axios, saying that Anthropic and the Pentagon are still negotiating a deal is still possible.
Axios
was
reported that
after the president's post on social. Axios reporter citing a source on Anthropic and Pentagon in an X post. So I don't know. Clock ticking, though, here.
Well, fortunately, we got Katrina Manson back with us. She's Bloomberg News reporter who covers tech and national security. She's also the author of the forthcoming book, Project Maven, a Marine colonel, his team in the dawn of AI warfare. The book comes out next month, but you can pre-order it now. She joins us from New York. Katrina, congratulations on the book. I'm looking forward to reading it. I know it's been a long project, but it's totally related to exactly what you have been reporting on in recent weeks and sharing with us on our program. The back and forth that Carol and I just had, where is this Anthropic Pentagon relationship right now?
Well, it's very significant that the president's weighed in and called this directive. But of course, you're quite right to say that to indicate this is the man who knows the art of the deal, and things are going to keep going. Unraveling Anthropic over the course of 6 months will be extremely complicated. They're in the tech stack, they're in the intelligence community, they are used in combat operations on Maven's smart system, which is a Palantir system. It's not impossible to replace them. And of course, the president is suggesting a 6-month phase out. And even Anthropic, when they gave their very strong statement yesterday, said, we will help if the choice is to remove us. We will make sure that transition is smooth. And then you've got now Warner calling in from the Senate Intelligence Committee, suggesting this is a politicized attack. And of course, the president did call them left-wing nut jobs. So he is concerned that this is not really a debate about the future of war, but a jostling for position over which company gets what. And if the Axios report is correct, I don't have separate reporting to that, then this could be still part of that process. Hegseth, of course, the Secretary of War or Defense, had given us until 5:01. So we'll also still be waiting to see if the Defense Department wants to weigh in.
You know, I think about national security with all of this stuff, AI, you name it, you know, raw materials, everything. And I just think about if this comes undone, is that a loss for national security for the United States?
It's quite hard to work out the ways in which the US military machine is dependent on AI at the moment. Well, that's what I've been trying to do in this book, honestly. And it has threaded through. Of course, LLMs and agentic AI, this is something that is being rapidly adopted, but also really, really unknown and unreliable in many cases. So the military and the intelligence community, both of them in terms of national security, have been experimenting from pretty early on after that first moment when ChatGPT was launched back in, when was that, November 2023? Yeah. And they have started really trying to develop their own systems. Obviously, Anthropic is the interesting one because they're on the classified cloud. They found a way to do it, and they were threaded through a number of systems, mostly helping things run faster. If you imagine an enterprise service, but just happening in a classified way, really trying to draw on data points and make things go swifter, quicker, connect things, smash through bureaucracy. In that sense, that could slow national security down. But of course, the thing they said that they were worried about wasn't politics. It was autonomy. They didn't want their tools being involved in autonomous warfare because they're not ready. And we were increasingly beginning to hear from military leaders, not just the campaigners who you would expect to have a problem with this, like Stop Killer Robots, but actually the former leader, the former director of Project Maven, Jack Shanahan, who's a retired 3-star general, said, look, LLMs are not ready for prime time. He put that post out yesterday and just said this technology isn't ready yet, which is very much in line with what Anthropic had been saying.
I want to go back to the Axios. We have a little bit of a fuller read through on this. Anthropic and the Pentagon still negotiating ahead of the Pentagon's 5:01 p.m. ET deadline to reach a deal, citing a source familiar. Axios goes to declare Anthropic a supply chain risk. This 5:01 deadline, might it, Katrina, be extended? Where did this deadline come from?
Like a TikTok deadline in the past?
You know, deadlines can move.
Yeah.
I mean, so much of this is performative, isn't it? We've seen a lot of very loud public statements. As we actually have learned, the disagreement on paper comes down to the term as appropriate. There have been letters going backwards and forwards, so we've been told that are about whether human judgment will be used over the use of force in an autonomous situation. And we had Emil Michael talking to Bloomberg TV, much more cool-headed than he was last night. Last night he was calling Dario Amodei a liar and saying he had a God complex. This morning with Bloomberg, he was saying, look, talks are carrying on. So I think, of course, this is a negotiation. They've acknowledged, I think, in multiple ways that they're really dependent on Claude and that Claude is really good and they want to keep using it. Claude doesn't want to be involved in autonomy. And I was learning, of course, that if the department pushes ahead with autonomy in the way it wants to do, it could be quite hard to have one system that allows autonomy and another system that doesn't touch autonomy that Claude would be on. So they do need to work out exactly what their red lines are, even if they're coming to a much softer accommodation behind closed doors now. But, you know, with the president weighing in and with Hegseth maintaining this position, there's no reason to think they will reach a deal at 5:01.
So, Katrina, just in the last 20 seconds that we have with you, when I was on my way home yesterday, this crossed. It was just minutes after you were on our program talking about it, but it said, it was this post from Anthropic's Dario Amodei saying that the company cannot accede to the Department of Defense. Did you learn anything, just in 30 seconds, did you learn anything new in that post last night?
Yeah, I've got it right in front of me, actually. I thought there was a very interesting part of it, just a detail to pick out, which is we've offered to work directly with the Department of War on R&D to improve the reliability of these systems, but they have not accepted this offer. I thought that was very interesting. They are saying, we want to help you use this wild technology in a reliable way and help us help you.
Which is similar to what the Undersecretary of Defense said earlier this morning. Go to a dinner party, you want to sit to somebody You want to sit next to somebody like Katrina. I'm just going to put that out there.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
Here's the deal, Carol.
First of all,
These are microphones, okay?
How many years I've been doing this?
And
People
what
have
we
always
say,
never say anything in front of a mic, even if you think the mics are off. But of course, I got a good night's sleep. It's Friday. That's, that combination makes me a little crazy.
Love it.
And it's been a great, can I just tell you, if you missed any of this, find our podcast feed, because the conversations about so many of the different tugs and pulls on the market right now, and just kind of in the narrative. We covered it from private credit to the AI spend to block to hot inflation print, and yet yields are lower. It's all here.
Well, let's talk more about those markets, because at least on the day today, the S&P fell 0.4%. The NASDAQ Composite down 0.9%. Not their worst levels of the day. For the week, though, down 1.31% for the Dow, down 0.4% for the S&P. The NASDAQ down about 1%. Do you have it pulled up, Carol?
Yep. For the month overall, the S&P 500 down about 0.9%. And if I go on over to the NASDAQ 100, why did I do that? I meant to do index, but I'm a little slow. And the NASDAQ 100 for the month overall, down 2.3%.
I'm Tim Stenovec, along with Carol Massar. Let's take a look at some stocks on the move this week. We're joined by Bloomberg News equities
Did
reporter.
you have a question
Avalon
mark at the
Purnell.
end of that? Hi, Tim. I'm Carol. Have you met me? Oh, we don't do this because of
germs.
Yeah. We try to be careful.
Because Carol doesn't have any hands. We don't have any hand sanitizer here.
I'm not a believer in sanitizer. I do believe in vaccines, though.
We are This is about to be our last show if it keeps going at this rate.
Lock
Let's
the
try this
doors.
again.
Don't let them in.
Let's try this again.
Okay.
I'm Tim Stanovic, along with Carol Masser. Let's take a look at some stocks on the move this week. We're joined by Bloomberg News equities reporter Avalon Purnell. Save us, please, Avalon.
She's like, these two are crazy.
It's hard to talk about stocks of the week without starting with NVIDIA, ticker NVDA.
I almost forgot that this was a big week for NVIDIA. Like, it's just been so crazy, but go ahead.
I mean, there's definitely plenty going on, and they're quite responsible in terms of why the broader market today was slightly down. Since NVIDIA closed down this week 6.7%, that's the stock's biggest weekly drop since November, which, if you remember, is also when they gave their third quarter earnings. And it's a fairly similar story of, despite a beat and raise, investors still have a ton of question marks about how much longer can this go.
I know. And everybody, like, I feel like everybody who came on was like, what an incredible quarter, right? Robert Schiffman
from our Bloomberg intelligence team. He's like, this is a record-setting beat and raise.
Yeah, like for any company.
On Wall Street.
Yeah, in terms of an earnings report. So, and he follows the credit. So he looks at the debt market, but he's been looking at this AI spend. That's a good one. Netflix.
Yes, Netflix, ticker NFLX. That stock closed up 22% this week for its best week since 2022. And it's kind of a funny reason for it, considering they declined to even consider the 4-day period to beat Paramount Skydance's offer for Warner Brothers. They decided to bow out, and Bernstein actually said that they see it as a win-win-win outcome for all three. They mentioned how potentially this is actually a really great opportunity for Netflix to look elsewhere to fix their engagement issues, and Benchmark agreed as well. They said that Netflix was willing to spend, and potentially they're going to be able to spend elsewhere. So
Stock up
we'll see.
22% this week.
And you walk away with a $2.8 billion breakup fee. Thank you very much.
Wouldn't it be nice to have a breakup fee in life?
Well, so
Listen,
call that a prenup.
Things aren't working out. Things aren't working out.
For a man or a woman,
Here's
prenup.
$2.8 billion.
It can happen.
But look at, I just love looking at the investor reaction to this, because the stock has been under pressure since Netflix said we're going to go for this.
I know.
In the fall. Investors didn't want to see him spend this money. Investors are happy they didn't do it. And now Netflix has $2.8 billion more thanks to Paramount Skydance.
And Paramount Sky and Netflix both rallying in the Friday trade, but Netflix really way out performance. Let's go on over to Novo Nordisk.
Yeah, it's been another rough year, one could say, for Novo Nordisk. Its ADRs closed down 21% this week. And that's actually its steepest weekly slump since August, which I actually think, more importantly, it's actually erased all of its gains from the last Wegovy-fueled jump. And so, to say the least, earlier this week...
It's a rough chart this week.
It's a pretty rough chart. Earlier this week, Novo said that it planned to slash the U.S. prices for its obesity drugs, and that reignited fears about this race to the bottom. And yeah, investors aren't really happy, to say the least. They've fallen quite a bit from their peak in 2024. And I kind of liked what one analyst mentioned, that Novo is now at this point reliant on its pills.
Yeah.
And Eli Lilly is potentially going to have their pills later this spring. So,
as our Madison Muller, who's been covering this GLP-1 space from the get-go a few years ago, just said, you know, it's hard. Novo kind of created this space, right? Was out of the gate. It was incredible for them, but then to see them struggle kind of, it's been a very different story around them. Big story this week.
The most terrifying one for last. Thank you.
Tim will not be sleeping this week. He won't be sleeping for the rest of his life because of this one.
oh yeah, I saved Block for last. That's ticker XYZ, which is kind of a fun ticker. It surged up 20% this week. That's its best week since 2024, after the fintech said yesterday that it plans to reduce its workforce by nearly half in another big bet on AI. And I think it's kind of interesting that it did report a fairly strong fourth quarter. However, I mean, everybody's focused on this question about what's going to happen next. What does this mean for other tech companies? He even kind of alluded to it in the shareholder letter of he doesn't expect to be the only company doing this. So who's next?
I still go back to who buys the stuff if the people aren't working. But I don't want to end the program like that, Carol.
I was happy.
Sorry. Try to get some sleep tonight. Avalon. Thanks for joining us. Avalon Purnell, Bloomberg News Equities Reporters. For more conversation like this, check out our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market.
Have a good and safe weekend. Check out This Weekend on Bloomberg, 7 a.m. Wall Street time, Saturday and Sunday. This is it.